Trader, round up everybody. Yeah! Can you hear la música? No, escuchen la música. All right. Well, I can't ever tell if the music works or not. But welcome everybody to another Trader Roundup. It's your boy Kit hanging out. What a day! Patience paid the trader today. It was one of those days. Had a really strong read on the market this whole week. If any of you tapped in with the live stream, you'll know what I was looking for. Even today, this morning, I really enjoy coming to the market, at least giving some type of expectation. And my read's been pretty good. So, like even today, I was thinking, even if we were going to get a bullish, it was going to be after about an hour and a half of them trying to induce shorts, right? And it wasn't, I mean, it was some consolidation. It wasn't really, it was kind of both sides, really, I guess, but it was such a tight range. Anyway, hey, Dom, dude, what's going on, bro?
What's up, kid?
Bro, you were in the live stream a little bit. What were your thoughts? I'm not trying to toot my own horn, but I thought I was kind of in sync this week.
No, it's great, man. It's my favorite thing to do, riding into work, man. I hop on there and like I said, it's like calling into the radio station back in the day. Talk to you on the phone like I'm calling in, but
Yeah,
I,
dude.
I enjoy your analysis, man. I know a little bit about how you see price and you see it through many lenses, man. So it's always something to see what you're looking at.
Well, dude, the crazy part is like I've got algorithms now that are really like helping me with my analysis, right? Like I literally, I'm not kidding you. I have like almost 600 engines that are kind of like running some form of analysis, creating some layer of something. So I like run it real quick. It's like a software, and then it's really helping me with just my read with what I'm seeing. Like so. Anyway, it's just it's
Great.
awesome.
That's great. Yeah, that's cool. But was it a green week this week? How'd you do with the?
Yeah. I mean,
Yeah.
it was a great week. It was a great week. Didn't take a ton of trades, but like even today, like earlier, even in the live stream, it was a compressed range. I knew we had to wait. I wanted to wait until 10:30, knowing when you get to 10:30, there's a real good chance you might end up getting straight to noon. And if you get to noon, there's a decent chance you're going to get to 13:30, right? So if you're not seeing the sweeps or the higher highs or the lower lows that you really want to see within price, which is how I analyze it, then you just kind of wait for key times. And I mean, I knew that 13:30 was going to be the time. So yeah, dude, that was pretty much it. I was looking for the rocket ship off of 13:30 to actually get the bullish squeeze that I'd been anticipating, just in a rebalance, right, bro? All has been is it's all just a rebalance from the dump. So and Fridays love to do that, right? Like we did it last Friday. I mean,
Yeah, driving in. I know you were saying you were looking for lower prices, and you got that shit for sure.
fool
But
boy, dude, I said October 10th lows. What did we take?
yeah, I thought about you right when I seen it get taken. I was like, I know he's feeling good right now. This morning, I was doing the
Dude,
war game.
one beaner on that. One beaner on that was over 3,000 plus ticks. I
What
don't know if
it
you
would
can
have
do the
been.
math on that, but that's
Yeah,
it's not bad. It's not a bad little it's not a bad little ditty.
yeah.
Anticipating
Started
that
out.
move.
Things started out like I was expecting today, but they finished much different. We'll say that. We did the little war gaming session today, with the daily profiler, putting in where we think the highs and lows of the day are going to be with the false or true long, true short, true false. So, the four different
Oh
options.
yeah, dude. I mean, you had a rate. You had a real strong range contraction early, which wasn't giving you clear signs on either way. And I mean, it didn't help when New York. I mean, when you set the liquidity early in that 8:15 high set, and it didn't get touched until the 9:50 macro. So all you did was just sit there and circle jerk and do nothing. It was kind of crazy.
Yeah, it was all making sense till about 11 o'clock, man. I wasn't really expect. I knew we would get some retracement on the weekly candle, but it was a little more than I was thinking, to be honest.
When you say retracement, what do you mean? Do you mean like the bullish squeeze that you got in the PM?
Well, just on the weekly candle, how much we came up from the low of the week.
Ah, okay.
We get that much there, you know what I mean? We're like 40 some percent back on the week. That was a little bit of a
I
surprise.
mean, for the record, the month to me looks like I mean, now that they have face fucked all the bulls within the market and taken all of their orders, I could see us getting back to monthly open. You got 9 days. It's kind of far up. I mean, I know everyone likes to be a bear. I was definitely a bear for the 4% drop.
I
So
like to be a bear. I like to be a bear. It seems like everyone else wants to talk about it going up, but you know.
no, I mean, there's a time that it goes up and a time that it goes down. It's down in 2 more weeks, but they've got to resell this dump, right? They
Yeah.
just took. It was a 4% drop. It was a 7% drop from highs, and you really gotta.
I'm seeing 23,000, man. That's
No, we got gaps at 26, so I think they'll push it up to 26 and really try and get a buy-in back up to 26. Not all time, but we have
right.
inefficiencies at 26,
Yeah.
and
Well,
I
what about
mean,
we're talking about gaps? What 20,900? We got a fucking what is that, a weekly new week opening gap down there that's like 150 candles
here's
high.
the
We
thing:
never even went
we're
in
in
it.
a bearish month. That's the thing. We're in a
Yeah.
bearish month, and that's been pretty clear. It's been pretty clear this entire month, right? It's been pretty
Yeah.
clear. So
Feel
the
pretty
lower
far away
pricing
from
We're
has
hitting
been
all
in.
time high. We're hitting all time highs on Friday. I'm
nah.
calling it right now.
Dude, I think we're going higher. I think we're going higher. I wanted to see us drop to the October lows. Now that we swept those lows, going back into the range, I don't think we go all the way to highs personally. Again, I think we go back up to around 70% of that range, which will put you from the October 10th low to the all-time highs. I don't actually want to act like I know, because I
Yeah,
don't.
I was
Well,
joking
let
anyway.
me let me approximate that. Let me
I'm
put
gonna
on my
tell you
glasses
where it's
here.
coming.
I'm going to approximate exactly where we're Fibonacci at here. Explain. I don't fucking know.
I
Anyway.
tell Price where it goes, right? And that what the man said.
No, well, there are levels of Fibonacci that are pretty interesting within price, right? There just are levels. 61.8 is a pretty good level, right? It just is. 75, 25, those are just pretty good levels. You can anticipate specific pivots within price, and that works out with time too. So it's pretty easy to kind of figure out quarters within lumps of time. So I think it's a great way to kind of visualize and think about the market when you're looking for swing highs and lows. So, but to me, there's a lot more to the market than just simply swing highs and lows, right? And that's what kind of makes the algorithmic part of your brain or my brain work, right? There's levels of OHLC, and there's levels of upward and downward modeling, and where and how you can compose and predict where those models are going to go. It's just, to me, fascinating, right? Like, the weekly and the monthly and the quarterly are elements within the market, and the more you kind of zoom out, the more it helps you get in sync with what you're looking for. So
Yeah, zooming out.
I was in sync all week with that move on Thursday. So it felt really good to anticipate the bullish squeeze at the open on Wednesday, I believe, or Tuesday. It's been a great week, bro. Really, really has. Uh, I can say I was cautious. I didn't take as many trades, but the trades I took were good trades. So I saw a lot of trades. Like today was a great. I'm like, here's a trade, here's a short. When that 815 swept, that 820 high swept, I'm like, this is your trade. Like, this is the trade, right? The short is in, and when we swept that at 950, if you're looking for a trade at 950, I wanted longs, but we were taking buy side. So it was very clear, and I said that. It was like, well, 815 high, 820 high, that's a pre-market liquidity point that's engineered and left. So when they turn on, when the market starts at 930, participants, they're going to go where they want to see the market go. And the 815, the 9 a.m. price, those are 2 points of liquidity before 930 that just kind of create structure. Right. And you can be like, well, how do you know? Well, because I back tested it. You can do the same. How about that? So that 820 swing high that was taken at 950 was an engineered high, and then how it came down in a compression, it was selling. It was selling the idea that the market was going to go lower, so that the bullish squeeze that was going to come in the PM could face fuck the bears. They got any of the extra bears into the trade, right? Institutionally, not just you or me, like legitimate folks that are moving the market.
Yeah,
So
the entire Asian range or overnight range was inside that, like everything.
right.
So so you really think they really could accumulated, all night, like, and then have that volatility to be able to, like you said, man, suck people short because it could have happened, right?
Oh,
I mean,
well, I look at things on again Friday. You see reversions after long, hard dumps like that on a Thursday. We're literally playing last week. If you look at Thursday and Friday of last week, what happened is exactly. I mean, I said it, and I was like, I don't think we're gonna get that 9 a.m. fucking squeeze, 9:30 squeeze that we got last Friday. You're gonna get them. They're gonna want to induce more bearish order flow. They're gonna try and get folks convinced that this is gonna go lower.
I'm just saying,
So
when's the last time you've seen 7 bullish monthly candles in a row? This will be the first one that's bearish. I think they got one more in the chamber for it. I know it might be a simplified.
I mean, bro, I was even coming like what price is monthly open? Because it's up there at 25, 26. I don't know.
Yeah,
I see us within the next 9 days. I see them restructuring higher now that they've taken the October 10th low. For me, the October 10th low, that order block that formed, you could put standard deviations on that. I've done it in my live stream many times. Like the whole market was built on the quarters on, I put it on a 7 hour or an 11 hour. You can put it on the 4 hour, right? But like you could really see a clean 4 standards off of a 7 hour OB that would literally printed 50%. When we got the dip on Tuesday, we literally broke the 50% of that OB on Tuesday. And as soon as we did, it was gonna be a bullish inducement, which means the entire week is a bullish inducement so that they can come and storm back down on that October 10th, which is exactly what happened. So I'm just kind of proud because I'd said this at the very early on in the week, right? Like I nailed the weekly profile, which feels really good because you get multiple days kind of in sync, you know?
Dominic,
yeah.
That what you just said about the monthly chart, is like something real interesting about that is all of those 7 green candles, they're not only green, but each low take the low before the previous month.
So
So
they're higher lows.
well, they're not only higher low. Yes, they're higher lows, right? But when they're consecutive like that, right? That's obviously very, very bullish because higher highs and higher lows. But you can have that, and you can have them like, take a previous month and then shoot up. Like you'll see that as we
I
get
mean, if you were to create a trend score, which algorithmically kind of scoring the market, having specific
yeah.
components, and you might not hit all of the components, but you might hit some of the components, and then some of those components might be more weighted than others. Anyway, you're making a very good point towards a trend classification that has a high weight of trend, right?
Yeah, and so well, my point was, so this was the first month in the last 7 months that we took a previous monthly low, right?
Right.
So that's just an interesting area, and now we watch because what's going to happen after that is do they use that as like an area to buy and then push higher, creating kind of like an order block, or now do we see possible consolidation sideways or even start to
We'll,
like
we'll,
apex? We're putting in the top,
Just my thoughts are 2 cents. We'll get a lower high pushed back up into this range. Again, if all you got to do is look at put standard deviations on the OB on October 10th range, that's the entire market has been on that order block and the standard deviations therein. And we're retracing back into that range. So it's all a very measured move. So if you create a
Absolutely.
higher low, within this bullish retracement that we're in, then all you're gonna do is then come create lower lows. So the bearish print that we're in on the monthly right now has a continuation of more than 1 month as it's printing right now. But our balance point's still bullish. So the
Yeah,
point
we need to
is
see the
they
high.
they will from a psychological standpoint, I believe. This is my 2 cents. I have fucking no clue, right? I'm talking out my ass, right? We're all speculators. But I believe that we create a higher low in that October 10th order block for standard projection range higher that we've been in. And that higher low then would create a lower low from where we're at right now. And I believe we'd get that probably in about 2 weeks. So we're looking about a week swing high, 4 or 5 days within bullish price action, probably aggressive squeeze, trying to induce buyers again to really get them involved back into the market just so they can get face fucked, just like this week.
Yeah, if we close below last month's open, I think we're gonna keep going down for another few
Well,
months.
that's why in the last 9 days we're on the 21st, right? 21st, 21's a good pivot, right? It's
Mhm.
so I mean, so 21's a good day to pivot, and what you have to do is look for the monthly open. So when you go from a swing low, where you the next point within your range that you're going to create common sense is where are you at within your monthly. You just took monthly lows, you took daily lows, you came down to weekly levels, and where are you at in relationship to that monthly range? Because after your
We're about 25% from the bottom of the month right now. I'm sitting here looking at it.
so in my opinion, the OHLC matters. So the open of the month is going to matter. The high of the month is going to matter. The highest O close candle is going to matter. The lowest down close candle is going to matter, right? So there's an OC
Have you
box, an
noticed?
IDR box, and an IDR box and a DR box. Sorry, go ahead.
Have you noticed that the size of the daily candles has been increasing lately? Like like the
Oh
volatility
yeah,
just
dude. Oh
keeps
yeah. I
expanding.
mean, we're in some. I mean, these bearish. I mean, bro, November has been pretty violent to the downside. I mean, just saying, it's been pretty. I mean, you get these bullish impulses that just absolutely get destroyed. And it just seems to be this recurring pattern. And if you have a bull hold and let it run through their stop, thinking that it's going to recover, that bull literally gets thrown underwater,
Oh,
smashed, and destroyed
bro,
by the bear. And
bro, it
it's
is
just a continual, my point is it's every single time you hit the buy button, the bears are pummeling the bulls. It's a fractal pattern you can see in this entire month. That's all I'm
it's
saying, bro.
it's the robbery. Yeah, this was like the great margin robbery of 2025, like part
This is a
4.
bull torture. This is literally an algo that tortures the bull. That's what it is. As the bears come storming in, they torture the bull. And they let the bull think that they're winning with these squeezes, and they let the institutions come in and buy and push price higher just to get face fucked. This is like just completely destroyed. It's I felt bad for bulls, honestly. I mean, I was very much all week and for a while now. I think we're gonna have a very similar failure squeeze up within this range. But I mean, if we take all-time highs, then I'm wrong. But if some limitation and there's a failure swing there, then I would think then we would be coming back down here with some force. That's all.
It's only like 2,000 points on
That's yeah, and dude, we're hitting 600 in a day, so that's not
I'm
really
saying,
much. That's like we're talking about a weekly profile right now, right?
like one night in Asia can do half of that. Like one
No
quiet,
shit, dude.
you know.
Dude, Titan's got his hand up. What's up, Titans? We're we're talking a little more TA in the actual market than we are of some of the other things we talk about typically, but that's okay. Titans, are you there, bro? Alex is here. Titans, you got your hand up, and I can't hear a word you're saying, bro.
Hello, can you hear me?
Yeah, now we can hear you, bro. How you doing?
Eh, Hi, Kate. Thank you for give me chance. Uh,
Yeah,
uh,
boy.
क्या बोलूं?
Yeah,
Can you
we
give
can
me
hear you.
answer?
Do you got a question? Jump in here, buddy. Jump in. Come on. Come on.
Please, can you tell me
He's got like 10 guys behind him, like, no, ask him about a fucking order block, bro.
Yeah, I feel like I want to buy something, man. Like there's something
I
cool
know.
there.
He's like in the market. Titans, are you there? We're patiently waiting. We are, a lot more people than just you, right? So I realize, I mean, Titans. Okay,
Yes,
buddy.
I am not good in English.
Okay, that's okay. You're also not very prompt in your speaking skills. Therefore, you have lost your opportunity. Anyway, 2 chain, buddy. 2 chains, bro. Come on, getting blue balled here by all my fucking speakers. Come on now, you guys got to blue ball me, really? Oh boy, I say blue balls, and there's Sweet Rose. Oh, didn't mean it. I'm just kidding. Just kidding. Just kidding. Yeah, I know. PTFX, thank you. Okay, Alex, come on up here, buddy. Pretty please.
Whoa, good morning, good evening, guys. What's up?
How are you doing, my friend? How's your
I'm good,
week?
man. I was good. It was good week. Yeah, yeah, it was good week. I did some trades. Yeah, I got that crazy. I don't. I think it's the craziest one.
Which
Uh,
one? What was crazy?
the for the Thursday move. The after the one that
Yeah,
one
the four
after.
percenter, the 4%
Oh
move
my
was
god, that
wild.
was crazy, man. To the downside.
It's crazy.
Oh.
I mean, you heard in the live stream though. I was anticipating that move the whole time, right?
Oh yeah, because we opened up, right? We gapped up, and then I
Yeah, we
was
gapped up over 2 previous days highs, which is crazy,
yeah,
bro.
yeah.
We
That's why I
gapped
was
up
feeling. I
over
was saying,
two
what the
previous
fuck is
days
up?
highs.
So basically, what Price did is it just just bounce off from this this level here because I there was an SMT between ES and Nasdaq. So that SMT on the
Bro,
daily,
I don't know how people trade SMT. SMT is I mean, it's like wild how much SMT there is in the market.
yeah. But you saw ES doesn't didn't make a lower lows and Nasdaq didn't make the lower low.
Again, like I don't
And
I mean like if you can frame trades off of that, kudos to you. That shit confuses me. I'm just keeping it
yeah,
real.
and I know, but I try
And
to see
after
it.
hearing ICT say that it's just a confluence and it's that huge of a deal, it almost was like a breath of fresh air for me. I know some folks that like they stake their entire trade plan on SMT and it like has to happen exactly how they want to see it. And kudos to them. I got no beef against that. It's just not that for me. So it was
So
kind of a relief to hear.
yeah. No, I mean, you need to know how to use it. So
Well,
I
it's an
use
element for you in your trade, right, bro?
yeah. I mean, it's a if it's a time frame on the lower time frame and I see it, okay, I see it as a as a potential on the other pair. So it just gives me another idea. Is the price gonna continue or is gonna go move to the other way? So I'm gonna wait for.
What's your favorite high time frame? Just curious.
Well, we should drop from the monthly. I drop from the monthly to the daily, right? Because I like to see what's gonna happen next month, right? So I
Yeah,
mark
yeah.
all. I like to mark my previous day, my previous week, previous month high and lows, previous week highs and lows, previous days highs and lows. Like the look on the daily, I'm gonna go look to the IPTA data ranges and see what's gonna happen next. What's gonna be my
Okay.
zone liquidity? What price is doing? Let's say I'm marking some
Okay.
shift, stuff like that.
I like that. I like that. I
I
like
mean, the
that.
stuff from the core content, right? So,
Oh yeah, yeah, for sure. And it's also it's core content, and then it's also if I could go back in time, right? Do you
exactly.
remember that
So,
series? That's like my favorite, honestly. That's one of my favorite series.
yeah.
I pushed the playlist out, his playlist out. that I put
Yeah, yeah. I
together.
mean, it's. I mean, if you want to see stuff that working in a
I mean,
higher.
trading previous days highs and lows, previous months highs and lows, previous weeks highs and lows. And the whole premise behind the PD array matrix, like you can glaze over all of his PD arrays. He tells you that. Like he tells
Exactly.
you that. He's like, you don't have to worry about all this other stuff. You can
No.
just focus on that one single line, that one single price. How often
Exactly.
does it reverse? You know, when it gets taken, you know, if it's a bullish array, are you taking it bullishly? Are you taking it bearishly? And does it turn around to continue going higher?
Yeah.
Because
That's
I
definitely it.
mean,
Yeah.
they are strong points.
But
If you want to tell a story, my friend,
yeah.
if you want to be the author of a story and you want to know where and how price is moving, I know folks that really struggle with what bias is going to be. Like,
They
how do
do.
you know what
They
the
do.
next day is going to be? Well, the overnight session, if the overnight session is taking lows, there's a decent chance you're going to be bearish. Okay.
Yeah.
So if you have probabilities, you're going to close in a range. And, you know, you could be in the middle of a previous day. You could be, you know, you could close higher in the range, lower in the range, in the middle of the range. Where is your close in relationship to the range that just formed?
Yeah. That adds more premise to it. And
So
the
all of those things matter. And if you just look at starting with previous days, you could then incorporate more and more concepts. I can tell you personally, I'm so passionate about OHLC. Like
yeah.
I have it, people, if you watch my live streams, I got like boxes
I
galore.
watch Roulette
I
sometimes.
mean,
Yeah.
I got boxes galore, bro, because I
I
got
saw
so
all the
many
stuff
different
you got
open and
on the chart,
closes.
all that stuff, man.
I know,
I
you're
got a
like,
lot of
what the
stuff on my
fuck?
chart. I got first presented I'm holding on to for the week. I have the quadrants. I have the daily quadrants. I measure the wicks. If you
Bro, hold
measure,
up, hold up, hold up. I got a legit question for you. So do you study the first Prezi?
yeah, I'm studying. Yeah,
Okay, okay. Have you ever overlaid a fib onto the positioning of the first Prezis? Have you ever done that?
so you trying measuring? I mean, you're trying to
So
say
I'm saying you're going to take Monday through Friday, and you're
okay,
going to take the first Prezi of fill in the blank. I mean, you
okay,
could take New York. I like Asia. I like. I mean, I take a 1930 range, and then 430, and that's my 9 hour range. I talked about it today in the
okay,
live stream. I was joking around. I was kind of like thinking of music in my, but I was telling every trader that listens to any live stream, I need you to adopt a range. It needs to be
yeah,
your pet. You need to name it, your model. It can be thunder, clippity clap, vortex, trippity trap, click, click, dang, dang, diggledy doo. And that can be the name of my range. And the idea is you as a trader want to adopt a range. You need to adopt a range just like you would some poor little less fortunate. You need to adopt them. And you need a 9 hour range. You need an 8 hour range, a 7 hour range, a 6 hour range, 5 hour. I don't give a shit. It needs to be a high time frame range. Why? Because you trading back to equilibrium of that higher time frame range has a statistical probability, right? And
exactly,
then these ranges are going to form and they aren't going to be retracing back to equilibrium. So then you're going to be able to stack these previous ranges that have not had price go back to equilibrium. And then that can become a point of interest towards a trade. So that is a reversion, that is a rebalance, that is a mean reversion style trade within a high time frame. Okay. And you
yeah,
need to adopt a high time frame. And what you do, example, and I use this in my live stream, you take 1500. 1500 is a great example. And then what's 1500? You go all the way to midnight. So now I got 3 going all the way to midnight. What did I just do? I just adopted a 9 hour range, my friend. I'm going to love and care for you forever, buddy. I'm going to only trade off of you because I'm going to adopt you as mine. You're my model. You're my baby. And it can be any range you want. It doesn't matter, but you need to adopt a range. That's my point. I mean, again, 15 to 9, that's very vortexy. Very, I like the number, but it doesn't fucking matter, right? What matters, I like 7's a good number. You want to know why I like 7? It's very harmonious.
I mean,
You have a
7 is
lot
a
of
good number, man.
collective numbers that are coming together that like shine, and you got to think of 7's like a mirror, okay?
Yeah,
So
yeah.
7 is, there's an angular momentum that comes with the number 7 mathematically, okay?
Just
So
Also, the
and
3
7's
hour. I like the 3 hour.
7 fucking 3 hours, great,
I
bro. Because
heard.
you want to know why? A 3 hour and a 4 hour give you a 7 hour. And let me
Yep.
just tell you this: the world that you live in has 7 days. So whether
Exactly.
you like it or not, the world that you live in is divided into one, and there's no getting around how the fractal reality that you live in is organized into 1,440 minutes, and where and how that multiplies into a segment of 1/7 of it organized fashion of time. So anyway, 7 is a thing, which means 3s and 4s are a thing, right? 3s
Yep.
and
yeah,
4s are
and
definitely a thing.
the moon has a 30-day cycle,
Yeah, but
but
here's the
that
thing: the moon is
also
actually
the massive
counter
cycle.
the moon is
That's why
actually
7 is
counter
really, really
the
good.
current mathematical cycle that if you're referencing 7, 7's coming from your 365 and it's coming from your jubilee, and the entire organization, fractal organization, coming from a 7 is counter that of the lunar cycle, which is 13, which is the number of moon cycles there are in a year, which gives you the 169. And you're looking at a less organization within structure. And I mean that in the way of, in some sense, they say there's harmony with the moon. But then in other organizations within time, there's not. Like it's not. So,
Well,
and
clearly,
Yeah,
because
yeah,
the
yeah, yeah.
menstrual cycle is based off of it. So you want to stay away from 30-minute charts and shit like that. Is that what I'm
no,
saying?
no, no, no. Wait, what's wrong with 30-minute charts?
And I heard 7, 8, 9. Anyway, I heard 7's a bitch. I think I'm
I
just
mean,
fucking.
you can do, 7, 8, 9, you could do 19, 20, 21, and 7, 8, 9. And that's a really, those are really nice numbers that you could, again, if you got to adopt a range, if you got to think of times,
I think
then
I was messing around earlier, but I think what's in, like what you were talking about with ranges, important thing is just have a fixed constant, like back test, and they could be a couple different fixed constants. That's your range, right? Your
that's it. Yeah,
consolidation
that's what I'm
range,
saying.
your money
Adopt a
range,
range with fixed
and
constants.
don't try and
Exactly.
like don't
How
try
would you
and
do
make
that? Yeah.
it don't go into it like you're looking for the perfect range or setup or whatever. Just go into it with a fixed constant and then see what the data see what happens after you do all your back tests,
Well,
and then
here's the thing, and this is what something I want people to understand. And I've built an indicator that's free for everybody, and it utilizes the components that you would incorporate within spreadsheet trading. Okay. You can visualize literally some of the most important components that you would utilize within statistical analysis within your TA. And in the way in which the quote unquote DR indicator is formatted, the way in which the TBR macro indicator is created, what you're technically doing in the literally the columns within the spreadsheet, within the information that you're collecting in a range over time, in historical data and within statistical analysis and within mapping probabilities. I need to know an open close box. I need to know the high low box. I need to know the volumetric measure of that range being the highest open and the lowest close of that said range. By me being able to identify those three characteristics within a time-based range, I can then extrapolate a lot more information. Information that includes from the time that there's a static close to before I have a dynamic open, because that's the other part. When you have a range, you also have a break, which I refer to, or it's referred to as a confirmation candle. It's also referred to as a base candle. I refer to it as a dynamic open, but when you have a consolidation, again, an open and a close, and as long as price never leaves that consolidation, it doesn't really matter. So your point of reference or where data is collected is when that consolidation breaks. That then becomes your data candle, your confirmation candle, your dynamic open, whatever you want. If you want to be a spreadsheet trader, the way in which you would be collecting data in a spreadsheet is where and how we organize price within an indicator. So when you look at macros, you're looking at these very specific open close boxes, these volumetric boxes, which are, again, your IDR box and then your DR box. And you're looking at the relationship between how they form. The box color, the open and close matters within the 950 macro. Why? Because the 950 open is going to tell us when 1010 closes if the directional probabilities of price being bearish will continue. Because if 950 is above 1010, then I can already statistically, mathematically extrapolate with greater than 50%, upwards of 65 to 80, depending, of a directional probability based on measuring said range. How big was the range that formed the open and the close? What did it form, higher or lower? And then what did it do in relationship to previous ranges that I'm measuring the exact same thing? And again, that's just one way of collecting data. I'm very fortunate and lucky to say I've collected quite a bit of data, being so intimately involved with the DR Academy as long as I have. And that means I'm exposed some levels of certainties that data provides. And certainties aren't certainties, they're just mathematical probability mapped and anticipated. And the DR structure really, really does create that, again, like up model, down model. Did you break? Didn't you break the previous range? Adopting time frame range. Where's the relationship between point A and point B? Are you above it or below it every day? 1930, 430. Is 430 above or below 1930? Every day. That's my model. I'm giving you that. That's my model. That is more than just my model. It's an opportunity for you to study in the same fashion. Okay? Pick a time. 3 a.m. Cool, groovy. Take it back to midnight, 3-hour range, groovy. Are you above or below? Every day you're looking at midnight and you're looking at 3 a.m. Or is 3 a.m. above or below midnight? And then after it forms, are you coming back and retracing back into that range? Or are you stacking and going higher? Because it matters, right? It really, really matters. Anyway, I love the combo. 3:40. I like the time. See the 3 and the 4, it's 7. I like the time. I got my boy Cam here. Renko's here. Tylik's here. Sefix is here. Tylik's got his hand up, obviously interested in the conversation here. ICT Titan is here as well. We have Manveer Singh. Bro, Quantum Wix is here. I'd love to get him up. Renko's up here. Renko, I know. Renko, I missed your meme today. You got a speaking tab?
I'm sorry. Yeah, the trader roundup thing. I was at work.
You've done that pretty consistent. Wait, how's it going, buddy? How's the week?
This is a good space because I know we're all going to be off on Thanksgiving, so I'm glad we're having the spaces today.
What day's Thanksgiving? Is it now? It's next week, right?
Yeah. Oh, I forget. Yeah, but you know, everyone will be all doing their thing or hungover or turkey hungover. You know, so we'll see. Maybe we'll trade around it. But I was going to tell you. So you know, I'm on a trading break, right? You know, I'm with my work, trying to figure out what model I'm going to use and study. And you know, we always talk about quarters. And I said, oh, you know, we're selling off. Let me measure this year's range, like the whole entire year's range. And so I measure, you know, the quarter, you know, 75, 25 to 50. And I'm like, we're getting really close to the 25 retracement from the whole range, or 75, whatever way you pivot. And at around 5 o'clock New York time, we literally touch that 75, 25 range. And I was like, holy shit, like this market manipulated there, and you see a 230 point route from there, and I'm like, yeah, so I gotta study my quarterlies more, and I just need to get into market structure a little bit more, and that's why I'm happy Quantum Wix is here, because he's been helping out everyone in his group understand protected highs, protected lows, just really diving
Bro,
into
that's
market
such
structure.
a huge even concept. I mean, to understand the concept of a protected high or low. I mean, I always talk about highs and lows, and I'm looking very specifically at that same thing. But it's like for people to really conceptualize and understand market structure and protected highs and lows, it really is a thing. And how you, in my opinion, it's very easy in how you're looking at it. In where are the swing highs and lows? Where are they at? Where are they coming from? At what time were they formed? If you have a New York PM swing high, is Asia taking it? Is it going to fall short of the New York PM high? Because if it does, then that New York PM high, I'm going to say, is going to hold, and I'm going to go look for additional lows in Asia. But I would need to see that failure swing of Asia not wanting one of the PM highs before I could frame that idea. And then I would also want to understand where we're at in relationship to these close, right? Anyway, I love the combo. Renko, are you good with that?
Yeah, I just gonna say, to anybody else in the group or just here, is that trading breaks are really important, especially if you're looking to accomplish different goals. Like, me, I've always been wanting to do scalping, right? Just catch my move, catch my thing. But the biggest being, a scalper is you do miss out on some of the bigger meat of the bone moves. Like you looking at the DR ranges, if you see that one range is manipulating, you can go take out the other side. Those are really good moves to catch, and they're important because when you're scalping, if you take multiple losses, you can lose back a week's worth of gains or more because you're not allowing yourself to capture more of the real moves, bigger moves, capture more of the points. And so that's kind of why I'm happy I'm on the trading break, is because now I'm like, all right, let me go look at market structure. Let me go see what Kit's been talking about, or Quantum Wix when he's been teaching us, on the weekend with the live stream studying. And now I'm starting to see it. Like my charts are blank. All I have is just like highs and lows mapped out, and then just for value gaps. And I'm looking at the structure. I'm looking at those highs and lows, and I'm like, damn. I said, now that's a sick trade. Now I can start studying and just picking out things that the market really wants to show me rather than trying to predict with an indicator or with a quick scalping model. So just want to give that tip and trick to anybody out there.
I love that. I think I'm just going to say adopting a range, having some form of fixed range that you have a way of looking back towards, or again, kind of studying. And I say a range, we would call it probably fixed constants. And, when you're developing your model, in my opinion, and again, everyone's going to be different, but like I'm a big OHLC guy. So I really like open, high, low, close. So for me, there's a lot that comes from just that very simple concept. But I also know there are folks that do not care about that within their trade and their trade plan. So I don't want to overemphasize something that matters to me that might not matter to someone else. But what I do want to do is bring up Cam, who's here, and say, "G'day, mate. How's it going?"
Hey, Kit. Isn't "G'day, mate" an Australian thing?
Fucking A, bro. It is. You definitely have an
But it's,
accent. You're not G'day. I sound
I'm not
like
"G'day."
a hillbilly in that. But
That's
anyway,
all. That's all
you're
good.
like, mate. You're using the wrong accent with what you're trying to say. You're trying to take the piss with me, mate, and you're going up those jolly apples and pears, mate. Anyway, I'm
Do you know
fucking.
That's all good. The
That turned
interesting
into
thing
like
is,
a pirate character.
Bro, I sound like an absolute idiot, but I'm just trying to have fun. So it's like that's about it.
that's what it's all about, man. Because the thing is, I think people in the UK, because we have such an insight into the US, we know the difference between the different accents from different states. Like a New York, Brooklyn accent is very different from, I don't know, an LA accent.
Oh,
But I
for
guess you
sure.
guys when you see us, you think we all speak the same.
Well,
But in London,
my mother's from Sussex and grew up in the
mm,
Crawley area. So, my uncle and my mother's side of her whole family is British. So, I am more taking the piss in what I
I
was
like it.
saying in like I should have said jolly good, but I was taking the piss a little bit. Yeah, the British accent is very distinct and unique. And what's funny is folks that don't understand intonation and different accents, the South African Afrikaans, right, versus
Mm,
the Australian versus the British, right? Those are three different accents, very similar, uniquely different, right? And
mm.
to your
I tell
point,
you what,
like you get Pippi up here, and you're talking about the New Yorker, right? So you get someone else that's like, from the South or whatever. But accents are fun, aren't they?
they are fun, especially there are some cases where the British accent does carry a lot of weight. Like if anyone from Britain or the UK goes to Vegas and you just speak there, you can get a lot of female attention very quickly in a lift, in an elevator. I don't know what it is. I don't know what kind of preconceptions you have about us, but as soon as you just speak, you just get the
Bro,
attention.
there are just some
Ridiculous.
people, and I know this because my father was one of them, right? My father was one of them, right? Like he's a sucker for an accent, right? Like, and he
Mm,
loved the English accent, right? And my mom could just, you can lay it on if you want. You can have that real, what is it, Cockney, like the real heavy, like London Cockney kind of accent,
mm.
and come in with a real strong intonation and sound, very, very almost street, right? I'm sure like
Yeah,
the
there's
street slang of London is pretty wild, right? Or
yeah,
of Britain, I would say.
yeah, yeah. I
like
guess I'm
like
not from those
Michael
parts, but
Caine versus like Jason Statham, or you can tell that there's a proper English, and then there's kind of like the New York version, which I have
mm.
no idea if that's like Liverpool or where it's from, London, Cam probably knows exactly where someone's from.
Do you know what? I'm so isolated from the real world, don't. But I know what a street British accent sounds like, so I know what you're saying. But yeah, I'm so isolated. The thing is, what do? I don't go anywhere, Jim. I work from home in my trading office, so I'm so isolated from that, so I don't anymore. But yeah, the accents are very different. Um,
So how was your
yeah,
week? How
Thanksgiving's
was your
come.
week trading, Cam?
Man, good week. Do you know why it's a good week? Because it was a short week for me. So yesterday we had NFP, obviously, so I didn't trade NFP. Wednesday, I think we had FOMC meeting minutes. So I traded the London session, didn't trade the New York. Didn't trade today because I would have had to have waited. My particular model, I'd wait for PMI to come out and let that dust settle trading at 10. But then I don't want to trade the 10 a.m. Friday session, right? That after the 9:30 open. That's just not how my model works. So it's a nice short week for me, which is good because then I could just chill, go to the gym, catch up with my students, leave some voice messages. Because after a while, man, I know it sounds, I don't know what the word is. Um, you'll get there when you know it. It's like after a while as a trader, you ultimately turn into a burger flipper. You flip a burger and it's not as exciting as it used to be. You're just going in and you know your job, you got to flip the burger. And once you flip the burger, man, you don't want to flip the burger anymore. You want to go do real stuff. So it's a nice short week. Traded Monday, traded Tuesday, traded Wednesday, London. Then I was done. And I'm hearing Thanksgiving is coming up. So that's some nice holidays for me as well. Because I pretty much run on New York time just because my charts are in New York. So even when I'm at the gym and I'm telling people times, like psychologically, I'm telling them New York time, and they're like, "What are you talking about?" Right? So yeah, my life
That's
kind of
funny.
revolves around your times now. Well, that's how my clock runs now, right? Because I know the sessions, I know what I'm trading. London is just, I don't know, it's not a real concept for me because I'm in the charts and I'm on New York time. But yeah, good week, short week. That's what I like. I like a short week. Hit it hard Monday, Tuesday, Wednesday morning, and I've just been chilling since.
Nice, bro.
But I liked you spoke about protected highs and lows, and I like that you mentioned that because not a lot of people think about it so deeply. If a swing high or a swing low could potentially be protected, maybe people who are developing and aren't sure which liquidity has been attacked, maybe you should take your take profit before it gets to the protected high or protected low. There's no point holding on all that way to realize an institution is just loaded up on a protected high and a protected low, and you don't TP. So that's something, maybe as a developing trader, people want to think about fixed TPs. Just say, look, I'm going to TP at 2R. I'm going to TP at 2.5R. That way you're not guessing. There's nothing worse than you put on a trade and you want to TP at some liquidity somewhere and it exits the liquidity before, right? Or it reverses the EQ. I mean, you guys get highs and lows. Start having a look at the equilibrium of what you're thinking your dealing range is.
That's
You'll see
that's what
so
I
many.
love trading to an equilibrium personally. Like when you're at an exhaustion and trading back to an EQ, that's just like a really good high probability like zone or target. I know folks was having the discussion, and there was that squeeze on NQ earlier in the week, and we were right at the 50% of a 2-day range. And I'm like, this goes against my model. I can't fucking trade it because I don't take trades from 50% personally. Because 50% has proven to me as being too erratic as being a launch point for me personally. I'll trade to 50, but I don't like taking trades from 50. It sometimes it goes, sometimes it doesn't. Again, from 50, it can be pretty erratic. So as a general rule, and it was the squeeze that we had that I knew was going to be a squeeze that went exactly to, it went to 24.9. I said 25K, and I could not engage in that open drive squeeze the way I wanted to based on my own rules. And I was just, I was so pissed. But it's like, I believe strongly we need rules, but one of these rules that I would suggest or recommend that other traders investigate is where your launch point is on taking a trade. Do you prefer to take trades from an extreme? Is it coming open? Is it coming from the middle of a range? Is it after you've swept a specific low or a rate and break in structure? Like whatever those parameters or components are for you, it's good to lay out, right? And then we're traders, so we can talk about it. And it was just for me, I can't launch off of an open price off of a 50 because okay, that day it fucking squeezed, which is what I thought we would do, and we didn't fuck around. But you could fuck around at a 50, and then you get big wicks and lots of dancing there, and it can be, a kind of a painful place to try and launch off of. Anyway, again, that's just an idea. Um, do you have any like kind of rules, Cam, that you kind of follow or that you kind of try to uh, stick to from a trade standpoint? Like I
Oh
just
yeah,
gave an example from the 50. I don't
yeah.
launch from the 50.
Yeah, I got tons. I'll go through them now, but I just want to reiterate something I said last week and the week I said before. Right, Kit, you have like, you know, thousands of people who tune into this call, right? And unfortunately, majority of them are just listening, and they can say, "Yeah, that's cool. Yeah, that's cool," and then they're just not going to act upon it. So everyone who's listening right now, I implore you, take a few notes and act upon something next week. You don't have to take that particular trade, but at least you can say, I am going to observe Kit's 50% point, what he was talking about. Because that way, at least you're learning from these sessions instead of pissing your time away using it as entertainment. So just take a note of something that you like and just observe it. So at least you're making progress. So then the rules I like, I'm a big economic calendar guy, right? I don't want,
Love
right?
that.
I don't want to be in a situation where I am stuck in a consolidation. So that is my whole thing because there's nothing worse than making all kinds of money during the week and you throw it away in a consolidation. So for me, like if we have, I think the calendar was a bit off this week, but I think NFP was 8:30 on a Thursday,
Yep.
right?
Yep.
8:30 a.m. on a Thursday this
Yep.
week. So I'm not taking any trades before that because there is a percentage chance that we're just going to consolidate as traders sit on their hands and look for that data, look for that data point, and then they may trade afterwards. So that's the big thing about my trading. I know what my model is, but ultimately it's a game of probabilities. Now, if you can just stay out of the things that are high probability, like there's a high probability that is going to be a consolidation, that is a hard rule for me, right? And I see it so much where even ex-students of mine, they'll message me and they're like, "Oh, did you see this? Did you see this on this oil?" And I'm like, "Bro, we have PMI at 9:45. What are you doing looking at the charts before 9:45?" Right? So that's a hard rule for me. Um, a lecture that I need to do publicly on YouTube. I think people really need to understand probability theory as well. Things like I know everyone has a different education, but you have independent variables and dependent variables, and I'm going somewhere with this. So I had a student once, and he knows my win rate is 70%. And he goes, Cam, what's your win rate? And I said, 70%. He goes, oh, okay, I've had 7 wins in a row. So I'm going to reduce my risk because the next 3 are going to be losers. So he understood what a win rate is, but he doesn't understand that these are independent variables. So he assumed because he has a sample set of 10 and he's already has 7 wins, that the next 3 are going to be losses. Okay, so understanding that they're independent variables. But then on the flip side, let's say you have a 50% win rate. So you take 2 trades in the London kill zone. Okay, you take 2 trades in the London kill zone, and both of them are losers. Okay, then you're saying, okay, I got 2 more trades I can take. If my win rate is 50%, and these are independent variables, meaning the outcome of my next trade is independent from my previous trade, like flipping a coin, then I should be good to take these next 2 trades. But the context that people are missing is you are trading within the session. What if that whole London session is a consolidation? Therefore, they're dependent variables. So it's not quite related to rules, but understanding that. So one hard rule I have is I have 2 losses that I can take max in a day. If I take those 2 losses, I'm done. Reason being is, yes, the setup may be there, but it just might be one of those days that's going to consolidate for no reason whatsoever. So that's another hard rule of mine. I just want to keep myself out of bad situations. That's it. My trading model will happen when it happens. If I can just take away the easy losses, that's a big win for me. So economic calendar is huge. I don't want to be in consolidations. I don't want to be trading bank holidays. I know it's tempting as a trader, especially when you're developing. But this is another.
Oh,
Yeah, man. And like my students, I'll be like, it's bank holiday Monday, right? Whatever it is, right? Whatever the event is in the US, and they'd be like,
that's
yeah, yeah, but I want to trade it and as demo for practice. And I'm like, bro, you are practice. So if you hit your trade during a bank holiday, that has no relation to price action during a normal day. And a loss, that has no relation to price action during a normal day either.
well. What's
So
it? I'll
why are you
say this.
doing
What's
this?
interesting because, and I mean, I agree a developing student needs to have rules and parameters, but as a student progresses, I actually think bank holidays are a really good day to back test and study. Typically, you're looking for gaps, right? Like again, like the specific parameters I'd be looking for when we're dealing with these low volume days are gaps and gap fills and where and how price gets sucked into or fills some form of gap. Anyway, like you're absolutely right. Compressed range, short, tiny, itty bitty ranges suck. But some of these bank holidays have some kind of easy cake model moves with that are still kind of thin in volume, but still give kind of predictable models. So
Mhm.
anyway, I'd say that
Yeah.
for an intermediate student, not for a developing student. So I agree wholeheartedly. Anyway, I just
But you
want
know
to say.
what? You touch a beautiful point, and this is going to get quite advanced. But I love your mind, and I love where you've been, and I love what you're thinking about. So sometimes when you're trading, you're looking at price action during real low liquidity trading times. You can literally see 2 different sets of traders fighting each other, right? So we talk about protected highs and protected lows. So a dealing range will open up, and you'll see 2 fair value gaps: one a bullish fair value gap, and one is a bearish fair value gap on the 1 minute time frame. And the way I fair value gaps is they are an area where someone has tried to fill their orders, prices move too quickly. So it's an area of pending orders basically. They try to buy I don't know, price of 100, okay, and it just pushed the price away. So anytime it goes back to 100, there will be some pending orders there. So sometimes when you're in these low liquidity conditions, you can actually see the algorithm working. So I was up, I don't know what time one time, and I was just observing the 1 minute time frame, and you could literally see this tiny dealing range, 2 1 minute fair value gaps, and every time it went to the fair value gap, someone pushed the button hard and tried to attack the other trader, and then that trader would push back. It was unbelievable.
So,
So yeah,
so
if you know
it was
that,
kind of like an easy range to kind of trade or kind of see how it was being traded.
see how it was being traded. Yeah, I could see 2 traders fighting against each other. One was bullish, one was bearish, and it was basically a game of chicken. Like who's got the most money? and is willing to put up to take the other guy out. And it was just amazing just seeing the back and forth. So that, yeah, you can learn a lot from bank holidays as well. It's almost as if, let me think.
Well,
Gotta
here's
run,
it's a unique situation. You gonna jump in, S Pill? Oh, he's saying he's got to run. I was going to say, like, if you're dealing with any type of, when you say economic calendar, there are specific, and folks that trade with me at Pippi is a very good example, and other folks can say it as well. But like you're practicing, if you're practicing for a PPI, if you're practicing for a CPI, if you're trying to practice an NFP, if you're really looking at where and how price is sequencing and how it plays from one month to the next and from one event to the next and etc. Like if you're really, really focused on that as a model, which I highly recommend for, again, the developing trader needs to stick to one asset, needs to focus on one thing. But as you're developing in idea of taking a semester and studying bank holidays, taking a semester and really studying news, actually engaging with news events and pre-news events and how they work to and off of each other, because those are very, very, very profitable moves. But if you never ever study it and you just want to jump in recklessly and click a button, then you're gambling. But if you actually collect the data and you find ways, and I'll just tell you, there's a guy named Yusuf. He is like one of the best technical analysis guys on ICT and on Twitter for that fact. And he and his group of folks have done just that, where a lot of younger developing traders are scared of an economic calendar or trading with the catalyst of the news, where when you are developing and you really study this very, very long and hard, and you make that a point of creating models towards it. And again, a gentleman by the name of Yusuf, I think he just goes by Yusuf Trader One or Yusuf Trader or something like that. But he's a good buddy of mine, and he's been doing it for years. He actually works in New York for a Wall Street firm, but he also has a small group of folks, and you typically see him run spaces and talk about kind of this institutional fundamental approach towards the market, because his model is wrapped around the news. That's my point. But anyway, Cam, I like adding that, eclectic diversity for the different students that have different opportunities at choosing. Again, we're, as traders, you get to select your electives. What do you want to study? What do you want to be good at? And some folks who are developing, it's literally that. Well, what do I want to focus on? And knowing how to collect data is the thing, but knowing what you're collecting and then why, right? I mean, I, for one, have been exhaustively studying weekly profiles, right? That's just been something I've been really, really, really focused on. So I'm looking at the early parts of the week and where and how it's developing, right? And where and how there are quote unquote sequences and the way price reacts and the movements and then the mirrors and all of these different things, right? So to me, it's fascinating, but everyone has their own model and their own development. And even when I have intraday models are transforming into weekly and then monthly and quarterly models, right? And as traders, that's what we do, right? But I just love the conversation. I myself, even as a host, I'm developing myself. I spent so much time like back testing and running these higher time frame models, and I feel really blessed and fortunate to say, like, over live price, really calling it live, like the models played out for the most part how I was anticipating. So it's nice to say that. It's nice to be able to have it recorded and to be talking about specific levels. And again, I'll reference within NQ the October 10th low and how the market has been standing on that OB for, since October 10th. So there's a lot of trades and trade ideas if you continue to utilize a 4 standard and that range. I pick your order block off of a 4 hour, off of a 3 hour. I like the 7 hour. And off of the 7 hour, it measures 4 standards even up, a full clean 5 standards. And where and how we are bullishly retracing back into this range, into price that, if you look on an 11 hour, we are devoid of bullish price action up towards the 26K. You have to look at the 11 hour, because if you use gap and gap theory, there's 2 11 hour ranges and a little 1 hour turd. So the 1 hour turd on an 11 hour range, I'm just telling you, if you trade gap and gap theory, it is magical. Magical. Anyway.
Yeah, I think I should always preface everything I say with according to how I trade. Because you're right. You know, at Goldman Sachs, we had a desk called the Special Situations Group. So this was before 2008, before the Lehman and the great financial crisis, where we had prop desks, and you can't have prop desks anymore in investment banks. And that group, that Special Situations Group, they literally only traded wacky things when wacky things happen. Like if an earthquake goes off, they jump on and they're doing these special trades. So
But when
you
they
could,
if you only focus on that and then you're jumping into those trades, that's a specialist, right, brother? Like I
yeah,
value and
exactly.
appreciate people that take the time and effort to specialize in that type of unique circumstance. And if you don't specialize in that, then you literally turn it off. And that's a filter not to engage because your law of large numbers are not applicable to your point, Cam. To your
Exactly. So
point.
you could be the CPI god, right? All you have to do is trade every 4 weeks, and you understand the two-stage distribution and all that stuff, and you can just kill it. And think about it. What is trading really? Okay, it's not a slot machine which makes you happy for dopamine. It's literally there to give you freedom. So if you are that CPI expert, bro, you 3 weeks of the year you're doing jack shit. 3 weeks of the month you're doing jack shit, and then that 1 week you're preparing for that one CPI event and you're making money. Be the specialist. I know my model is not built for CPI. It's not built for volatile price action. It's on the 1 minute
How
time frame.
how about this, Cam? I got one for you. One of the public, like one of my students that has learned here on Twitter has developed an AR range. So he takes average ranges, and he also trades Bitcoin. And he had a 3-month range, and he called the high, and he traded from the high. He shorted the high of Bitcoin, and he's a student that learned information from here. He's from a developing country, and he has married a high time frame swing model because of exactly what you're saying, Cam. Like, what do you need to trade for? Like he's fine with literally, he's got a 3-month AR value, which is your average range on a 3-month within Bitcoin. He created an indicator, and Bitcoin came storming up to some key arrays and levels within the indicator that he built. And he built it with some counsel and some conversation with me and through some DMs and coming up here in Trader Roundup and us just kind of talking, because we are trying to do this kind of public kind of mentorship thing, right? Like anyone who's listening, Cam makes a really good point. Sharpen your pencils, take some notes, because we're trying to help. We're trying to help because we understand your time is valuable, our time is valuable, and we want to provide value. And it's kind of funny I say that because the first half hour we were definitely kind of yawning and shooting the shit, and it really wasn't that much of a conversation. It was at least not a valuable conversation. It was just kind of us warming up and kind of hanging out. But we're here now. And there's a lot of folks that have speaker tags. We have some great traders here. Mr. 930, Quantum Wicks, Neil, I Am Boss Lady, Maxi, Renko. I love seeing you guys. Blue Dog. Trisha, loves seeing you here. Zeet, love seeing you in the live streams and being here right now. Camilo, I like the new picture. Just scrolling through a bunch of folks here. Thank you for being here. Big Wick, bro, Big Wick Energy. I need you to come up here, bro. Come on up. I love the name. You know I do. But would love to keep the conversation going, keep it flowing. If you have a question, we have Cam here. We got my boy Pippi Banks in the house. Can you add to the conversation your thoughts and 2 cents, anything at all?
I'm kind of jumping in and out.
I got you. I got you. It doesn't have to be for long. I got you if you're busy.
Yeah, everything was good this week though. It was a very clean week. I mean,
Gold was in a
yesterday.
pretty choppy profile, though. I mean, keeping it real.
If you know how to trade a range, right? This is the thing, right? I heard y'all talking about validations, right? If you understand, really focus on the consolidation, it makes your swing trading and your breakout trading much better. If you can really
I
dial
love that.
into a consolidation, right? Because now you can really see when those false breakouts are going to come, right? When you identify the range and it's identified, you turn your model on into a scalping model, right? So me personally, I like to trade consolidations, right? That's one thing I'm very good at actually, right?
Yes,
Is
yes, yes, you
trading
are very good at
consolidations.
that.
right? So when you understand the consolidation and understand the condition that you're in, and this goes back to, kind of what we've been talking about the last 2-3 weeks, right? Identifying the market conditions and how to actually navigate the market conditions, right? Don't try to have a breakout strategy in a consolidation if you can't trade the consolidation, because you're going to end up getting manipulated inside the consolidation. So if you actually focus on the range, right, and focus on
So
those
how do you do
consolidations.
that, bro? How do you do that? Because I know for one, and anyone listening, A, you're very good at this. B, you're a private ICT charter student, so you understand the language, the lingo. And
Mhm.
three, as someone who's traded with you, like you understand a mitigation block and you can deconstruct a
Correct.
mitigation block. And I
Mhm.
was just curious within how do you trade a consolidation, Pippi Banks, if you don't mind? Anyone listening, I know they're going to want to hear it. So if you have any salient points, I'd love to hear them.
Okay, well, the main thing you want to look at in terms of consolidation is the equilibrium, right? So, me personally, I always have a rule: above equilibrium, we're looking for shorts; below equilibrium, we're looking for buys. Now, I'm stacking ranges on top of ranges. So, I'll have something that I would call like a parent range, which would be the biggest range that you have, right? And then once you have an intermediate swing low or an intermediate swing high, you connect that, and then that's your current dealing range. So you have a parent range. Inside your parent range, you have a dealing range. The dealing range that you're in, right? You fib that out, get the 50% of that. And now you're looking at, are you in premium and or discount in regards to the parent range in relationship to the current dealing range? So you're constantly stacking range on top of range and looking for your premium and discount inside these specific ranges. So you're basically fractalizing ranges. You're getting the premium and discount working off your top-down analysis, right? And your
So, so,
bias,
so
go,
if
go
you
ahead.
were, I don't mean to interrupt. Would you say, have you adopted a high time frame range? Do you have like a start, an open and a close, maybe from Asia that you run into London? What do you do? Do you take something from the New York PM? How are you stacking these ranges, my friend? Great,
Okay,
great, great points.
okay, so first thing I would start with, I would do a top-down analysis, right? So me personally, I start from a 3-month candle. Okay, so I start on a 3-month chart. I fib the 3-month chart, and then I break down every time frame lower than that. So I see, okay, are we in premium or discount in regard to the 3-month chart? Right? You can visibly see just by looking at price. If you're high up in the price, then you know you're in premium. You're down in the price, you know you're in discount. And then I'm fractalizing that, breaking that down time frame by time frame until I get down to an intraday time frame. Once I get down to an intraday time frame, I already know that in regards to premium and discount because I'm breaking it down fractally over and over and over. So now once I get to my intraday chart, which is my 5-minute time frame, I don't go on any other time frame besides the 5 minute.
Yeah,
Anything
we are
else?
married to the five, right? Like you and I, that's just
Right.
anyone that listens understand we trade off of the five. Everything comes off of the five. It's nothing really more or less. And I say that because consistency is an important thing, right, Pippi? And like kind of laying it out. And I can say that because you and I both are the same. Do we deviate once in a while? Sure, but our trade narrative is coming from a five, right?
Right.
Or I mean our actual
Exactly.
trade execution,
Every
right?
now, right. Every now and then, I might jump up to an hour. I might drop down to a 15 minute to see if there's any PD array that we can dip into, right? But that's basically what I'm doing. I'm just fractalizing every time frame, premium and discount, and I'm collecting those dealing ranges over and over and over. and then I'm fractalizing as we go down into the time frames. So by the time you get to the lower time frame, you know if you're in extreme discount or if you're in extreme premium. And it's literally that simple. Like
And then when you're
literally
trading, are you
that
trading
simple.
from extreme? Are you trading from extreme discount, for example, back to equilibrium? Are you trying to trade to and through equilibrium? Where's your target? Where's your terminus typically? Is it you want to trade
Well,
through a range, right? But
I want to trade through equilibrium, but it depends on where I'm taking the trade from. So if I'm taking the trade from Asia, and let's say hypothetically we get 1800 low of day, right? Statistically, that makes a very high probability setup for a long where you can hold all day long, right? If I take that trade off 1600 and that's the low of the day, I'm going to hold that trade all day, right? Until we reach terminus. So my first stop is always going to be equilibrium, right? Just in case we don't go past that. So you have to pay yourself. And this is one thing, a lot of times I used to struggle with where I would hold it, like I would get this great entry and I fall in love with the entry. And, it's about the entry and actually taking profit, right? So we have to pay ourselves, right? Regardless. So if you're in extreme discount, your first target should always be equilibrium. Take off at equilibrium every time. Every time, take at least something off at equilibrium. Now, if you only got one contract and you're not partialing out, now, that's up for discussion, right? You move your stop or whatever the case may be, but
I would still
always,
suggest exiting and then re-entering after, because the chance or probability that you get a
yeah,
retrace or that you can maximize the
and
impulse, bullish or
right,
bearish, it's going to
right,
be at equilibrium, and then it's going to come retrace back up to the 61, whatever, 66, 70, whatever, before it drops back down. So you end up losing if you don't take and commit to the 50% and that first dump. If you don't commit to that for a second reentry possibly, then you would literally, I mean, to your point, it's if you have multiple contracts versus if you only have one. So
right. Now, one trade that I will hold, and I'll take this trade anytime. If I get the high or the low in London, I will hold that trade all day, right? I'll hold because statistically we get the high or the low placed in London, right? That's what we should be looking for London to place. So if I get that and it's a sweet setup and I get near
so
the
your
low,
intraday, your London intraday, you honestly, because I know how you trade, but the London intraday, you're applying the same thing to an Asian.
yes,
Like, again,
yes,
when we say the intraday, we're talking about a protraction. So the
correct.
model from core content, month 8, in
Mm-hmm.
which he's utilizing a central bank dealer's range, in which he takes standard deviations from that sized range, and you watch it protract within a very measured range and then a very specific time, right, brother? Because
Correct.
the London protraction, there's a London protraction and then there's a delayed London protraction. And that
Right.
really has to do with where and how price is coming off of midnight, right? Between midnight and 2 o'clock versus the delayed protraction, which is midnight and 4 a.m., right? So,
Mm-hmm.
really dialing into the idea of a protraction as a model, you and I both know that's money, right? I mean, if you trade the metals and you look for an Asian protraction, boy, oh boy, whew, I'm
That's
just saying
sauce.
that's a great model, bro. I mean, it's a
That's
great
sauce.
model, and we like talking about good models. But the ICT practical model that you can study is going to come from high probability trading, core content month 8, and it's going to give you specific parameters around when to trade London and when not to trade London. I'll tell you, trade London early in the week. Early. Get in early, boys. Because London's going to pour and you're going to get some price coming these ranges, early on in the week if you can get in sync. So, I mean, maybe not in the latter part of the week. I mean, it depends. Depends on the profile that you're in, right? I love to see a profile where, Friday, Monday, Tuesday, we're getting a high or a low coming out of one of those days. And then, price is just, you're daring it to take that higher low. When we talk about a protected higher low, it's like, okay, well, my stop's going to go on that low. And let's just see if it wants to continue going higher. Because then if it breaks that low, then you can then make decisions accordingly. But it's a really good place to put your stop. I hope what we're saying makes sense. I mean, I'm picking up what Pippi's putting down. Cam, Focus, we got Focus here. Cam, we got Mike Trades here. We got a bunch of folks here. I am Boss Lady. What's up, girl? But are y'all picking up what we're putting down? Is it what we're saying making sense? Again, I trade just like Pippi, so I understand what he's saying. It might not for some of you.
Yeah, let me get some thumbs up if y'all. I mean, thumbs down if y'all don't understand, because I know I could just start rambling. So
And I understand exactly what you're saying. So, but all right, sounds like people are picking up what you're putting down. We got a hand up here from Batman's Shadow, who's been on here before. I love the name. We got Focus here. Very excited to hear from Focus. We got ICT Titan here. Sethix is here. A new gentleman, Mike Trades Daily, who I'm sure is going to follow me, right, Mike? Right, buddy? You're going to follow me, right, bud? But anyway, Batman, you're up. Go ahead.
What's up, guys? How are you guys doing? What's up, Kate?
Very, very good, buddy. How about yourself?
I'm doing okay. It's a long time. Last time that we talked about and trade around with ICT, and I made a post apologize for everybody who was listening that I went off of topic, and
That's okay, buddy.
I just reiterate and I think about that. The way that I speak on that roundup, I was like, I went too much.
But you want to know what's funny, brother? I
Yeah.
spend time thinking about these roundups too. Like I spend all week excited about coming together to talk with, folks like you. I know you were excited last time you came up, buddy.
Yeah, that
You were
was,
excited, bro. I'm not
bro.
mad
Like,
at you. I'm not mad at you. It was just like,
I
you're
think
little.
you helped me that like you told me to put it in my like in mute because the way that I went excited because he's the mentor, bro.
I
Uh,
know this, and
and
I know what
and
it's like to be excited, bro. It's good. It's good to
and
be emotional. No one's gonna be mad at you for that. I'm not.
yeah.
I understand.
I just made an apology for everybody. It was like because uh, when I get excited, it was like when I talked to ICT was listening to me was like the first trade that I took. It was the same measure, but now I think I get used to it. Uh, Probably in the future, like
Yeah, I mean, the more you
it's gonna go
listen,
through.
the more you engage. Again, it feels really good. I mean, I feel like he's tapped into the community. It's like I'm picking up what he's putting down. He's picking up what we're putting down. So it's kind of awesome, actually, that we have this conduit with an intimate connection. Like literally, it's like you're sitting down. It's like a fireside chat, a dinner table discussion with your mentor. You
Yeah,
know.
that. I think that's really important that we have to do that, and the way that for me, like when I moved here, is just like I never had a friend, and now this community that is creating the environment that I can come in and share my idea.
We
That
want this
really
this
helped
is
me about.
wholeheartedly, brother. This is for you and everybody listening. Wholeheartedly, we want to help. We want to be carrying the public mentorship of ICT, right? And we really want to help bring value and help anyone that's listening. And hopefully they take and grab, as Cam has said multiple times, a pencil or a paper, and people can really listen to and take value from the conversation.
And yeah, the way I think I listened earlier for PP Bank, and he said something about like the way that you're gonna take a partial that you're gonna pay yourself. That's the way that ICT does. Like when you pyramid in your entries, you have to take a partial onto your target. This is the way the best way that you can get
Absolutely.
profitable. But for when you get in the for me, the way that I trade is just like I'm not a scalper. It's just like I'm in and out, but the ranges that I'm gonna look at, ICT taught us if you see the market, the universal model that ICT taught us in core content, month 5 or 6, the market makers, the market maker model tells you if it's gonna take that original consolidation or not. What do you mean by that? Is just like we know that it could, when the first accumulation or restate, the first stage or the second stage or the first stage of distribution or second stage of distribution, the first
Liquidity.
stage
With this coin
happens.
is what should
Whoa,
we
whoa,
do?
whoa, 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 whoa! Are we interrupting here? Fight Club, we do not interrupt fellow speakers. Thank you. Sorry to interrupt. Young man, go ahead. Batman?
You good? Okay. The first stage of the first stage when it happens, if it hits the equilibrium of the whole range that you're gonna from the sell side from original consolidation to the smart money reversal, if it hit the 50%, the first stage, then they're gonna tell me that they're gonna go take that low, the
Yep.
original consolidation.
Yep.
The way,
And ICT talks about that
yeah,
too. That's a great point.
and that's why like for us, for me, equilibrium, you're gonna I'm when I hit equilibrium, I'm done. But the way that the first stage, I'm always taking my model is second stage. But
Yeah, I
if
like the
I
second
see this
stage.
second
It
stage
was
is
in the, it's funny. I just want to mention real quick, buddy. In my live stream today, I called out the 1037 on the 937 as the turtle soup level real
y-
time.
y-
And when you really look at a market maker model and you're looking for confirmation, you look at the turtle soup and you're like the non-confirmed low right here. And I mean, I for one called the 1037 low on 937 within the live stream today. So
yeah, I think I saw that too. But the way that PDAs works for everybody is different. For me, there's a PDA that and there's a PDA that it made me a confirmation for it. For example, the PD area of the turtle soup, when I saw turtle soup, it confirmed my bias. For example, when IC talked last like 2 weeks ago, he said the high for the this year is already made. Like that means the first stage already happened, and the Thursday that we saw, if you see a market maker model, that was the second stage of delivery. That was the second stage of delivery from market maker sell model. And the way that I saw it, because ICT just confirmed my bias because I was going short this week. And I saw the original consolidation in the left side.
hey, Batman,
What was it?
Yeah.
hold on real quick. George, what's going
Yeah.
on, buddy?
Uh, I bought sort of Bitcoin.
Bro, come on. You can't. I'm going to mute you. George,
No.
you can't, George, you can't interrupt folks like that. Okay.
Okay. So let me speak.
It's not your turn to speak. So pretty please wait your time.
Okay.
Batman,
You,
here's the thing. I appreciate you being passionate about market maker models. I want to bring in Focus, who also is very passionate about market maker models. I want to have a conversation. We are talking. We're here to add value. I want to bring Focus into the conversation. We are talking market maker models. You are bringing up very good points, and I like it. George,
and if I gonna the last part for
yeah,
that,
go ahead, buddy.
uh,
And
uh,
I'm trying to bring in Focus, but absolutely, pretty please.
yeah, for when Focus talked about the market maker models, the way that he asked a good question about the macros from last around that,
Yeah,
and
that was a great
and
question.
yeah, and I literally have the same model that I call it the time ranges that I make from macros that ICT say that we don't call it macros,
No,
but
yeah,
if
and
you
I
first,
think we need to respect that. I mean, I really want to transform even anything and everything that I say. I really want to focus on. He has said a very, very few macros like the 1310 to 1340. He mentioned that PM macro that is one of the few that does not fall into the 5010 stance. But I think overall, as a community, we need to stay focused on the 5010s as macros and then these other ranges as being a time based range. I don't
uh,
know technically the term, but I don't want to confuse macros. And he's made it very clear what a
and
macro
that's
is. And
why
a macro is a 5010. So anything that's not that, I think we
it's
as a
time range.
community, well, we can call it a time based range. I don't think there's
Yeah,
anything wrong with, I mean, a TBR. I think I've kind of adopted that kind of lovingly, and I know a lot of other folks who have as well. And it's just taking and adopting a time based range and kind of studying it and trading it. And did you take equilibrium? Is it bullish? Is it bearish? Blah blah blah. Right. So
yeah, that's what I was trying to say.
isolating the macros is something respectfully we are going to do so that folks are not confused. The 5010 is very valuable. And ICT's talked about the 5010. You got 24 of those in a day. You can study any one of them, right? And then he has a few of these times, 1900 to 1930. He talked about, midnight to midnight 30. He's talked about, he gave 6 very specific open ranges in conversations with us. And it was very, very noteworthy for anyone who does like to trade or wants to trade an open range to really understand the first 30 minutes and how ICT is teaching it. Midnight's a great
Yeah,
open range. Asia is a great open range. 930 is a great open range. 1330 is a great open range. There's a lot that he's talked about. I think he gave 6 in the last trader roundup.
yeah. For these time ranges and macros, I was like trying to say that the way that Focus saw it, I saw it too before, because like there's
Me
a
too, for the
specific
record.
time.
Me too. It was not. It's nice to. I mean, I can't say that. I mean, what Focus was bringing to light, it was definitely some new insight for me as someone who studied at great depth. He is very knowledgeable and understands and sees things with great insight. So
Yeah,
in
if
that vein, pretty please, can I bring in Focus to the conversation?
yeah, sure. If
All right. Focus, you there, bro?
Yo, what's up, man?
How you doing? The conversation today, how are you kind of taking it? What are you hearing? How can you add?
I just kind of hopped in a minute ago. Heard the you know talking or Pippi was talking about trading in ranges. Uh,
Yeah, I think that's a great one who can also trade within a consolidation. I don't know if there's any
yeah,
insight you would like to add to that.
sure. Well, there's always got to be context, right? Consolidation where? Like, where is it at to be consolidating? What is like? So there's always this context. That's why, for me, I break it down, from such a higher time frame because it puts everything in context. Um, you're talking about gold. Um, put a fib on gold last month. It was this, what was that, Wednesday? Just hit 50% of last month. So that's just offering premium. There was an inefficiency. Tuesday reached down, touching the opening price of the month on gold, right? So that's fair value of the month. That was the first offering of that time. So before it got to moving, that was the fairest price, and then price moves in time, and from that psychological perspective you develop a viewpoint of where is premium and where is discount. So it's end of the year, like any candle has an open, a high, low, and a close, pulling back off the low, like a TGIF setup, like what last quarter do for this quarter to do. We're coming into December, right? Like, there's a lot of context that you have to place over things. Like ICT's talking about in his Twitter space, it being the high of the year. On indexes, dollar had a lot to do with that and what it was doing, continuing higher prices, right? That gives confirmation. Seeing lower prices and indexes, we had already started to see these type of market maker models start develop. So like NFP for me was a big short. After NFP was a big short, just because it was just doing the thing. Like, you know, it's reaching back up into premium and then it's coming back down, selling off. But these market maker models trading in ranges. It's for me, the range, when says, well, what range? Well, the range is always the previous daily candle. I live on the daily chart. That's where I live. And then everything's framed by what am I protracting the weekly to do, right? It's an open, a high, a low, and a close. So like those candle structures, if I'm on the daily chart, look back 3 candles, right? 3 is everything. 3 candles to make a fair value gap, 3 candles to make a swing point, right? 3 candles, right? These 3 candle ideas, you're looking back 3 candles to get an idea. And then what is this daily candle as a range, right? So that way, you know, if it's what it's done, is it displaced down, right? Then you know buy side and sell side is above and below previous daily candle, right? And as Pippi was saying, if you're targeting deeper prices, you want to be selling off above 50% or at 50%, you know, and that gives you perspectives. So then once you start developing through the week, right, you have PD arrays, reaches up 4, like, let me scroll over here to NQ real quick. Like on NQ, it just reached up. That's all it did at NFP Friday. That NFP was just reach up and touch 50% of the previous month. Like, and then the distribution all the way down to that sell side that was below previous month's low, right? So it's just a pure offering. And as you could see, the imbalances as it walked down, you had a weekly candle that was the change in the state of delivery. And then you have the next candle. And then this one gives an impulse down to clear out the sell side. And on the daily chart, you know, you can see it. So those candle structures inside of that, that's when it gets fractalized, right? Like that's where a lot of people get lost in the sauce and time becomes an enemy because patience is an adversary for them and they can't wait or they don't. I don't want to say no because in conversation they would know, but when the time comes and you start asking them questions, you can tell that the fuzziness is still there, that it hasn't become clear, crystal clear yet. And that's just the emotion to, you know, causing the signal to have some distortion, and we all have to move through that and grow in our emotional intelligence, and how we operate in the vessel, because we're all triggered in different ways. We all got different, you know, things that cause us to do different little nuances that may not cause another person to do that, you know, and we got to work through those and figure out your puzzle. um but pertaining to like when you know something, like knowing as in like not without a doubt, like with pure, I don't want to say reaction, but your body just knows the next step without your mind having to think about it.
I love
it,
that.
it becomes a little bit easier to operate in very specifics, right? Because like in my journey of learning market makers, it became, first it was very general, and then became extremely specific, and now it's all fallen away back to very generalized again, because it's like there's just salient specific price levels that you need to be remembering. It's not all these different PD arrays and all the, in my world, it's not all these different PD arrays and everything. I just need to remember a very specific price, right? That very specific
I
price,
love that.
where did it change in its state of delivery? That point, where is that point? I live on the daily chart.
In previous highs and lows, do you see that occur at previous highs and lows?
Well, it depends in context. You know, it's all about in context, right? So like
That's well said. Well said.
if you're talking about where or when, so like a 1 minute change in the state of delivery, we might see it's like, oh, that's a fractal breaker. It comes back to the breaker, right? Because that series of down candles and then break of that previous impulse creates that formation of a breaker patterning. And we use the logic of the liquidity, and now it's changing directions and it's going to start utilizing time and the things on the other side of the curve to get to its liquidity destination, right? And there's those key components, because it's something like what you were just saying about it. What could we use as a phrase? I'm just going to keep it generalized and call them time-based deliveries, because a macro is
I
a
love
very
that.
specific set of instructions, right? In a set of time inside of the fractal of, in my world, 4 15-minute candles inside of one 1 hour candle. That's 4/4 of an hour. So it's just the same way I treat a yearly chart, right? 4/4 in that yearly chart. It's the same way, right? So once I have that vision and I practiced through that 1 hour fractalization, because then once you go to a 1 minute chart inside of that 15-minute candle and you know how specifics happen, like if a candle runs above the previous candle high and then breaks its opening price and the candle's flipping, and then breaks the opening price of that previous 15-minute candle, it's now run buy side and it's shifting and changing in its state of delivery on that just 2 15-minute candle transaction, right? So the next 15-minute candle you're on that wick because it takes 3 candles to make a swing point. But then when you go inside the fractal and you're looking at that wick highlighted across, you can see that there's an imbalance in relatively equal highs. So it runs up on those relatively equal eyes, showing you Caleb's model that he always shows you to look for. Once that's purged, it's not going to take the high because it's respecting the previous candle's delivery sequence, right? It's already run the highs. It's making the swing point now. So CE is the salient point. So on a 1 minute chart, you just need to draw that CE of that previous or the lower portion. You can put the 25 and CE on there and watch when the 1 minute starts to come up there. Once you get it, 2022 model, and look for your either inversion fair value gap, if that's what you like, or breaker sequence, if that's what you like, or if you can't find that, you wait for the fair value gap because that's going to be your next leg of distribution, right? Stage 2, low risk sell, low risk buy, so to speak. But these phrases, these phases and phrases. So even when you're on a 1 hour chart and you see the previous 1 hour chart on a 1 hour chart, 1 hour candle runs down on a previous session liquidity and then closes. And that next 1 hour candle runs down respecting the wick of the previous 1 hour candle and flips and breaks above now that opening price. Well, now you're on a buy side of the curve. It's flipping. So now your 1 hour candle's giving you that structured information to where you're looking down inside the fractal, the 15 or the 5, right? Because delivery is now taking session liquidity and you can look for the other side of the curve if you're at the right time, right? And those key components are fractalized based on looking at a month, time-based delivery, same thing, right? Because I'm looking at a specific portion of time inside of that fractal. So I can apply that context, that framework on any time frame. For me, I do it through a 3-year, 1 year, and then I look at the 1 year and then the quarters inside of that, and then 1 month or the quarters in on the 1 month chart, right? So I'm always fractalizing it, knowing at which phase am I at in my next delivery. Because once I find that one salient higher time frame phase and I go down 2 time frames, I'm set. I'm like, all right, I'm in there like swimwear. I know where I'm at. I know what's going on. I know where the framework is. I know what my dealing range is. I know what I'm anticipating. Like, you see a yearly fair value gap. Come on, man. Like, it's an impulse with a fair value gap. So you're looking at that opening price where candle broke above that down candle to create that gap. It's coming back down to fill that imbalance. So that price is salient, right? So it's like nothing new under the sun, so to speak. Like, price moves from inefficiencies toward liquidity, right? And it utilizes order blocks and fair value gaps to do this. Order blocks being a mitigation block, order blocks being a breaker block, order blocks being a suspension block, order blocks being that all these different types of things that he's told us to describe us to give us narrative and context, right? But the understanding comes from how price is always engaging through the same delivery sequence because there's nothing new under the sun. If you really understand the things that he teaches us, then it's by definition, right? It's by definition of what it is. And then going back and taking those words and what he's talking about and playing with that, right? Not just taking it as, oh yeah, he said this. No, because from that, it's just man's knowledge. I want this information so I can go in and make it my own. So I believe it, not because someone else said it. So it takes some time and where you play with it a little bit, but you have to know that like this serves you and that it saves so much wasted energy because you're going to have to spend time with whatever you're going to learn, so you might as well learn something that actually works and is accurate and actually is very, very in tune with the harmonics, not only life but market delivery. Like it's the, in my world, the thing that there's no one that could take me out of that. You know, when I see something specific happening on any time frame, like April 24th, when I saw that happen, I had a vision on what was happening because I know that an order block exists at 50%. So when I take the previous delivery sequence from low to high and look where it was pulling back to on a yearly candle, was just sweeping previous yearly lows on in April. But if I looked at the full protraction, there was a 3 candle monthly order block there, 3 monthly candles. Dun, dun, dun. That's the order block the market makers leave at or near 50% before the next leg of expansion, right? Because I understand my different phases of delivery and how price moves, right? We all do. Expands, see some consolidation, retracement, little razzle dazzle down there in discount, re-expansion back up for premium prices, right? It's how it moves, right? Oscillations. Nothing new under the sun. It has that, but that back and forth, that what I call the razzle dazzle or the shake and bake, they get down there just trying to shake us out, right? But it's always doing that same level of consolidation, that same thing over and over again. He used to have a video a long time ago. It was called the ATM model. He took it down. I wish he would have put. I wish he'd put that video back up on his YouTube. But
Ooh, that's a good one. The ATM. You mean it's not on there anymore?
no, it was called the ATM. I used to watch it a lot because that's where I got the razzle dazzle from. I was just like, man, this is it. Because it's literally like what you see is it's an accumulation and then it runs one side, runs the other side, and it doesn't run the other side again. It now uses that as the breaker or the mitigation block and then just, dumps. And you just see it's like a manipulation candle taking both sides, and then the next candle respects the wick and then dumps down, so to speak. But so just giving in context, like the afternoon sell off here in Nasdaq, right? Like where did that come? Where was that coming from? Large impulse there at lunch, through the lunch liquidity, right? Coming at the PM open. And then we come up into a higher time frame PD array. Well, what are we reaching up to? Well, if you look back to what is that? September 18th. That's an imbalance. Why would you look that far back? Because I'm looking at a monthly fractal. So it's the same thing as if it were like the beginning of last hour, right? It's just the same thing. We reach up into that, tags the opening price of what day was that? Wednesday, right? And it's happening from the start of the hour, 2 o'clock, to 3 o'clock. The middle of that's 30, right? So that's 50%. In breaking that time down in half, first half of the hour was buy side, 15-minute change starts changing. Now it's coming into sell side with the macro at my back, like the sail, like the wind in my sails, and it blows down through that imbalance, reaccumulates back up. Right now, you come to my three favorites, right? 250 to 310, then the 315 to 345, and then the 350 to the 410. Right, so you got the end of day. That's the 315 to the 345, and
I
then the
love that
market on
macro,
close.
bro. I
Yeah.
fucking love that macro.
Because it's for me, my mind's already thinking 15-minute candle, right? So I'm always looking at where's a 15-minute open, because one corresponds with an hour, one corresponds with a 30-minute, right? So that coincides if I'm looking for
So
that
I,
buy
I
side, sell
love
side hour.
I love what you're
Mhm.
saying with a 15, and I try and take exactly what you said and kind of follow what ICT says with an open range. So
Yeah.
if that is the case, he is saying the first 30 minutes. So if he's saying the first 30 minutes, then order 15 minutes in an hour, 30 minutes would be 2 hours. 2 hours happens to be my personal favorite intraday range to trade. So everything that you're saying fractalizes for me just in doubling what you're saying. So
Yeah.
when people are looking at the first 15, that's awesome. When we get kind of large compressed ranges like we had a 3-hour doji, then that 3-hour doji, you're going to see the 2 hours of equilibrium, the two-hour ranges that didn't have equilibrium taken, and the volume imbalance that was at the 730 range, that becomes more obvious. And then you would, as I had mentioned in my live stream, I wasn't interested in the high quarter of the fair value gap of that 730 FEG for have enough volume, and for two, it wasn't discount enough. right? Like there wasn't enough to, and so I was saying, you know, as a buyer, and you understand this focus, we've had this conversation literally face to face. Like when you're really in the market, being a savvy buyer or seller really, really, really is a thing. And a savvy buyer or seller is constantly framing things in premium and discount. And when we see things that are at just below 50%, you're like, yes, that's in discount. But a savvy buyer is that's premature,
Yeah.
because it deserves, again, with the imbalance below, if the liquidity, and this is, I'm referring to NQ specifically, and the
Sure.
compressed range between 9:30, 10:30, 11:30, into, I mean, 10:30, around 10:30 was, yeah, 10:37 was the turtle soup entry. I called that on the live stream. And then I think at 11, at the first hour, within 11, we came back and revisited that range within the high, within a reaccumulation after the turtle soup, before we got the expansion up and out and inversion. But point being, identifying that range, being able to identify that range, the 30 minutes, and everything that you're saying, focus. I'm just trying to take what you're saying and apply it to what ICT is teaching. When he refers to the first 30 minutes, you can utilize that as a quarter. And then your 30 minutes are going to be literally, if you want to move within the market and 30 minutes is Q1, and you're really looking for an accumulation and manipulation, that's going to literally put you into the first hour before you're into Q3, going into Q4 for a distribution. So you're typically not looking for a distribution until between 10:30 and 11 o'clock. How often, if you're looking at New York, does that actually occur? You'll find it's very often. And I know you know this, focus. I'm not saying this to you, obviously. I know you know. I'm saying it to the listener. But if you wanted to reiterate that, I mean, the value of a P120 and everything that you're saying on an hourly for the listener, if they were to go back and look at what and how to frame the liquidity paradigm within blocks of 2, then you have a 2 hour and a 4 hour and a 6 hour and an 8 hour really quickly. And when you're looking at a 2 or a 3 candle swing, then you're literally, someone's like, well, why do you look at 360? Well, I look at 360 because that's your 3 candles within a 2 hour swing, with your quarters coming in 30 minutes. And to focus this point, you're looking for a wick on the first quarter or the last quarter off of your open, right? Do you want to touch on that point at all, focus?
I mean, I keep it simple for myself in the sense like I can't, go to a lot of these different crazy time frames because it's literally just coming back to very specific salient
Right.
points on the daily
Understood.
chart.
Understood.
So like the salient point, like if you're studying what he's taught in his live, like I literally watch one of his live streams every single night. Like it's part of my daily routine, and I have been for I don't even know the past year and a half ever. Like every single night I'm watching something again, watching his delivery. Like I've got a literal Discord that I created for myself that's got nothing but notes going back through every single execution video that he's done that I've watched and rewatched, and adding new notes and looking at specific things, because as my eyes get keener, I start to pick up on things that he was doing that I didn't see before. Right. So I go back and rewatch these things to be able to see specific things, because again, there's nothing new under the sun. So when I'm living on a daily chart, I can see those very specific things that he was doing on a 1 minute chart and why he was doing it. It's right there staring me in my face. So I try to keep myself, because I'm already on such a higher time frame and perspective, and I have an understanding and a direction on where I'm anticipating the weekly and the daily to go, that living inside the liquidity paradigm from there, if I'm trying to swing something, like I get my directional bias for the day, and then I step to the liquidity paradigm, looking at session liquidity and where I'm there. Because if, like I said, if I'm using candles themselves, getting outside of narrative, right? I know liquidity is engaged, and then from there, the market maker models start. And it has to purge liquidity first, because in that purging of liquidity, it's going to start the sequence of one, the creation of an order block, right? Down close candles, and then impulse is higher to take that liquidity. Well, it's creating that down close candle, so it's creating the order block for it to now utilize on the other side of the curve. So once it runs that liquidity, that inversion fair value gap that's created, price will most of the time, not all the time, most of the time, come back to that very salient point of inversion where that happened. And if you look back, you'll notice that there will be a fractal 3 candle swing involving small that you might not have a swing point on the 1 minute, but there'll be a series of candles there. And on a fractal would just simply be that up candle before the breakdown, and that fair value gap's created. So you're looking at that inversion. You said that specifically. If the inversion's not there, you use the breaker. That's the same on every time frame. That's the same on every sequence. It's based delivery, and nothing changes with how it delivers. So when you go back and you look for specifics on where I should enter, because that's going to mitigate not only how much I'm risking, but it's also going to mitigate how much I'm making. Because the better entry I can get, right, the more profits I can make, but also the amount of risk that I can bring down. But that comes through not confidence, comprehension. It's not that I'm confident every time I get into a trade. It doesn't mean I'm going to win. But when my comprehension of what's happening is high, I don't even need confidence because it's like it's right there in my face. And that just is time and time and time for me watching why he's doing that. I posted a video on my Twitter and it's relating to Kung Fu, and it talks about different ways people and would adopt mentalities on learning things. And it's a great video if you want to take that and use it as an analogy to trading, because the fundamentals in everything dictate everything. Right?
Hey, focus.
Yeah.
Someone asked a question. Maddie asked a question
Right.
specifically, and I think it's a great question. He goes, focus. Can you go over how you break down the hourly into 4 quarters on a 15 minutes? How do you apply OHLC or AMD for entries?
Okay.
Which is a
Okay.
great question because I interrupted you as you were explaining it. So pretty please.
No, it's yeah, I'll go over it. So first off, like I said, whenever I'm framing time-based delivery, the most salient point is the open, because the open is fair value in time. It's the fairest value. That's when it started. Boom, this is the offering. And then from there, it either delivers higher or delivers lower, right? So with that context, if I'm bearish, I want to be selling above the opening price, right? If I'm bullish, I want to be buying below the opening price, because you're becoming the wick, right? On any time frame. But if you frame it on a 4 hour, then obviously anything that's happening above that, right, is in the potential of making some type of market maker sell model to come back down. And same thing on the hour. If it's taping the previous hour high, then it has the potential to be taking some form of liquidity to be coming back down, right? So those market maker models, that opening price is very, very salient. Now, when I'm looking at time, I know that as he's taught, the macro is a very set series of events that happens in time, right? And it is either running for liquidity or it is efficiencies, one of those two. So if I can put on my back the fact that I'm looking at an hourly chart, I say put on my back, like I'm looking at the hourly chart, it's already done this thing that I'm looking for and it's changing. So now this next 1 hour candle, I want to see the wick up. So anything above that opening price, you can look at the previous hour, because the previous hour, if you take a fib to that from high to low, 50%, right? Same idea as you would take any dealing range. Where's 50% of that previous 1 hour candle, right? Because in continuation models, it has a very, very, very high potential of not breaching. It's touching that 50%, because like I told you before, in his market maker, in his delivery series sequence, he says that the market makers will leave the order block at or near equilibrium. So as it comes in the new hour, reaching back up into the previous hour's 50%, and say that previous hour is the one that's changing in its delivery. So now you're getting a new candle up, retracement, right? Offering fair value. You're selling above the opening price. So the first 15-minute candle might come up. Then the second 15-minute candle starts to consolidate. Then it purges and then reverts, right? So now you've got that razzle dazzle, that breaker sequence is down on a lower time frame. On a 15-minute candle, you're just taking the previous 15-minute candle high. On a 1 hour chart, you're just coming up to retest 50% of the previous 1 hour candle body. So from that framework now, and understanding of you want to see it now start delivering back towards that opening price, whether it be the PM open price, the 4 hour, 2 o'clock, 10 a.m., 9:30, whatever. Anything above that is premium, anything below that is discount. So you want to see it delivered back to that. And then whatever PD array you're looking for, because you're obviously now scrolling back in time and looking before that time-based delivery sequence happened, where's the liquidity, where's the inefficiency for it to deliver down to, right? And I always believe math be mathin'. So if I can find that, where's that manipulation that happened, and I can gauge it, show me 2, 2.5, excuse me, 2, 2.25, and 2.5, specifically 2 and 2.5, and I just break it in the so I can see the midpoint of that, and then 4 and 5 and break half, so 4.5. So if I can find the manipulation, just like out here in the world, if I pull an arrow back, that's what dictates how far it can fly. Physics, right? Like I apply the law of thermodynamics. There's nothing new under the sun, right? An object in motion stays in motion unless it's met by an equal or greater force. Energy cannot be created or destroyed. It's simply transferred from one object to another, right? So how these things apply in the charts to me is that sequence of the liquidity being engaged above that previous 15 and rebalancing of the previous hour, then starts to deliver down. 5 minute and 1 minute, you'll start to see change in the state of delivery. 1 minute chart, you'll start to see that inversion. 30-second chart, you'll start to see the full market maker model breaking down. Then once you get that first delivery down with the impulse on the 1 minute chart, right, now you can right, the last 15-minute candle of the hour. Anything above that 45 open price, you're looking to sell because you believe now the macro is going to do what it's instructed to do, which is in the view in which you're trying to see price at that moment, it's supposed to deliver for sell side. So the sale should be at your back now, and it should just come through and now deliver down because you're selling above that fair value opening price towards whatever delivery you're looking for that hour. And suddenly the hour flips, maybe takes the previous hour low because it hadn't taken that yet. So that's sell side. So it reached up to 50% of the previous 1 hour candle. Now it's taking the liquidity below the previous 1 hour candle and then reaches a little bit further for whatever PD array or whatever is over there. Maybe it's a gap or some more liquidity for some external delivery versus, from where it was internally delivering. So that kind of walks through a 1 hour in price. You can do the same thing on a 4 hour or a 3 hour, specifically a 3 hour, but you can do the same type of idea. Like for me, it's just keeping that the simple same thing, because I know that biologically I have this mechanism in my brain that can see patterns, right? So, like, if I can teach myself not to see a breaker or not to see an imbalance or not to, but to see a time based delivery based on very specific things, when you go to the higher time frames, it's the same exact thing. The level will stand out to you like a sore thumb because you've already seen it on the delivery, like I just described, so many times. So many times, and it's literally like what's about to happen. I don't like to use the word no. You're in such harmony with how it's being delivered that it's understood what's next. Like there's not even a question, you know. Um, but yeah, I hope that kind of went in depth
Yeah,
there.
I
But
think that was phenomenal. That was very, very good. And this is recorded. It's 5:05. I like the time. This is recorded, and folks can go back and listen. They can sharpen their pencils and they can listen to what Focus had to say. There are some hands up. I believe we have some follow up questions here. So, Cephix had his hand up first, and then Trader Telly. But Cephix, what's up, G?
Yo, I completely forgot what I wanted to say initially, but it doesn't matter because yeah, but it doesn't matter because I mean I'm leaving with more than I came with. So yeah, I just wanted to when PP mentioned the overlaying of ranges in the consolidation, where you call it a primary range, and then you go lower and you find the dealing range, and then you overlay those ranges using the concept of premium in the consolidation, not like a regular range. Now, and you overlay those ranges, and you kind of like stack confluences in terms of ranges in a way. I never really thought of it like that, because usually when I see consolidations and I'm like, wow, this is not really moving away. It's not going anywhere. I tend to just run away because my motto, not generally my motto, but the way I trade, like I don't do well in consolidations, and I get itchy hands.
What's interesting in what Pippi said, and to your point in observation or further observation, is you can stack accumulations, which is what Pippi was saying. And if you want to really trade an accumulation, being able to identify an accumulation and then a reaccumulation and then a reaccumulation within those accumulations and time-based accumulations, you're going to be able to find and or identify specific highs and then trade to those lows. So what Pippi is stating, telling you, explaining to you, is that. And it's kind of interesting when you look at accumulations actually as having their own phase. Like you can have more than one accumulation phase if you listen closely to what Pippi said. And that's kind of interesting. It's kind of interesting.
Yeah, that's another thing too, because one thing I realized pretty quickly once I started like going into the markets live was, when I first started learning Power 3 AMD opening prices, OHLC, blah blah blah. When I first started learning all that, and that was in January, by the way, I quickly realized that after A, you don't just get M. You could get A, you could get 5 A's in a row, and you could get 5 M's in a row. Heck, you could get a manipulation, and the distribution that you thought was a manipulation, but that's a manipulation too. And at the end of the day, what I realized is, looking at the market in like kind of like a straight jacket kind of way, just tunnel vision, and you're just looking at it. Oh, so I expected to do this, then it'll do this, or if I do this, then it'll do this. Was kind of it bottlenecked my read on price, because in a way it just became pattern trading, because I was using the right concepts, but I was completely using the wrong process. So
Okay.
yeah, so it was like I'm the right thing, but I'm not doing it in the right order. And some things that I'm supposed to check, I'm not really checking. I'm just going in. I'm like, oh, so we're here now, so we should be going there next. And that was
Bars.
like, it was horrendous. And again, coming back to how this ties to like my whole journey and stuff. My entire goal this year was to become like consistent, because making money trading wasn't the goal. Like I've made money trading meme coins, I've made money gambling, I've made money from a lot of things, but it always went away quickly. Like I make it, it's gone. I make it, it's gone. And that's like boom bust type thing with meme coins and stuff like that. It kind of takes a toll on your mental, you know, mental whole health and stuff. So I really wanted to like take things slow and actually build the consistency and the habits and the discipline to like have a stable equity curve. And that's been my entire goal. And I'm working towards it. I'm, building indicators that will help me do that, because again, I think I mentioned this before. I get thrown off when there's a lot of things I have to watch. And it's like my brain starts to itch and I can't scratch it because it's in my skull. And
I like that. That's a good way of putting it.
yeah, so that's pretty much all. Um, the focus, the process. One thing I would give, I don't even know if I'm qualified to give tips. One thing I would give to anyone who's like trying to study this for the first time or you're new to it, try to take like a sticky note and list out the things that you would want to see before you want to even touch, you know, a buy or a sell or even have a bias.
Yeah, that's a
And
good
then
thing to say.
because like
And
the
and we would
process,
actually define that as parameters. So
yeah,
what you're doing is you are identifying specific, and usually we call these things fixed constants, but you're applying parameters and you're identifying fixed constants within the framework, within the model, within the way in which you're looking to engage with price.
yeah. So like with code, like if you're coding and you have something like you want to code a function, right? You gotta pass specific variables into that function so you can have the function do some calculation and then give you a result. So, one thing I realized after I like actually sat down to make a flow chart of my model and make a chart of my process and what exactly is it I'm doing. I wanted to put it on paper. I realized that I wasn't, there's a lot of steps I was skipping in the function. And the function was basically just taking in input, wasn't really processing it, and was just giving me back almost completely unprocessed information, just like I put it in. And of course, as you would know, it would be very inconsistent because as the market is not, you can't just go in every day and the head and shoulder. It has a way of randomizing, but not being random, if you know what I mean. Because it's not random, but it has a way of shuffling it around. And if you don't have a specific process that could be unique to you on how you would come into the marketplace and look at specific things and say, okay, based on this and this, I want to be doing this. And if this doesn't happen, well, I don't really know. So I don't want to engaging it live. So I would tape read, I would watch it, and I would allow it play out. That's something that ICT says too. You don't always have to push the button. You could just watch. No paper, no demo, just watch. And that's something I've done. Like I do that a
Oh
lot
yeah. I mean,
now.
that helps to build
I do
patience
that a lot now
and
because
wanting to see certain things happen. I said that today even in the live stream, like when we swept that 820 high this morning, knowing that we were going to be purging and taking lows afterwards. If that's not your trade, then you want to watch it and you want to watch it and you want to see what happens. And commonly when you're reading price, like you want to kind of call out these legs. So you want to say, if this happens, then that, right? Or if we sweep this high, then I want to see us take that, the inefficiency below the 730 price.
yep, and you can nest those kind of ifs. You can nest it and put some filters behind something. So, like, for example, in today's market, in today's price action, I was looking at all three of the assets. I was looking at NQ, ES, and YM. And before
That just
9:30,
blows my mind. I try and do that. Honestly, I do. I have a hard time. I really have a hard time with
I
SMT.
don't look at a lot of things, so it's fairly easier for me. I just focus on a few things. I focus on midnight opening range, 7:30, opening prices, new week opening gaps, SMT, order blocks. Like after a change instead of delivery, and I'm done. That's basically it. I don't look at a lot of things, so it really helps
No,
me
right
kind of
on.
like
That's cool.
narrow
Yeah.
down. So I was looking at all three, and I noticed that okay, YM specifically was trading out of a new week opening gap above the midnight opening price. NQ and ES were also above the midnight opening price, but they were accepting a similar new week opening gap. So it wasn't trading out of it like YM was. I don't know if this won't really make sense, but like this is today's chart. This is today's price action, and I was
Yeah, no, I
actually there.
mean we're
I was
midnight
actually in the
on
market live.
NQ, midnight and 830 we're really close to each other. And then when we opened up, you can kind of see where it was. So yeah, I mean a lot of folks were staring at the chart there of what you're saying for sure. I mean, it depends on what they were
Yes. So
trading.
I was like,
But
I was when 9:30 opened, and I saw NQ start to like chop around. It wasn't really giving me anything. There was
yeah,
no SMT because
there's
I'm
nothing.
a big fan of SMT. Like I'm
Okay,
a
that's cool.
big fan of SMT,
I
and there
love
wasn't
I
really
love
any
that
good.
there are so many people that are super passionate about it.
Yeah.
Can I say something about the
Yeah, jump
SMT?
in about SMT. That's cool.
Okay, I think there's everybody has different names on ICT. For SMT, ICT literally said the what do you think SMT stand for? If we
We
can like
we've
convert,
already he's already gone over
Well,
summarize,
that, bro.
um, just
he
to
did.
like give a tiny overview on that. SMT basically is just an abbreviation. The concept itself, divergence in price movement.
Yep.
And this divergence is used across a lot of things. Like before I started learning ICT, when I used
Yeah,
to play
but
with meme coins, I used to play with divergences on RSI, MACD, the regular bullshit, right? Stochastic, those divergences. And yeah, sometimes they work, but not really when you're playing with something that has like low market cap and you're on the 1 minute chart. Those kind of like degenerate kind of action. You would lose your mind doing that. And I did that. And, you know, yeah, that's technically also SMT of some sort. But the way ICT teaches it, the way he teaches to use it intraday from specific levels, from new week opening gaps, out of an order block, out of a daily, sorry, not daily, look back ring, like the previous monthly quadrants. I have a video on YouTube about those quadrants, and That was before the week started, and I was bullish before the week started. I flipped my bias to bearish because we accepted the pitch, right? And we started to drop lower. What was at the 0.5 range? FMT with what? YM. And I posted on Twitter, and I'm like, yo, before this week started, I posted on Sunday on my Twitter. And I was like, hey, we're going lower. We're going to test that new week opening gap. Like we're really looking to test that new week opening gap before we see new all-time highs. I had no idea about NVIDIA earnings or whatever, right? And then, I see some people like, oh, NVIDIA earnings this, NVIDIA earnings that. But I know that it really isn't the earnings, and it kind of sounds ignorant, and it kind of sounds like, I'm kind of being pompous or being arrogant. How can I say that the earnings have nothing to do with it? But it seems that way because I've seen this over and over again.
I
And if
mean,
you're going to come and tell me,
it's fractal delivery, and we had signs early within the week that these bullish impulses were getting destroyed. And
yeah,
there's really
it was
no
just
other
getting
way of
run.
putting it that every time that the bulls came into the market, the bears not only took out their stop, they drove. Like they said, you cannot hold this. If you hold this, you are going to get margin called. And the way in which price was just so torturous towards a bull, and a bull who might have
Yep.
held through their stop, to me was, with November, this entire month being bearish. And more importantly, I mentioned in the live stream, and I do believe the October 10th order block has been holding up the market. So when Tuesday hit the CE, that OB, then the inefficient side, the 50% and below, became salient within our weekly profile. So I had mentioned that in the live stream, and the October 10th really, and I couldn't believe within the 7 hour how strong we came within that distribution on a Thursday, the 4% that we dropped. It was amazing. We have some hands up. We got a lot of
Quickly, I have a question for you.
Okay. I was like, wait, hold on. We got a lot of folks here. But
Oh, I got.
hands are up. If you're here, I want to hear about your week. Trades are, or questions are good. Focus has had some really good topics. Trader Telly has had his hand up, patiently waiting. We've had our good friend Batman come up, who was very excited last time. Drop some very good, interesting ideas along with the MMXM. Focus has been talking about the hourly range in the first quarter, and where and
Yeah,
how.
I wanted to say one thing.
Yeah,
Not
feel
not
free, bro. I
nothing.
was just trying to give a little recap and,
Yeah,
and re.
I posted some charts in there, so I want context to this conversation, right? Like the things I'm saying, like unless people are looking at the things I'm saying, I don't know that they're looking at the things I'm saying. So like I posted some charts in there so they could see the very specifics on the three trades I was talking about, specifically the one with an FP, and why that short from the order block and inefficiency coming down from previous month's EQ to previous month's low for liquidity, which was at 25% of the current yearly candle. So it's just retraced 25% off its yearly high. And then the two trades, the one trade this morning, utilizing the inefficiencies, it took AM buy side, and then first presentation using that to get short to target the AM session sell side liquidity. And then the trade that I talked about for the PM session that I was referring to on how I fractalized that hour. So I've got the 2 and the 3 with the red lines there. You see the first half, it comes up, and then we start to get the breakdown, and that inversion, like how I was talking about, is where that was where I got short. So that gave me my delimiter on my risk profile. And then from there, I'm looking for CE of the gap, and then 2 standards was where the 361 price came from, and then held down with the draw being first presentation, closing out there right at the 350 macro as it purged down. So I just wanted to give context to that so people could see that, the things I was putting out there just kind of don't go out into the ether. Like I want them to see this next to the salience and how it's doing these very specific things based on that time-based delivery. But yeah, that's it, Kit.
I love that. I want to just add too, within my own study of the first presentation fair value gap, the spacing and the measuring and the utility of a fib within. I mean, I've been looking at the first presentation a lot within the context of of a weekly profile, not just a daily profile. So I am really inviting the conversation within the community of where and how you're finding and utilizing the first presentation fair value gap. For me here on Front Street as a host in live streaming, it's a new array for me. I don't know 100%. Again, it's not that I don't know because ICT explains it, but it's still up to us, the traders, to find ways in which to really trust and honor and utilize that fair value gap and the timings that you're coming in and how you utilize it. Again, I just love it as a topic of conversation. It is literally the mentorship that we're going through, that we're all learning, and I know that feedback is very important. So Trader Telly, welcome to Trader
Yes.
Roundup. What's going on, brother? I know you had your hand up. Any thoughts on the conversation at hand? Market maker models. We're talking. I'd like to hear thoughts on your first presentation fair value gap. Just kind of talking, having fun, talking models, and I think feedback is really important.
Yes. No. I didn't actually mark out the first presentation value gap, fair value gap today. However, I did have previous first presented fair value gaps on my chart, and it just so happened that one of them aligned with 25% of the range of the BISI on the 4 hour candle.
Which first presentation are you using? Because that
Uh,
also adds to the study. I know he references and refers to the New York 930. I'm a London-based trader, so I'm naturally applying these concepts to the London-based ranges that I trade. But Trader Telly, your thoughts, 2 cents.
yeah, I would have to pull up my. Let me pull it up on the chart right now. That was from the first presented fair value gap on October 14th.
October 14th. That was October 10th. October 14th. Was that a Wednesday? I believe. Was that a Wednesday?
I don't know.
Okay.
It's just there on my chart. Yeah.
No, go ahead. It's no big deal.
But what I really wanted to talk about was the fact that I remember a time when I would join peace, and I could not keep up with a lot of the things that you guys were saying and sharing. And fast forward 3 years later, when I listened to Focus, um, I mean, I had my eyes closed, and it was almost as if I was in a trance because I could pull up the images of what he was describing in terms of his process and the setup, and I could visualize what was happening in replay in the market today, and to just reflect on that a bit. I just think that it's so profound to have gone through a process of just learning and digging deep and putting in the time, putting in the effort, putting in the study, and coming out on the other end, being able to at least keep up with the class, if you will. I just think it's remarkable. And if anyone in this space can do it, please go back and take a clip of what Focus shared today, and feel free to put some meditative music in the background and post that on YouTube,
I'm
because
I'm like
I would.
frantically trying to do just that. I'm trying to take, and I say frantically, there's so much good content within Trader Roundup, and we've just kind of left it available to folks who want to find it. And but actually trying to make it a point to clip and cut and edit. It's a process, it's work, but it's
Yeah,
something I am trying to do because a lot of people do ask, and there's just a lot of very good, valuable content that deserves to be redelivered, rebrought to. So that's like one of the things I'm really passionate about, and one of the things I'm trying to do on YouTube specifically. So just for what it's worth,
yeah,
I get a
yeah,
lot of questions and a lot of folks that ask, where can I find this? Where can I find this? Spotify has a Trader Roundup. It is linked to this very specific Twitter account, and you can go back and listen to those. And I am just as a host and whatever, trying to process more information over to YouTube because I know you as the community are asking for me to do that. So I value and appreciate the feedback personally on that front. Back to the conversation, concepts, ICT concepts, what you're using, you, the community, we are looking for feedback. What are you using? What do you like? What's hot for me personally as a study is the first Prezi. I like trying to utilize the quarters and align where these are lining up. And I like trying to see them in a little more of a kind of weekly profile. That's me. That's my study. I don't have a right or wrong answer because again, this is not my concept. I am just someone exploring ways in which I can utilize it myself. So this is new. So I don't have as much data on it as I do other concepts that I can, stand on, talk intelligently about. But we're here and we're looking for feedback. Your thoughts, 2 cents. What are you learning from the mentorship? What do you like? How are you seeing price? Thoughts, 2 cents. Pippi, Focus, Dom, Trader Tully, Zixet FX, Cephix, ICT Titan, Nakshra, how's your English, buddy? You want to jump in here? Nakshra Trades, Nav M33. I like the number. You there, buddy? Sitting at a swimming pool. Rant. You're blue balling me here, Bo. But Zix said I can come to you in just a second. ICT Titan, are you there? Trading Titan, ICT _ Titan.
Yep. Can you hear me?
I can hear you great, brother. What do you got? What do you got for us?
Yeah, the suffix just told, and I was just back testing that one. Yeah, and I saw some. Just
Okay, so real quick, where are you from? How long have you been trading?
I'm from Minnesota.
Right,
I'm from
Minnesota.
Yep.
Minnesota. You like cheese then? Yummy.
Yep. And yeah, I studied.
How old are you, brother? And how long have you been trading?
I am 2, and
Okay.
I have been studying ICT since 2022. Yep.
Excellent. You are a very good avatar, a very good person that can provide feedback.
Yep.
What have you really identified within listening to, watching, studying ICT and his YouTube channel?
I would say ICT is about precision that you can get through an entry, through exit, which are very tough for me to get the perfect exits. But there were some measures I tried, and I have been saying to myself that maybe I'm not in following of Enigma, but that felt to me as a personal viewpoint through analysis, and I found some great insight through measures of swings, through deviations, and through the time, and that's how I found precision in the market, even to the
Okay, like what range do you like? Do you like the open range? Are you looking at the first 30 minutes? Are you a fair value gap guy? What time are you trading? What session do you like to trade? Come on, buddy. Jump in here. Come on, don't blue ball me here. Wah, wah, wah. Dead space. We don't like that in a space like this, okay? Got to kind of keep talking, keep it going, keep it flowing. Otherwise, right?
Oh, I was muted. Sorry. Oh shoot,
He's
was
like, I'm having
muted.
a very in-depth intellectual conversation with you. It's just no one can hear me.
Where was I? What was the last
Where
thing
were
you
you?
heard?
I have no clue what you were saying, so you could start over.
So yeah, my favorite is New York, and
Okay.
I trade to the 9:30 to 11. 11 is a max. I don't go beyond that. If till 11 it's consolidated, I go through the PM. I just was then PM. I don't want to mess with the AM then. So but most of the time I do with the AM, and I start with the over a bias, and first thing after the quick measures to my bias is first presented fair value gap.
Ooh, how are you using the first presentation fair value gap? Which one are you using? Please tell us more.
Only after 9. So
Okay.
if it is in 9:30, I don't I don't take any trades through that. But if after 9:30, I'm watching that, like really, really watching that. And then if my whole range is under the discounts, and I'm watching, there is a key levels on the left, like, and then through that
Like
the
your key
even.
levels, when you refer to key levels, are you looking at specific times? Are you looking at liquidity points? Are you looking for specific swing lows pre-market? Like we had a pre-market swing high today at 820. That was
Mhm.
very salient to when that swing high got taken. I mean, the market really dropped for a few hours in a real high resistance towards that 730 imbalance, right?
Yep, yep. And one thing to the reversal, because it's very tough to go through the reversal if it is in a downtrend, like simply downtrend. And if you are watching reversal, I go the purging thing happens, which the equal lows or equal highs that gets purged through displacement. And if that displacement even match with my um, first present a fair value, and if it gets inversion, then that's my point right there.
Okay, so you're a purge and revert. You're an
Mhm.
IFEG. It's all okay. So
INTG,
wait,
but
so your market maker model. First off, let's look at
uh-huh.
your let's layer your concepts here. You're,
Okay.
you're in a 2022 window, right?
Mm-hmm.
Are you're showing up at 8:30, or are you waiting until 9:30? Just curious.
I'm starting through 9
Okay,
a.m.
9
So
9
I'm
a.m.
watching.
9 a.m. is when you're coming in, so you're right
Yep.
around the 2022 kind of kill zone, right between
Mm-hmm.
between 8:30 and 11:15. Okay,
Mm-hmm.
so you're looking for a purge and revert. So do you want to see a market structure or just a sweep on liquidity? Do you want to see a
I
market structure shift completely or a sweep on liquidity? What's your trigger?
So my trigger is the first 5 minute inversion. That's my.
Oh, I like that. I like that. So the
And then
inversion, but what's happening? Are you getting a big sweep? Are you getting like a
yes,
large
yes.
wick? Are you getting like what's happening? Is it
On a higher time frame, it's a week. It's total week.
okay?
But on a under the 5 minutes and 1 minute, there is some structure that you see. You see some displacements. You see some fair value gap over there. And if that's our first presented fair value gap, top notch right there. But if not, look to the left. If there is an equal lows that just been taken right
So
now.
equal lows to the left. You like seeing engineered. I like this conversation,
Yes.
my friend. What time frame? So
Mhm.
you like something maybe around 7 pre-market, right? Pre-market
Yes,
the
sir.
way he's taught it in 2024, right? 2024 going into 2025. You're mapping
Mm-hmm.
out your minor sell side
Yep.
and your
Mm-hmm.
minor buy side. Is that correct?
Yes,
All
yes,
right,
yes,
all
yes.
right, all right. I like
I
it. I
want to
like where you're
see.
going, buddy. I like this.
I want to see some engineered liquidity before any like a big displacement to the reversal. So if I'm going to the reversal now, I want something on a left engineered and then confuse them, right? And then chop them and then take a turn right there. And
Okay,
if
so
5 minute,
you like seeing the turtle soup happen on the engineered liquidity, and then
yes,
you're looking
yes,
for if
yes,
on a
yes.
buy side, you're looking for the SIBI to invert.
Not the CV to invert, but the I don't want. I'm targeting the liquidity, not the again the.
Are you in a buy model or sell model? I'm sorry.
Now I'm on a buy model.
Okay, so you're in a buy model, but you're not looking for the SIBI to invert from the
CB
left.
to, oh yes, CB to invert. Yes, CB to invert. Yes.
Okay, that's
Mhm.
okay. So we said that correctly. You want to
Yes.
trade on the inversion, then you want to see the turtle soup, and then you want to
Hmm.
see the bullish candles come up and
Yes.
and and take over some of the bearish down close candles. Right. That's the
Yep.
beginning of your change in the state of delivery. Is that correct, young man?
Yes, sir.
All right, I
That
like it. I like it. I like it.
and then that's now I want to touch with the macros right here. If it is in
Boy,
the
he
macro,
said the
then
macros.
hmm
So you
then
noticed that 950 took the 820 buy side on NQ today, right?
hmm
At 950 on the dot. And then
yes.
so it swept liquidity. It took the very first on NQ today. It was absolutely beautiful how they were engineering liquidity, and they didn't
Yep.
do anything until 950. Like
Hmm.
there's really no liquidity taken at all. Like pre-market buy side minor or
Hmm.
the minor buy side and sell side
Yep.
established. I mean, 730 gave that huge FEG, and it was funny because I was talking on the live stream, and a lot of
Uh-huh.
folks were looking at that FEG within the quarter.
Uh-huh.
But there was I mean, that FEG was a suspension block, and there was
Mhm.
a VIB below that, and that was like extreme discount. And my thought was, and I had mentioned this too, was, I mean, when you don't see large voluminous candles, you see lots of wicks and not, when we study the actual candle ranges, how much of a range is a body versus how much is a wick? And
Mhm.
key candle times like 9:30. I never leave a 5 minute ever. I
Yep.
live on a five, and I'm proud of that. I'll stand on that. And that's just how comfortable I am with 618 and understanding time. I think five is very, very good place to live, and it's very comfortable for traders. You can find excellent trades on the five. And I want folks to know that. And if you're learning, again, dial down, look at it, see it. But then when you're really looking at creating a narrative, stepping out a little bit into something a little more comfortable is not uncommon. A 3 minutes a good time frame. I'm an OG trader here to tell you that the five is perfect. You can do a lot with a five. Pippy B's got his hand up.
Yeah, I got a question for the community, right? Being that we're on topic of
Yes, love
first
it.
first presentation, right? Now, when he first talked about first presentation fair value gap, he's displaying that on the 1 minute, right? Now, has anybody ever dug deeper into that and looked at the first presentation on the 5 or the first presentation on the 15 or the hour?
I mean,
Being that,
Trade Dexter's done some things. I know we as a community have been trying to apply the same concept from a higher time frame. As in within AMD, are we getting the manipulation off of the very first presentation before it then inverts to the actual distribution? Very common thing on a high time frame. First presentation FEG. First presentation FEG on an hourly, on a weekly. Well, you want to see actually you want to see the M first, right? And then inversion to the D. Curious thought. Pippi, did you have anything more on that? Because I love it. Fractalizing this first prezi is a thing. I mean, it is within the community. Again, there are folks who are doing it commonly right now. Trade Dexter's one of them. He's a big PO3 guy. So we're always looking for that accumulation and then the displacement, the protraction before we get the distribution. Focus.
Yeah. So it's also thinking together. It's about again, man. Like, are we coming into 9:30 with a large opening range gap? Like, where was the closing price? That gives a lot of context because you know that time first 30 minutes, right? And then how can you utilize the PD arrays to get back to 50% because that's got a high probability of happening, right? Or if it's like today it was pretty small opening range gap. Right? Hits the slow price action until later in the afternoon. They expanded up into premium and then came right to my bus stop, and here we go. Like it's context, right? Because of like, to me, it's just who they're passing the baton off. All right. If I'm looking at time-based ranges, then what they did at the end of that previous time-based range, like that tells me how they handed the baton off. Right. And I can make it simple for myself in looking at like an OHLC candle, right? Or I can get very specific, like with first presentation. Right?
That's what the first presentation and how it's mapping into an OHLC is what I'm finding fascinating
Mhm.
within the conversation. And again, even as an
Yeah.
OG trader, it's a new array for me, and it's not something that I've always looked at. So it's a study
Well,
for me as well, as
think
is for
again.
many other folks.
Think again in context. If 9:30, the way I was describing before,
Uh
is
huh.
fair value, right? Is first presentation above or below that? And what's your narrative and bias? Right? Because again, if you're in a seller's in a bias of selling, you want to be selling at or above 9:30 open. Well, what if first presentation is above 9:30 open? Right? It gives you some context in there because it's now swept, say, AM buy side liquidity. It's already reached up there and taken it. Right. So that run again creates a gap. Right. So then it can invert it later. Like it's just in context. So it's like, how did the opening? What is the opening range? Right? Where did it? Where was the closing price? What did we do? Right? And what day of the week are we in? What profile are we in? Like a lot of that is very simple.
That's extremely, in my opinion, that's one of the most important things when we talk about trading and when we look at building trade plans. What day of the week are you in? What session are you trading during what day of the week? Because I will tell you this personally, if you look at last Thursday's price and you look at this Thursday's price and you look at where we actually popped off, and what happened was the 4-hour candle, the first 30 minutes formed, and then it distributed off of the first 30 minutes of the 4-hour range. And it's happened more than one time. And that is to a T textbook what is taught within the silver bullet, within delivery, within a 4-hour PO3, within looking at and studying what would then be the 10 o'clock price. So if we aren't really doing anything until 10 o'clock, within the instruction of understanding an opening gap, then I think we patiently can start to create and construe a stronger narrative as ICT based traders. Um, Unfortunately, I think it's very difficult for folks to be patient
It's
and
their
to kind of,
adversary, man.
I mean, I think as traders, we really need to define our parameters, and then we need to wait for price to come to what we have defined as our parameters. If price doesn't come to you in your model, then you don't have a liberty or an excuse to trade it. So if
No,
I say this, for example, for me, and I had this conversation within the live stream today, when you're looking at that 730 FEG that formed and you're putting quarters on that. When you're putting quarters on that, and we have all of this price that's formed and it's taken until 950 to sweep the 820 high, then yes, it is discount because we are within the range, we are in discount, but is the market going to seek further discount? And that's where liquidity and inefficiencies become really important. And the inefficiency within that impulse candle of, it was 720 or 730, it was prices, and how we actually drove down to take the extreme premium before price flipped after, again, I think it was 1037 was the turtle soup off of a 937 price. But then you literally saw the first stage accumulation form and a market maker buy model come straight off of that hourly close, which again, in my opinion, on a day like today, you want to find these higher time frame closures and opens, and the 6 a.m. to the 10 a.m. is the first real salient close that you can map off of an open. And I just think that's really, really strongly what ICT teaches within all of the things that he does. And it's up to us as a community to kind of really pick up what he puts down. And it's not even about me talking about it, because, guys, I'll talk about it as a host. It's not about my opinion, it's about yours. He wants to hear from you. And I do too, honestly, for what it's worth. If you're newer to trading, if you're coming from a developed country, if you're working hard at trying to make this happen, this trading game happen, I want to know, what are you doing to get there? How are you stitching together these concepts? Right? And ICT Titan was talking about some of the concepts that he uses. ICT Titan, are you there?
Yep.
Layer
I'm
some of
here.
these concepts for me, young man. Utilize these concepts really as a way in which you're layering them. You are proficient, and you are talking to folks who are proficient in more than one concept. So how are you stitching them together? How are you utilizing them as parameters towards a trade plan? How are you remaining disciplined within those parameters? Do you have an answer?
Yep. So yeah, this process was truly a brutal for me as a student studying side by side. So, anyways, so first thing I want to touch through the dealing range. So the dealing range is how we determine how
Oh, so premium and discount is number one thing for you. I love that. Okay. How are you mapping your dealing range? Because today I was talking about how we all as traders, we need to adopt a range. You need to adopt a 9-hour range, a 7-hour range, an 8-hour range, a 6-hour range, a 5-hour range. You need to take 2 points of time, something maybe from Asia, maybe something from London, and you need to have that look back so that you can cast forward. Do you adopt a range? Do you have a time-based range that you base your model off of? Because you've said you trade New York, right? And you want really like the news candle on, and you're stopping at 11, right? So the 4-hour candle and the AMD PO3 coming off of a 4-hour candle is like that's your whole model. Is that correct? So you are taking trades before 10. You're taking trades off the first Prezi. Okay, tell me more about that. How are you doing that? Okay. Okay, from your back test, when you taking the first Prezi off of 930, how much of a range are you taking? What's that look like for you? Are you getting 2R? You're mapping out your buy side and your sell side minor per the 2024, right? You're looking at that 7:30, that hour and a half before the open. You're really looking for your buy side, sell side. You're looking for one of those to be taking the first Prezi to form. How big of a trade are you taking? Where are you taking it to? Are you just running it to the opposite side of liquidity? That's it? Okay. I like that. I like that. Trading to an equilibrium within a range. I like that. So that's really going to depend on where you open within that range, right? Okay, interesting. Interesting. I like that. I like that. Okay, so you like a protraction model. When you say Judas swing, you like a protraction.
protected high. So that means there is some kind of relative equal highs, right?
Okay.
So that's my final take if I'm taking half and half. So that's my final. If not, then sometime I'm in a low positions sizings. Then I just go with the hanging fruit. I don't take with the. I don't want to go up to the final target. So
Okay.
yeah.
No, that makes sense. That makes sense, buddy. I
Mhm.
like that you can talk clearly about your model. Did you have any comments, any questions? We got a few other folks here. I got 9. I got PTFX. I got a few folks here. Lots of folks asking to speak. So we want to get through some of these questions. I really like your take, though. I like you explaining your model, my friend.
Sure, sure. If I could ask question to ICT himself, that would be awesome. But
He's
if he's just
probably
a
gonna be
listener,
he's probably gonna be in listener mode if I know
uh,
him.
mm-mm.
He's probably, if he comes up, then that's like he's committing to coming up, and he's probably
Yep,
liking the
yep,
low
yep.
key vibe of listening. If I know him, I'm not saying I do. He might grab a speaker tag and come up, but feel free to ask a question, float a question. We'll look for a comment answer potentially.
Mm-hmm.
Questions are good. This feels Q&A, I think, is a specific thing, and when he takes the tag, then that's where Q&A really comes in. But this format is a little less Q&A. You can ask a question, I think, to the community, and I
Oh
think
yeah,
he very likely could and would communicate in the comments. But asking that he physically respond, we
yep,
want to respect the man in his time as well. So
yep. Just my if anyone can go through that, that's fine. I'll be happy to get answered. So my question is not the setups, not the thing, but the process of going from I mean putting a stop loss and then coming to the break even. Because sometimes I miss that. Even if I'm in a if I would wait, that would be a great chance to get a big chunk. All right, but sometime early breaking has been a bit of trouble. So what is the best way to put the break even from the stop loss?
stop goes on the swing low, and then your break even gets to, I mean, typically you want to at least get 1R. I mean, I would think you want to get some type of push away. Sometimes break even is 2R, depending on how large of a trade that you're going. But your stop placement is probably going to be equally as important as where you roll your BE to. So, and time and price will dictate that. Great question. Great question. 5:54. I like the time.
So yeah, break even would be my question as in a sense, uh, I know that we can do through the R's, but basically I'm not taking profits through R at all right now as a model because I have charts that telling me where to take a profit. So that's how I'm
So
maybe
you're
confused.
taking profit through tick value, point value. Where and how are you determining your
Yeah.
risk if you're not utilizing
But
R?
I don't to go through the number on R, but just a there
So
could
so
be a
you
yeah.
don't come to the market with a fixed variable, like a fixed risk.
Not really, but I
Okay.
want. No, yes. Then back in the mind, I don't want to go above below.
We've had a lot of conversations here about risk and risk management, and applying some form of fixed risk parameter around your trade.
Mm-hmm.
Something to look at, something to think about. When you're looking at measuring a performance, having defined, don't give me a thumbs up, punk ass. You got some dude who's never been here with 2 followers telling me he don't like what I'm saying. Okay, that's good. No big deal. We got 9 here. Want to keep the conversation going. We got 9 here. PTFX here. ICT Titan. Thank you for the question. Fixed risk is an element that I would say is important towards your trade plan or trade idea. It's a topic in and of itself. But getting back to the conversation, you're here going all the community. We're learning ICT concepts. How do you layer them? How are you utilizing them? 9 trader posting his results. An ICT based trader utilizes time. 9, you want to jump in here, buddy? We'll get Fariano 9 PTFX. Hey, there he is. Hold up. Sorry,
My
9. Don't mean to
my
interrupt.
Yeah, no worries, man.
What's up? What's up? Can you hear me?
Yes, sir, we can. Yes, sir.
Everything good?
We're doing fantastic, brother. It's so good to have you on, really. It really is.
You ready for Thanksgiving?
I am, bro. I am. I'm daughter's gonna come over. We're gonna have a feast. It's tough to cook for just like it's tough to cook for a small amount. You know that. So
I'm ready to eat. I don't know about y'all. So anyway, I was listening to you guys, and real quick, the fella just was asking about when they moved to stop the break even and whatnot. Before I say anything, um, I talked about when to move the stop loss in the latter portions of the 2016 2017 private mentorship lectures. And for the life of me, I can't remember exactly where I disclosed how to move the stop loss.
I want to
I know
say
I
it
did
was
it.
9 early on in 9. I want to say because you're projecting price within 9. I can't say for sure, but I want to say, I mean, high probability 8, short term trading is 7, swing trading is 6, the institutional kind of breadth of information is 5.
If I'm not mistaken, I think that's month 2. If I'm not mistaken.
That's it. Pippi probably knows, Michael.
I think it's month
I have
2.
so many things. I have 3 outlines from 3 books in my mind that's most fresh, and it's competing with what I did in 10 years ago almost now. So it's hard. It's hard for me to remember exactly where all that stuff was. So I was making it literally on the fly. Like I had no real outline as I was doing it. It's just like I felt led to talk about this based on journals. How I came up, and that's how I kind of pretty much taught it. But I wanted to kind of like let the gentleman know what I think is a real good, simple general rule of thumb for moving stops to break even. If I could have a couple minutes to talk like that.
Oh, absolutely, brother. It's all you.
So, obviously, it's dependent upon what you're looking to trade time frame wise. What's the duration for your trade? Where ultimately you think it's going to go? Where's the terminus, the target, and where you're trying to get in at in deference into where you think the move started? Because you could look at the marketplace and say, "Oh wow, I missed a better entry below for a long that's going to take up this high or relative equal high," or vice versa for someone looking for a short. You may have missed the actual best case scenario for a short, but still use a PD array to get involved with the next portion of that run. So knowing where you're getting in at and where you think it's going to go, that's obviously your specific implied dealing range. So it's left of the move. So from entry to where you're going to go and target, that range needs to be defined in terms of quadrants, where you're at in the lowest quadrant, the midpoint of it, consequent encouragement, and the upper quadrant, and then the final terminus target. In my opinion, and this is how I teach my kids, that way it's not something I'm just pulling out of my ass. It's something that I'm telling them what to do. So it's a real quick, easy way of doing it. As soon as you know where you are entering and where the market's drawing to, where's your target, where's your final exit point, or if you're going to use that as your target and then you leave a runner on after that, whatever that target is, that's terminus. As soon as the position goes to profit and then at 50% of whatever that target is, it's foolish for you to absorb any kind of loss or eat the costs of commissions and fees. So, in other words, let's assume for a moment you think that the range is going to move 100 handles, okay, or 100 pips in deference to the folks that are trading the Forex market. If it moves 50 handles or 50 pips, you need to have your stop loss covering costs. And that way you can completely remove all concern about being right or wrong. You're getting at it. You don't have to worry about it. And here's the thing that you're going to be wrestling with, because I'm sure you're probably thinking, well, what happens if the volatility is kind of high and it comes down and stops me out? That's why I have all these different PD arrays, because I'll use a new 15-second fair value gap to get me in line with the move if I get stopped out. Getting stopped out needs to be something that you don't fear. And really, what are you losing if you get stopped out if you're following this criteria? You're not losing anything, right? I mean, you're getting your commission costs covered. You're getting no absorbed actual loss. So your monetary loss is nothing. You've paid for the ticket to see if it can get to the depth you wanted to get to, but your flight just got canceled. You got grounded. They had to fly back to the airport, and you got to wait for another airplane. It's as simple as that. So when you have this mindset and you adopt this viewpoint on it, it's very liberating, and it removes that fear of missing the move. So in short, know where you think the market's going to go. Where's your target? Where's your terminus? If it moves 50% of that range and you're in profit, then you move your stop to cover costs. That means real break even, not just simply, well, it's zero, because we trade in futures. So that means there's going to be real costs associated with it. It's not high if you're using a good broker, but you want to make sure you cover it a little bit. Sometimes when you hear me talk about it, I'm facetiously talking about covering, pizza. Get pizza covered. So in other words, I'm trying to make $20, 25, $30, just to put something in my pocket for my time. But 50% of what you think the range is going to be to target, once that's fulfilled and you see it, once it ticks there one time, doesn't need to trade above it. Okay, as soon as it touches 50% of the distance or range you think it's going to move to, as soon as that happens, without thought, without concern, without emotion, without any kind of fear of getting stopped out, you cover costs, move the break even, cover the cost for your commissions and fees, and just simply let the trade pan out. If it stops you out, then reassess. Is it still viable? Is it something that just you got caught off guard? Because your experience is going to dictate whether or not you're going to be able to get back in a trade or not. More skilled veteran students of mine have no problem getting right back into a move they got stopped out at. And it's not costing you anything. It didn't cost you anything. And regretting whether or not you didn't take a partial, don't even worry about that, because if the trade's still good and you think it's going to go to that terminus target, it's easy to get back into the trade again. And I've done many trades over my career like that, where when I first started adopting this mindset, it completely changed the whole outlook of what I'm trying to do on a day by day basis when I started becoming a very active day trader. Because if you can't overcome that fear of missing out or fear of being, see how this does both? It cancels out the necessity for being right. It cancels out the fear factor that's associated with being wrong, and it covers the cost. So you're getting a free plane ticket to see if it can take you to that destination of interest. And if it doesn't take you on that airplane, that flight, you're just going to jump on another plane. It's simple as that. There's nothing to fear. And ultimately, if you do it again and you get stopped out and you take a loss, it's okay, because you should have a model that you're not looking at a one-trick pony that only works once in a while. And your back testing should prove to you that it's not a one-trick pony. Hopefully, that's a fair answer.
Thank you, ICT. Thank you.
Keeping the conversation going, keeping it flowing. More questions, salient question. Aldo Vargas is here. We have Fariano, we got PTFX, we got Dom, we got Focus, we got Nine. Zick said FX. Zick said, I'm just curious, are you still short for Bitcoin, bro? Like you got the high. You still in that
Can I
short?
speak, sir?
You can sure speak, bro. I'm asking because you nailed the high. And you did that
Yeah,
through just learning through all the stuff that we do here together, right? So
yeah, that's a great trade, because that's literally there, sir. So, and this week there is a short trade on monthly view that's printed on the AR projection. So I shorted it from US 30, because the 3 month exhaustion and the month exhaustion was stacked like pretty nicely.
nice,
So
bro.
I,
Nice. I'm really proud of you, man. I'm proud of you taking the AR concept of ICT, that the average range, which he does talk about in core content month 5, but you've taken that from a high time frame, you've mapped it out, you found the thirds, and you've really, I mean, positioned yourself into seeing the market pretty clearly, right? So I'm proud of you, brother. Good job.
so the actually this all because of you guys. So I'm very very thankful the ICT, and the always thankful to you, sir, also. And this is the great space, I think, for every beginner trader should watch. So that's a great one. So I will give a tip, okay?
Yeah,
So I will give a
we like tips, buddy. That's good. We like it.
so you can use with ICT the market maker model with the AR range, okay? So you can also divide any range, average weekly range, monthly range, or daily range. Divide it to three, okay? And you have some like the 1/3 of the average range. We have to watch the open price, and we have some there's like opening ranges and things. So when we are dealing with the average range, you have to watch. I will tell the example as the weekly basis, okay? So if you are a one shot one kill trader, you can use average range. So you can track the accumulation and the manipulation and distribution using the AR range. So you have to use it like this. Always I think there's an indicator that average daily ranges x Judas meter by toothbrush.
Yes, 2 degrees has one, and it is literally word for word taken from the core content. I want to say it's month 5, and I
Yeah,
even want to say it's episode 12. Eh,
yeah. So that's a good one, because you can always stack your probabilities. So if the average range average range use average range, you can use pivot numbers also. So I will mostly use average ranges, because
yes,
I
you do. You've done a great job with the average ranges. Hey, we got Lee Desi here, man. He's a great one to get up.
so this is a great week, I think. So, and thankful for your all the helps and stuff, and I hope you are doing well, did well in this week. So I'm silencing. Bye bye, guys. So
Hey, thank you for coming up, buddy. I'm really happy. I know other people are going to be happy too, just to hear your thoughts and 2 cents. I got my boy who's taken some pretty big payouts. He's 22, Punjab Sikhi trader, Lee Desi. Desi Trades, what's going on, brother? See you crushing the market. High five, man.
Thank you. I appreciate it. I'm happy to be here. I saw you guys on. I was like, I had to come on and talk with you guys. I've always listened to your shows, so I was like, let me come on and say a few things. Um, well, first of all, I know ICT's in here. I saw his post. I appreciate his support and everyone in here. You guys have been incredible over the past like 7 days, especially the last 40 hours. It's been pretty surreal. Yeah, $1 million in a month. Got a 930K payout from Apex Trader, and honestly, it's I started learning ICT concepts in 2022. I was already profitable beforehand, so the transition was a little bit easier because I always advocate. Strategy is one thing. I've said this, I have different beliefs, but strategy is, I feel like, only 10% of the game. The 90% comes from the mental and being able to control yourself and having that mental sustained drawdown. As you guys might have known, back in August, I blew up around 350,000 from Apex as well, like 14 days away from the big payout. So, and I told myself I would be back, and I didn't expect it to be so quick. But here we are, and it's been a blessing. It's been a crazy experience. Like I have, after I requested a payout, obviously I haven't taken a trainer or anything like that. Just been kind of enjoying it. I talked to my family a bit, and kind of want to, I'm only 22, so this is definitely, closer
Congratulations,
to my
brother.
goal.
Congratulations. It's
Thank you.
kudos. I mean,
I appreciate it.
you're an embodiment of what the teaching has been. I mean, and I think ICT being here, he can speak for himself, but I mean, you're repping the concepts really well, brother. I mean, you really are. So from as part of the community, kudos to you. High five, man. At 22, I mean, I got a daughter who's just a few years younger than you, and just as a father, the thought, the aspiration of someone really seeing the market the way you're seeing it, and then more importantly, as you're saying and stating, and I'd like you to reiterate that, the mental, the psychological components towards your trades, towards your trade plans.
Yeah, for sure. I think as a trader, the number one thing you got to be is a risk manager. And there's some days where even during this run where I had drawdown, I'm like, dude, I had to fight the urge to press the button. Because for me, I always think about the long-term process, the one day at a time mindset. And I'm just like, look, I shouldn't be able to make or break my trading day in one day. It's a compound over time. And obviously this happened a little quick over the 25-day stretch before they pulled the plug on me for the payout, but it was just still compounding. Like I said, the price action was good. Everything aligned with my trading system and my style, and I just had to put the risk on.
Are
That's really
you
the result.
so? If you had to describe how you engage with price, you're an IFEG trader, right? Is that fair to say?
Yes. Yeah. That's my entry model is off of inversion fair
And,
value
and
gaps.
and and would you like to elaborate a little further? How I mean, so an MMXM is a big deal for you, right? So you're a
Yes.
market maker, buy or sell model, and you're really looking at that turtle soup entry, and then you're looking to the left, and you're looking for, if it's a buy model, you're looking for that inversion off the SIBIs that brought price down. Is that fair to say?
Yeah, so something that I've done this last week and a half is, obviously we're in a market maker sell model, right? Very clear sell side below. I would look for a manipulation into a higher time frame fair value gap or an order block. I know we had a daily fair value gap that got tapped into. I go in on, so what I do is I look for those retracements on the higher time frame. Then I go down to the 5 or 15 minute, and I wait for a 5 or 15 minute. In this case, I was looking for downside, so I'd wait for a bullish fair value gap to get violated. And as soon as it does, once it taps the higher time frame PDA rate, that's where I get my entry, and I keep my stops above the highs and run a 3-to-1, 2-to-1. A lot of my trades ended up being 5-6 hour trades because of how volatile we actually were.
I love that. I mean, if you're taking bearish trades, it's taking that original bullish impulse and then beyond, right? Like you saw that in the fractal just continually. I mean, bears got paid well this week. They really did. I mean, the shorts paid well.
Definitely. And like I said, I appreciate all the support from everyone. I appreciate you bringing me up. I know me and you DM'd a couple times, and you're always supporting me. So personally, I just want to thank you in front of everyone as well for being that support.
Can you hear me?
We can, buddy. Here's one of your monsters.
I just got two questions real quick. Number one, um, did you get to this goal a lot sooner than you thought it was going to take you? And what does your immediate family feel about your accomplishment?
So to answer question one, absolutely. I hit my first 7 figures in April, and now here I am, almost 3x that few months later, right? In a whole month, I made 7 figures. So it definitely is exponential growth in this trading game, because I feel like once you master the mental side of things, it's unlimited growth. And to answer your second question, I called my dad, I called my mom, and honestly, I was tearing up. I'm like, look, this is what happened, and they're like, my parents do well, but they haven't seen this type of money. So it's definitely a proud moment for them. They weren't obviously happy when I dropped out of school a couple years, and we had a lot of clashing. But to see it pay forward and prove myself right, and also them feeling the confidence in their kid to move on in life in terms of this is my full career. I recently just moved out, so it's been kind of hard on them for me not being there no more. So it was a really good moment.
That is awesome. If you could give a little bit of personal perspective as another millionaire, trader now, would you say to people that are just starting out, they see all the complications of looking at these charts? They look like hieroglyphics the first time you do it. What kind of encouragement would you give them? Because now you have tasted this level of success. Now, it resonates better when someone sees another peer that went through the same thing they're about to endeavor. What was it like for you to find encouragement, and how would you encourage someone else that's starting out?
The number one thing I always tell people who are starting off is do not put a timetable on anything. It might take longer than you expect. It might take way shorter than you expect, right? And I think putting a time pressure on yourself is not the way to go about this. I know people who made their first million 8 years into trading. I know made their first million 2 years into trading. Everyone's on their unique path with the timing. As long as you are showing up every single day and practicing proper risk management, you are actually trading. Showing up on the screens 12 hours a day isn't going to do shit. Excuse my language. if you're out there just BSing around, full leverage, max size, and things like that. If you're actually taking the time and understanding what you're doing and having a mental control of yourself, there is no cap to this game. And do not anyone listening to this, do not compare me to yourself, or compare someone else like who else is taking $2 million payouts. Don't compare Lanto to me, or who, to yourself. Everyone's on their own path. Everyone has their own family circumstances, life circumstances, everything. There's so many different variables that we're all different in, right? Why are we one thing I would say though, clap for others until it's your time. There's no reason for someone to start hating on someone just because they're doing well. Clap for others, and I promise you they'll clap 10 times louder for you when you cross that finish line. And like I said, that finish line might be crossed in a year, 2 years, 3 years. As long as you are showing up, I promise you, if you give 110% effort, it is impossible to fail in this.
Boom. Pippy B, you had your hand up?
Yeah, I got a question. First thing, congratulations, right?
Thank
Like
you.
being so young doing this, right? Life changing. So first off, foremost, oh, excuse me, congratulations, right? Now, are you okay answering questions?
Yeah, of course. I'm an open book. Go ahead.
Okay, all right. So my first question is, in regards to the Apex rules, right? Where they say you need 3 months, 90 days to withdraw the whole entire payout of the account, right? Can you walk us through like how you were able to do that in 24 days?
Yeah, I got
Because
you.
I
For
see
sure.
how they did change a rule, right? Or I don't know. I mean, I've been trading with Apex for a while, and I know they sneak little things in there here and there, right? So I'm just curious about, how you did that actually.
Yeah, so I'll give you my full entire Apex breakdown, right? And I'm gonna start with the trading side of things, guys. There's trailing drawdown. I traded 50K accounts. I turned them into 116K. You have to size down in the initial 10 days. I was sizing 3 to 5 micros until I had 8 to 10K buffer, and that's when I started sizing up. You need to let the buffer build before you size up. Keep that in mind. Second of all, for Apex, if you run a high balance, such as usually it's like 700K plus, once you get that balance, they'll start monitoring you very closely and pull the plug on you early. Because one of my other buddies too, KJ Futures, he recently pulled out 700K, and he had the same thing. He had 20 accounts, 35K each. He got paid out because their risk. If man, holy shit, no ego, but if they let me trade these last 3 days, it would have been over for them. I would have broke the record. I promise you that I would have broke the record. I'm not greedy about it. I'm happy with my 900K, but I would ban myself too. And that's one way you can get your full payout before the certain amount of days you need is if you run a high balance and you have a good consistency during that time, which, luckily I had.
Copy. So technically, if you keep that consistency going with the high balance, as long as you keep that momentum going, you'll be able to withdraw after the third payout. Correct? Did I read those rules correct?
It's not after the third payout. It could be after the second one. It could be after the fourth one. There is no actual in writing. For me, it just happened to
Ah,
be after. And also, I had my first payout accepted. My second one got denied because I broke a rule. The third one, when I was going to request my 28K, that's when they emailed me. They're like, no, you're not going to request that. You can take the whole thing and you're off the firm, essentially. Which like I said, I'm happy they gave me the opportunity to take the account. They offered me a live account too. I did not entertain it because I can fund my own money on a live account. So for me, it was a no brainer to take the cash.
I love the inner workings. I love this.
I love it. I love it because there's a lot of confusion out there, with that, you know. And when I saw that at first, I was like, honestly, I thought it was cap, right? But then, once I have accountability partners and we talk about things like this, and he's like, yo, honestly, pay attention to this. and we were reading something, and I was like, wow, like I must have skipped over that part, right? So that's very interesting, and it should be a goal for people that trade Apex, right? As long as you keep that consistency going, it doesn't matter about balance, right? So when people get windfall victories, which I have got plenty of times, right? When you catch these windfall victories and now it pushes you back a little bit, as long as you keep that momentum going. So just like how he said when he first started, when he came on here, he was saying about his mental, right? Coming into the game with a clear head every day. Don't come in with an ego like, I'm the best trader in the world. I'm about to run this up to 50 million, right? Because they're not going to allow you to run it up to 50 million. Okay? So we have to maintain that ego to have that consistency rolling. So I'm very glad that you came up, and I'm very glad that you were open to speak about that. So there should be no more confusion going forward. As long as you keep that consistency going, you'll be able to get a payout, period.
Can I
So,
ask one more question real quick? I'm gonna have to escape after this.
of course, go ahead.
Jump in, boss.
When you saw you had reached the target of no more allowance for you to be able to trade, I mean, obviously, I mean, at the risk of sounding arrogant and egotistical, whatever, which I'm not trying to stoke that, okay? It has to feel really good for them to be shutting you down, because that's a compliment. They're like saying, listen, listen, you can't come in here anymore. You're a card counter. You're not allowed in the casino anymore. What did that do for you going forward? I mean, obviously you're going to be inundated with people that's going to say things like, you know, are you an affiliate? Did they grease your palm? What, you didn't really do this type thing. How do you now, as someone that's highly profitable, how are you going to walk forward when you're encountering people that have that doubt? Like, how will you carry yourself?
I would say I've been on the social media side for a long time now on the Twitter space, and if I ever listened to the doubters ICT, I don't think I would be where I was today, or where I am today. That's just my simple process. If you're talking bullshit to me, I'm not listening. If you're supporting me, guess what? I'll support you 10 times back. As simple as that. The saying "a hater never done better than you" is true, right? And for me, even with the Apex getting the payout, there's a lot of haters. This, that. Look, in a couple days, I'm about to get a wire sent to me for $930,000 at the end of the day, and they're not. And I don't want to sound egotistical or anything, but this is for everyone. You got to protect your energy. You got to keep your peace. You can't let the outside people influence what you're doing, because at the end of the day, when you get into your office, are they trading with you? No, you are trading for yourself. No one's gonna, and this is one of those games. No one's gonna come save you. You got to save yourself. And God forbid I listen to any of the haters when I'm playing one of the most lonesome and self-reliant games. Right? Why would I listen to this? This is not a team sport. This is me going into the office, me winning the day, leaving the office, showing up the next day, I gotta win again. And guess what? If I lose, as long as I learn, guess what? That's another win. I'm 3-0 now. One more, that's a season sweep. That's a series sweep, right? And that's what the mindset I had. And I've been having this mindset for a very long time. And it's just something like, yeah, I see it, and sometimes I do feel some type of way, but there's no way I'm gonna act on it or have an impulsive reaction to it. Absolutely not. And especially when there's 100 supporters for every 10 doubters, right? And especially when you guys are the ones supporting. Like, come on now. There's no way I can let the doubters do anything to me when I have ICT tweeting about me, right? Things like that.
I love that. Hey, one more thing. Give me your processes getting 1% better each and every day. What are you doing?
For me, when I tweet this a lot, I like get 1% better. And for me, 1% better isn't ending the trading day green or red. It's about how you manage the day and how controlled you were throughout the day. And I'm talking about overall in life, not just trading, right? Trading's at the end of the day, it's still a very small part of my life. I'm more than a trader. I do other things, right? how well can I control myself in every aspect of my life. If you're religious, are you staying up to your faith? If you're not, whatever you do on the side, are you keeping up to your own standards? As long as I'm keeping up to my own standards and continuing to impress myself, that's what I think 1% better is. Never ever have I associated winning and losing with what the market gave me. Never. It's about the process itself. And if I follow my rules and if I take 35 losses in a row and I blow my account, guess what? If I followed my rules, I stayed consistent, I practiced good risk management, hey, guess what? It was an unlucky 35 trades then, right? So there's never, when I associate green or red with getting 1% better, it's always the mental side of things. And look, I still am trying to figure out the mental side of things for other things in life, right? That I would like to be more consistent and disciplined in. I wish I could take my trading discipline and put it into other sides. I'm not perfect at all by any means. But it's just, for me, the mental is so powerful. Like, your brain is such a powerful tool, and I'm just trying to master it to the best of my ability, and that'll help people around me too. That's another thing. I want to make sure the people around me are good, and then I'll eat whatever's left.
I love that.
Just want to say, man, well said. I'm proud of you, and I'm hopefully going to be able to see you keep going higher.
Thank you, ICT. Appreciate what you do for the community as well. It's incredible.
It's a love fest, boys and girls. Trader Roundup. Ledesi coming in, just swinging it a little bit, and with reason, my man. Kudos to you. That's not easy what you did, man. It's not easy. I don't care who you are. So, props. It ain't easy putting up that kind of weight. I don't care who you are. So, in a room full of traders, the hat is off, my friend. Well done, well deserved, and good work. Very, I guess proud is not a real good word to say, but it's an honor. I'll say that it's an honor. All right. So anyway,
I appreciate it. Thank you. And I'm gonna hop on out of here. I gotta make some food and stuff, and I hope you guys have a good rest of your day and have a fantastic weekend. Appreciate you guys.
rock on, brother. Rock on. It's 6:30. I like the time. Nine's got his hand up. Want to hear from him. We got Mauricio here. We got Black and Blue here as well. So Arcane's got his hand up. Raising your hand, greatly appreciate it. We're going to go in order. Black and Blue, Nine, Arcane. What's up?
Hey, Kit, what's going on? I appreciate you having me. Shout out to Desi for sure. Very inspirational, what him and Lanto have been doing. What's up, Pippi? And of course, shout out to the greatest coach ever, ICT. We were talking about the average daily ranges a few moments before Desi came in, and I'm sorry to backtrack, but you guys know, like, that is my thing. My particular core content favorite, core content month 12. And so I just want to ask, if I may, ICT, I have taken that ideology, of course, by my own liberty, not anything that you've taught, but I've applied that to the quarter. So I will do a 5 average quarterly range and then a 5 average monthly range. And I'm also marking the 50% point between, say the quarterly or monthly open, average, weekly high or average monthly high, and the same thing for the discount side. And what that allowed me to do this week was to, have a bearish bias and know that, 24, 145 was the number I called out in my tweet. But I wanted to know, what your thoughts were on, me doing that. And those levels have been so pertinent and so useful to me. And of course, as you taught it, the 5-day average daily range in core content month 12. And what I'm having trouble doing is using the macros in conjunction with the PD arrays that form around those levels. I'm seeming to, always get stopped out, looking for that lower high of the day between 3:30 and 5. It seems that the New York Open always kills that position that I seem to get into using that ideology. So I would be grateful if you could just touch base on that just a little bit.
Well, the details that you're collecting when you do it, that should be enough for you to determine fruitful or not. If you're, and I'm not certain I understood exactly what you were saying because I had one earphone on and the other one listening to my wife. So I got to make it look like I'm interested in what she's saying because she's talking to me about spending more money at Christmas time. So if you're measuring, if you're measuring like the ranges in from a quarter, like a quarters range, what it's done in the past quarter, I think that's is that what you said? Because correct me, please.
Yes, sir. So, as you taught in Core Content Month 12, you take the previous 5 days, you take that average, and you're able to project the average daily range high, the average daily range low, and then the Fibonacci extensions thereof. So I've taken that ideology and applied it to a weekly time frame, and then a monthly time frame, and then a quarterly time frame. So I'm taking 5 months and doing an average and applying that to the monthly open to get a average quarterly high or average quarterly low.
Okay, I follow what you're saying now.
Yes, sir.
Well, if you apply it to 3 months, then you have a uniform time reference that the market's going to appreciate better. Having it simply because it's a 5 day average. The reason why it's 5 day average daily range or the average over the last 5 days is because our week is basically, assuming there's no holiday, it's Monday through Friday. So that's 5 days. We don't really attribute all that much weight to Sundays, even though they're influential. Obviously, new week open and gap, that such. But having a 5 day period or 5 period reference for weeks and months. I think if you do the weekly, just do it on 4 weeks. Because what is that essentially? It's essentially a month. If you do it over 12 weeks, that'll give you a good round number for a quarterly influence using what you're trying to do with the same thing as a 5 day average daily range and projecting that to give you a supposed threshold of importance. I don't personally subscribe to anything beyond that scope because I have other tools that do better and it give me better details than what would be trying to ascertain from using this methodology. But if you're seeing some rhyme or reason to doing it, don't let me say like last time we did a discussion like this, and I was in Kit's podcast here. I didn't want to discourage Pippi, because he was investigating things too. I have to be honest when I'm asked if I see value in that or if I would do it. I'm not swayed in any pursuit in doing it myself, but I'm not negating or trying to disparage you if you're seeing fruits from it. Because what you internalize in price action, just like a model, just like the PD arrays, whatever one you as the students subscribe to, that's the one that's going to be advantageous for you. It means something. So it helps you have clarity. You know what you're looking for. So if these measurements, if these things that you're trying to do build up your confidence around something, then that's a plus. You're going to get the information from the actual utility of the information you're gleaning from doing it. It matters not really if I subscribe to the idea or if I like the idea. Just like Larry Williams, he has 100 different things out there that I don't believe any reason why that should be attributed to my buying and selling. But he has faith in it. He has experience using it, and he's made millions of dollars trusting it because it's helped him manage his emotions, his psychology, and what he's looking for in the marketplace. So I think it's essentially what you should be viewing it too. Just because you hold a certain level of regard for me, that's fine. But what works in your hands works in your hands, regardless of who likes it or doesn't like it. Does that sound fair?
Yes, sir. So it's I just want to say thank you because I know I'm like, you might see some of my comments defending you, and I know you tell us not to do that, but uh, even though I've yet to prove the value that your teachings have given to me, I've yet to have something of substance to prove that. It doesn't take away from the fact that I know that what I've learned from you over the past 3.5 years is absolutely invaluable, and I'm honored to be for at least once in my life converse with you a small bit and say thank you. I'm very honored. Thank you so much, bro.
You're
Black
welcome,
and
brother.
blue with the bro term. I mean, ICT, you gotta love when folks just affectionately refer to you as bro. I mean,
I'm
you,
sorry.
you
I'm
want
from
to
New York City. I'm sorry.
well, no, but I mean, it's a really big deal. Like I mean, wanting to feel like just a regular person, and then getting bros and dude and things like that. I mean, I know that would feel good to me, and
Yeah,
it's
I
just kind
prefer
of
it over the sir stuff, like the
yeah,
sir, the sir.
yeah.
I don't. It sounds wooden. It sounds stilted. I don't like that. I mean, I'm. If you were talking to me and you kept calling me sir, I'd correct you. I'd be like, look, man, just like talk to me. I'm a person. That's all. Just talk to me like we've known each other for time. And I appreciate that. I resonate with people that talk like that.
I love it. I just love this platform. I'm grinning ear to ear because it's like I feel like it's been I don't know, like this is I feel like it's just filling a lot of cups. A lot of people like what we're doing here, and that interaction, it's just beautiful. Like I'm just smiling ear to ear, and I know Black and Blue is just like he's just over the moon opportunity of just being here and having a conversation. So I know, and I don't mean that in any weird way. It's just kind of cool. It's kind of cool. Anyway, keeping it going. Persian turtle. TP03, Persian turtle.
Now I think we had nine
Oh, my
next. I
bad,
think nine was up
my bad.
next.
Thank you, thank you, thank you. Nine, my bad. You're up next. And Feriano, my bad.
Hey, how's it going, everyone? No worries. I'm actually sitting outside of church. I'm eagerly waiting to get confessed at 4 o'clock my time. So I don't know if I have much time to speak on, but I just want to say I appreciate everyone here in this space. Of course, I appreciate ICT for all his teachings and just the impact he had on the world. Um, just overall, a great guy. So I appreciate everything in that general prospect. But I don't know if you guys want me to speak on anything specifically.
Well, I
However,
mean,
I just wanted to chime
if you
in
had a
here real quick.
question, or maybe you could talk about how the concepts really resonate with you, or I mean, just
Sure.
the floor is yours, brother. It's whatever.
Yeah, so there are some specific things that ICT mentioned that I specifically paid attention to, where he mentioned build your own specific model that you align with and specific PD arrays. So that's what I basically focused on. It's what, thanks to him, brought me, impacted a lot more of my success. I know beforehand, like a few years ago, I was actually trading harmonics and I was still a little bit profitable, but not to the extent that it is now, right? Now it's just 10x at this point because you have specific measurements, specific things to look at. So really just props to those concepts. Now, what I specifically look at is just liquidity pools, time-based or just regular old swing highs and lows, and then fair value gaps along with that. Specifically, the interaction with fair value gaps, the quadrants, how it's interacting, how if it's closing above or past the entire fair value gap, in which case it becomes an inversion. I basically use two models for price entries, and that's what I mainly focus on. It's more of a momentum and or reversal opportunity. Both coincide with each other, so that's my main focus, really.
I mean, Nine has some really, for the record, within the community, Nine has some really deep dives within time, and he has, I mean, he's written a book on it, and he utilizes these root candles, and he's got his own way in which he's utilizing these time-based arrays, and he's written extensively about it, so he's not really pulling it out of anywhere but his own study, and it is
What's the
actually
book?
quite fascinating. Not Nine, talk to him about it, bro.
What's the title of your book?
Yeah, so yeah, there was a few years ago, I got really enveloped into the idea of time. I started looking for my data approach and in regards to the actual volatility within the markets. I know each instrument has different volatility measurements, and that's where the book originated from.
Do you still have it
It's
on your
definitely a
WAP?
different
Is it on
way.
your link? I'm just curious. Sorry, I don't mean to interrupt.
Yeah, there's probably I made it free for a long time. I could probably do it again, but like it's just everywhere at this point.
Oh yeah, no,
And there's
I
also
have free book.
other. Yeah, yeah, for sure. So I just spent a lot of time on it. I wanted to give it out to the public, just some studies that I made. Definitely helped with my training, that's for sure. Just solidifying the
And
concepts
you
and
focus on the
applying.
1 minute, right? I mean, Michael, I think you would really like it if you make it available. We'll work on trying to distribute it or disseminate it. He calls it DTT, which is digital time theory, right? And it's really focused on the 1 minute. And you have these root candles, and you're looking at average range models. There's different time based models. It's very unique, and it is of his own study, but it is based on premise and things that you have taught, Michael. And just as an observer of someone within the community of someone watching a profitable trader of your concepts and how he's made them his own, it's fascinating. It really is. He's done a really neat job of making these models his own within time in his own studies, and again, he's giving homage to you, and it's unique. So
I'd love to see it.
Awesome. Yeah, I realize it's really unique. I'm just seeing it from a humble point of view. I know it's like a specific cup of tea, right? But it really is what brought me what I have now, right? So it again originated from you. So just want to publicly say that. But it is really unique, and I know it's specific to like time-based concepts and opening prices, volatility, things of that nature. So if anyone wants to give it a read, I'll definitely push it out again.
yeah, do that.
I like
Do
putting it
that.
out for
It's a good
sure. Yeah.
read. It's a good read. He does utilize some time fibs. The way in which you utilize the settings also very unique. Not something I've seen within other studies, even of my own. So it's fascinating. And Nine, making that available, I think some folks will enjoy it. I mean, I have, and the way you trade a 1 minute chart, it's lovely. I mean, kudos. You've got a codified system that you utilize that you trade with, and you do it live. So I think you meet all of the in which again, like the respect and appreciation for what you do is there. So and I love that that Michael's inquiring and would like to see more in depth of your own study. So awesome.
Yeah. Thanks be to God, first of all. And if you guys give me more time, I'd like to make like an updated version because, I made that like I think a few years ago now at this point.
Yeah,
So
do you? And
there's
when you
probably
make it
some.
available, like
Yeah,
holler, and we'll kind of try and push it out there, and we'll talk about it. I mean, Trader Roundup's a good kind of like touch base. Maybe come back next Friday and throw it in the comments or something.
for
Some
sure.
folks can take a look at it, follow up. So
Yeah, there's a lot of things I could probably brush up on inside the book and grammar errors specific to that, or just make things a bit more clear and detailed and filter some things out. So
it's very well done,
um,
I will say. I mean, you actually inspired me. I mean, I ended up writing a book on a lot of my concepts because of that book that you put. Yeah,
really,
yeah,
wow,
I did. Um,
that's super cool.
it
Yeah,
it is
send
very
me a
cool,
copy if
and
you can
I mean,
too.
I mean, my book is called A Market Symphony, so it's really resonating with time and how pivots kind of resonate in the market. So it's interesting
I like
concept.
that.
And again, I'd actually like to share that with Michael. So I'll probably email that maybe. But that's not really something. Hey, trade around up a book, but it's just out there. But it's cool. I mean, you
Yeah,
put it out there. So mine, it doesn't. I don't really know if I'm comfortable putting it out there, but I would definitely share it with Michael. I'd love his ability to see at least how I articulate some of these models. Right.
Let's see it.
I love it. Yes.
awesome.
He's like,
Yeah,
send it
awesome. I mean,
over.
just let me know how I can share it. I'll definitely share it, make an updated version, and yeah, I just like providing free stuff to people, like
You do a
tools,
great job of that,
concepts,
brother. You do
ideas.
a great job of that.
Um, Yeah, because I know how this trading journey is. I just want to help out as many people as possible, and I'll do it all for the glory of God. So I just want to put that out there. But I do have to attend to confession within 10 minutes from now, so I do have to go. But it was definitely a blessing being here.
Much
So
love and respect, buddy.
kudos to everyone, and
We got
see you guys later.
Feriano here. He was up next. Mauricio's got his hand up. So I don't know if Mauricio, if it's
Yo,
salient.
yo, yo,
Jump in here, Feriano. Jump.
how you guys doing?
Fantastic. Now Feriano is
Man,
a macro trader. trades with the macros. You want to talk at all a little bit about how you trade, or do you have anything you'd like to address with Michael here at all, Fariana?
Man, it's quite amazing having him on the dial today. I just want to let you guys know, let him know specifically one specific. Obviously, you guys know I'm in love with macro. I'm every macro for the last 3-4 years, and probably won't cheat on her anytime soon. But obviously, I have three main entry model, and one of my entry model is like early breaker retest. I have the macro for like the main trading hours, 9:30 to 12:30, and then the MMXM, like a very unique MMXM. But one concept that definitely played a major role, I would say, in me finding some level of consistency over the last few years. And I mean, I've done well for myself now, being able to trade and stuff like that. Definitely, I would say is thinking about. Actually, I would say my best entry model is probably like the early breaker retest. So, man, like as of late, I'm going on to this tangent where I'm like diving into this world of like between 7:30 and 9:30. I'm noticing something quite interesting, and I'm starting to expand because I trade right now like NQ, YM, and then PL, which is oil. But I'm starting to
Ooh.
expand because I'm starting to notice that 7:30 to 9:30 window is quite a powerful window, and I'm utilizing the a lot more
Oh,
often.
sounds like a 2024 model.
Yeah, definitely. I'm starting to utilize session SMT specifically. So I'm looking for 8 p.m. to 2 a.m. Asia session window, and then 3 a.m. to 6 a.m. London session. So I'm measuring those sessions specifically, and I'm also measuring the 7 a.m. to 9:30
Okay, wait. So 8
window
p.m. to 2 a.m. That's a 6 hour range, and then 3 a.m. to what?
to 6 a.m.
To 6 a.m. So that's a 3 hour range. Okay, so you've adopted a 6 hour and a 3 hour range within your model.
Yeah, so that's for Asia, London, and then that's New York is 7:30 to 9:30. So what I'm looking for across all three of those windows is for some sort of SMTs, right? And those SMT will give me my bias for like an early breaker retest. So 7:30 to 9:30, if you see an early breaker form, right, after you obviously have a confirmed SMTs at a low, so with correlating assets. So for example, like NQ and YM will be my correlating asset if I'm trading NQ.
Wait,
Gold and
YM is
silver
your correlation?
for that specific for because I tried ES
Okay.
over multiple years, and one would be the better asset that actually give me better correlation for that window.
Interesting.
Um, yeah, gold and silver, 6E and 6B if you're trading future, Euro USD, GBP USD if you're trading forex, and then RB, which I think is rubber oil, and then CL, which is crude oil. Those two are very correlating as well. And then the last one, if I'm not mistaken, I'm always forgetting the last one. I have about four pairs that are correlating. So essentially 8 assets that I'm
A
looking at.
good one is that ICT talks about is the S&P Goldman Sachs Commodity Index.
Oh,
Just
let me
gonna
write
just
that
gonna
down.
add that SPGC GSCCI.
You say S.
That is episode 12 core content month 5.
Can you repeat that? I'm actually on my note. You say SP.
S&P Goldman
Uh huh.
Sachs Commodity Index. So it's SPGSCI.
CI. And what's the other
Very
one?
very good for oil. Very good for oil. No,
Oh,
that's it. That's it. It's one
oh,
single asset that you would look at within SMT within the commodities. And
oh.
again,
Okay,
ICT. I'm just echoing something that he's already taught.
got you. And then what would you say would be the best correlating asset with that? If you're looking for some correlation of
I
SMP
like
for early.
oil. I mean, I like oil more than your RB gasoline futures. I personally like oil a lot with the SBGSCI personally.
Oh, okay. I see.
It's
So you were
very,
mentioning it
very,
for oil.
very, very good. And I'm not a big SMT guy, but that's arguably, I would say, one of the better correlations as taught.
I'm gonna definitely experiment with that and see what type of result that I get. But I have noticed that if you want to catch like an early, because a lot of the instrument that have a lot of volatility can sometimes deliver early reversal or early continuation between 7:30 and 9:30. if you can catch an early unicorn breaker, that can essentially form and confirm within that window. So all that you will look for will be a retest of the inversion associated with the last leg of manipulation within that breaker. So once that breaker is confirmed between 7:30 and 9:30, essentially the retest window that I'll utilize will be 9:31 to 9:41, and then 9:49 to 10:17. So my early breaker retest window, those are the retest window that I utilize, and I utilize the correlating asset to be able to have a bias. So for example, gold and silver. So if I have an S&P at the lows of my session, then I'll essentially have a bullish bias for that day. So from that point on, I'll look for gold and silver for unicorn breaker form and confirm between 7:30 and 9:30, and I'll look for the retest of the inversion of those breaker, and then within those retest window that I have given, and expanding my mind because I was only doing this at first with NQ and WIME, and over the last 3 weeks I started expanding that and then going across different instruments,
Yeah,
you
this
know, and
is
it,
new. This is new. I mean, you've broken down some parameters a lot more stringent in regards to IFEGs and macros, if I recall. So this
yeah,
SMT thing that you're doing seems to be, I mean, you're finding obviously success with it, but it seems to be newer within your model. Yeah.
yeah, because I was trading an early breaker with test prior, but it was associated with a target. um, it had a requirement of a target. Like I think you heard me talk about major psychological level prior in some of my previous discussion
Yes.
on my model. So
You like the big figures. You like the bigger, the 8 and 20.
yeah, the
The 80-20, sorry.
40,000, yeah, the 20,100. So level that ends with two zeros or three zeros. I used to actually like to see price fail to grab that before returning to retest. But I'm noticing with much more instrument, I don't even need to have that if I have that SMT, pre-market SMT. So essentially before 9:30, if I have that SMT established, most of the time if I have the breaker form, and I kid you not, the breaker don't even need to touch the fair value gap on a higher time frame, which is mind freaking blowing. And I just want to share because I'm able to go down this rabbit hole and then perfect my model further and further because the win rate for that specifically is like still testing. I'm still within like a year and a half of data, and I want to expand to like three to 4 years. But it's quite amazing how when you master, you talked about the model that I think it was probably the 2024. I was thinking maybe 2023, but I think it's a 2024 model. And the mentorship that I've gone through that probably give me this idea probably as of late or recently. But it's quite amazing when you study ICT. One of the things people make a mistake of when they're trying to build a model and essentially develop something that they can call their own is that you cannot just copy and paste. You have to be a student. You have to come with a mindset that, okay, this is simply the foundation and a framework as to how I can operate and go and look how past action can essentially behave. And the most important thing is learning how to think, not what to think. Right? Understanding why things operate the way they operate and be so curious and infatuous with trying to understand
So,
why.
layering the concepts, is that fair, Fariana? Do you like that
Uh,
term?
yes, that's probably like the perfect representation of that. Um, that's probably the perfect representation because there's so many different confluences. But one thing that I definitely appreciate is like the picking of a few concepts, things that I believe might be correlating between like, for example, when I was trading, like when I my MX model, I utilized an MPL, right, major psychological level. I utilized key levels, essentially like an RL to ERL for the most part. That's the oversimplification or some level of simplification of that. I utilize weekly profile and maybe one more concept in addition to that, and then my macro, and that's
I
about it.
love that.
I don't try to complicate it, you know. And I have an entry model, the unicorn breaker. I know you like to utilize the inversion model, but you know that's for my personality. I know that's what works for me. But you don't really need to complicate it as much. And finding the right people to listen to, like obviously this type of listening, this type of space where you can listen to people that are obviously going to break down that model that can show you success and then that can give you like how to construct a successful model is very very important. But I just want to let you guys know, obviously, like some of the things that I'm currently working on. Like I have.
That's great, brother. I love it. I just want to say quickly, I mean, I love you, but I got a lot of hands up and I'd love to get to everybody. And I want your thoughts and 2 cents as we continue collecting more thoughts. Is that okay?
Yeah, yeah, definitely.
All right. So Mauricio had his hand up, and then we got
Thank you,
Dom,
kid.
Pippi, and Persian. What's up, buddy?
Everything good? Everything good. We've been talking on the phone for several days. That you've been telling me that I should come here and tell my story, and I think that with Michael here actually will work for me as a therapy because the rough path that I've gone through the past year. So with that said, Michael, my story. Basically, I'm born in Colombia. I moved to the States for undergrad in 2003. Did real estate finance and real estate development. Started working at 2008. Got married 2013. Have three beautiful boys, and and throughout 2008 through now, I've been in real estate. But the way that I got into the market is in 2020. Miami completely, changed city with all the New Yorkers, everyone coming here. That was a very, very lucrative year. It's been my best year in my entire life. And then 2021 and 2022 it started slowing down like big time. By 2022 I had this FOMO with all the people around me that they just went and buy any stock in 2020 and they were making money. And I always had like a passion for Wall Street. I always wanted to go to New York to work there, but never had the opportunity. And unfortunately, I made the mistake to get into the market in 2022, thinking that you know that I've been successful in real estate. I can do, if other friends of mine are doing well in the market, I can start buying good company. And that is the year that I started, putting a lot of my net worth that I built since 2008 into the market, and I got completely crushed. On the way down, the market was basically making a retracement, and that year I got panicked. I lost over $1.5 million, and it was a completely disaster with my family. Like it was a chaos. It was a completely chaos. My wife always asking me like, "Why are you like so moody?" With my kids, it was just a completely horrible years, 2022, 2023, and then it got to a point well, I gotta stop. But the thing is that I compete for the national team as a volleyball player in my country, so I was raised with a lot of like discipline and with the mentality of not giving up. And I say, what, I'm not giving up, and I need to. I'm just gonna continue. I started like, obviously after in 2023, I tried everything, moving average, stochastics, the RSI, like the typical stuff. And it might sound like kind of weird what I'm gonna say, but I'm very Catholic, and I ask God to give me, you know, some light because I was going through a lot of pain, and and, uh, and Michael, I 2 days later, randomly, I got to know you, and and I started, listening to your content, and I started studying it, and it's been a blessing. It's been the light of the tunnel that I asked God. I resonate a lot when you said that you ask God for that gift that you're giving to the community. Okay, the Lord knows that I'm saying is true. Um, I don't have, anything to come here and just BS. And it just, I haven't stopped working I still have my goal to basically get what I lost. It's been really painful to see like all the hard work just to vanish like that. But it's the learning curve. It's the lesson that I had to pay. I understand, but the important thing for all the community is that I'm for real. I don't trade prop firms. I started with my own capital. I still with my own capital. Um, on the bright side, I see a huge opportunity in the markets. I raise big money for multifamily developments. I have to deal with a lot of families, wealthy families, and I just see a huge opportunity in the market, for people, especially on the second and third generation, that they think that real estate is boring and they're just getting all into Bitcoin and all of that crap. But the point that I want to make here is just like, besides all the controversy that we have in social media with the ICT concepts, this is my story. Stories that I was finally able to find an edge that provided me to know when to stop, that provided me a framework. It's not perfect for me. But it has a line in the sand that I never had. It has concepts that had made me profitable. This is gonna be the first year that I'm gonna be profitable in futures, and I'm on the way to recovery. 2026, I hope that is the year that I start seeing green. And I'm sorry if I get a little bit sentimental, but it, this is the first time that I'm saying it publicly. And thank you, Michael.
Listen, I want you to know something. I have to be careful because of privacy with a lot of students. And I've had the privilege, the honor, the sheer pleasure to teach many individuals around the world. And a lot of folks came to me with very similar situations. I've had people that came from mergers and acquisitions. I've had people come from failed businesses and enterprises where they've lost millions of dollars and they were just completely on the rocks. Marriages are gone, or on the verge of. I hear and I know that your pain is real because I've seen similar, and please permit me, but I've heard worse. And individuals came through all of that and came and climbed out, and you don't know the success stories because a lot of people don't want to endure what you just had the courage to do. You hear on the internet with people listening, and I'm sure people will be listening recording later on when Kit makes it available, and you're going to have an impact on someone that's been quietly sitting there thinking about like, that's I can hear what he went through, and he has more courage than I do because I would never come out there and tell the world that I lost $5 million. I would never come out there and tell the world that I lost $3.7 million, in my retail business. That I just failed at. I thought I was going to do very well and didn't do well. And investing, learning to invest in their own hands, learning the skill set, cutting out all the cancerous perspectives that people are going to tell you that it's not for you, it isn't going to work for you. These individuals went the same path you're on right now. And that time when the locust have consumed and stole from you, all of that lack can disappear. And it's important for you to have that hope, because what you're doing is you're learning to invest in yourself. All you did was sow a very, very expensive education. The only thing you did differently is you paid a whole lot more upfront for an outcome that's destined for you. You have no reason to feel unnerved, ashamed, or embarrassed, because I love people like you. I love because you have the courage to come out here, wear your heart on your sleeve, and say, you know what? I broke myself. Nobody else is at fault. I'm going to correct it. And I'm trusting God that's going to give me the ability, the wherewithal, the wisdom, and I'm going to give him the credit in the end. And I believe you're going to get it.
Thank you, Michael. Thank you for your kind words.
I don't know if people are really truly going to understand the transfer in emotion and thought and the conveyance of what's happening here. I get emotional because I understand the pain, and I think Michael does as well. And what Mauricio is coming up here on Front Street and saying, it's powerful, it's therapeutic. And when you have to come to the chart and reconcile with your loved ones, that's what Mauricio is saying. And as someone I'm very fortunate and blessed, and I get to understand the interworkings of the mind of this trader who came from a very dark place of despair, and he's found hope. And that's one thing I think is a very common theme in a conversation like that, is the ability to dust yourself off and get back up. Finding sanity in an otherwise very difficult circumstance. Traders are going to understand that. A lot of traders will. A lot of traders will. Some folks don't. But the longer you're in the game, and this tax, this toll, this cost, this expense that we have to the market in our ability to learn, I can stand here on Front Street and tell you how expensive and how difficult and how painful that can be. And it's a very sobering thought, the difficulties, the challenges, the pain. And that's often overlooked. That's often ignored. It's often glossed over. But something that we do here very specifically at Trader Roundup, as Michael so graciously said, is we love and we embrace that pain, because there is therapy, there is light on the other side. And as desperate and as difficult and as challenging as times can be, dropping to your knees and putting your faith into something bigger than yourself is very touching. And as traders, digging down and finding that, I want to call it intuition, because there's a voice inside that we have to calmly come to terms with. That's not easy to come to terms with. It's very difficult. I know this. Seeing price does not make you a good trader. Knowing how to read price does not make you a good trader. It's a step. Mauricio taking, and again, as I see, as Michael has said, putting this work, this knowledge in your hands. There's a level of art being like, I think of clay, and what can you do in shaping these concepts and working these concepts in your own hands. The power of the knowledge in your hands is what's inspirational. And as someone that's been able to watch Mauricio literally say in private, the same way he's saying here in public, of how he has found a sense of clarity in the market through following these concepts and by believing in what he sees. That belief can't be taught. It has to be experienced. That belief is, you can never give that to someone else. You can talk about it. You can explain why, but only you are going to be able to find the resolve to click the button at the correct time and then manage your risk accordingly and survive so that you can thrive. And Mauricio is telling you he has survived. He has fallen to his knees. He is through insurmountable challenges, and he's here to talk about it.
How many people?
It's been great.
I'm sorry. I'm sorry.
But I'm sorry.
I
No, I
was
was
about to
gonna
say,
say
like, how many of you listening would have the conviction to want to even try if you suffered as much loss that this gentleman's making known? It's just it's admirable. It's courage. It's obviously faith, and I'm convinced that there's a large degree of people all around the world that probably wouldn't even muster up the consideration to even try, and for you to even make that attempt, for that.
thank you. And I made a promise to God, just the same as you did. I made a promise to God that if I'm able to recoup the loss, I will donate a lot of my gains moving forward with that money, big time. A lot of foundations that I know in my country, Colombia, that need help. And I told him, I said, listen, if it gets to a point, which I promise that it won't, but if it gets to a point that I get cocky, if I ever get cocky, just take it all, take it all, take it all. But I'm here to serve you, and if you show me that I can do it, trust me that I'm gonna be here a server for for forever. And it's happening, Michael, and I see it on. I only can I get like super emotional, and I tell everyone that this works, this works, um, and I hate, really I hate when people like start like fighting with the concept and whatever. But at the end, what I said to kid is, you know what, I just keep moving forward. I made a promise, I have a goal, and let's try to get everyone in sync, and let's see how we can help each other, because this is and we're alone. Whether you're trading from your office, from whether you're like a ex market maker or you were on the floor. I see here, for example, Pax trade. He's trade guy that I follow him, and he talks very well, and at the end he just trying to share the story, be honest, and see how you can help other people. And at this point, this has been like real therapy for me to share my story and say that I fucked up, that I made a mistake, but I found an edge, and I'm just climbing out of, and and it just because of your teachings. That's all I can say. I just thank you for that.
Hey, Maurizio, this is Pax. Can you hear me?
We can hear you, brother.
Yes.
Jump in.
All right, listen. I just clicked into this and just been listening to you for the last 10 minutes. My heart breaks for you. I don't know if you have a family or not. Um, I've been where you are. I've been, I just got off the phone with my oldest son, who's 26 years old. We were kind of talking a little bit about this. I had a net worth of north of $20 million, and I created all of that money by trading. My life changed. I got divorced. The pits changed. Business changed. And within 12 years after the Great Recession of '07, '08, and then after MF Global failed in 2011, I blew myself up and I lost everything that I had. I sold my house, which was, I paid cash for and lived in the most expensive area in Chicago. And I restarted my life and I restarted my trading. I was formerly one of the biggest traders in the NASDAQ pit in the world, actually one of the biggest independent NASDAQ traders outside of, anywhere. And I went back and I won lots and 2 lots and 3 lots and 4 lots and 8 lots, and just learning how to be profitable again, and I don't know much, if anything, about the way that you guys trade, but I do know exactly what you need to do in order to be able to make it back from the depths of the abyss that you are in. You're not alone.
this community of people right here are showing you this faith that Kit and and Michael, I don't know him, I've never spoken to him, I've never interacted with him, but the space that he and all of these guys and women are holding for you, my brother, is telling you that there is a God and you're not it, and there is a community, that you're not an island and you're not by yourself, whether you're in Colombia or you're in Chicago or you're in St. Louis or you're in Southern California, my brother. There are many of us who have been through where you were and have come back stronger. The main difference of my life now is I've had more money, but I've never been wealthier. I've achieved all my financial goals that I set out in 2013 when I started trading again, about 2 years ago. But the difference is my marriage has never been stronger. I'm 57 years old. I've had tremendously profitable. Now, I had a very profitable week. I've had better weeks. But it's 6 o'clock on Friday night, and I'm not out drinking martinis, eating steaks. I'm at my club working out. I will go out and have a gigantic steak, but I'm working out first. I've got 5 kids, and I spend time with each of those kids. I've spoken for at least an hour to each one of my kids today. I make time to make sure that I share my experience, strength, and hope with other traders that need to know that that you're not going through this alone. Okay. Trade the way that you trade. Here's another thing I wanted to say too. You don't need to make promises to God. When I was at the depths of my abyss, when I was at the depths of my despair, I didn't ask. I never prayed for me to recoup my losses. I never prayed to recoup my net worth. All I did was humbly and simply ask God to give me gratitude. And when I found myself having gratitude, then I humbly and simply asked the Holy Spirit to illuminate my path forward so that I knew what to do and I would be able to provide for my family again. That was it. And that, my brothers and sisters, that is what ended up making me wealthier than what I ever have been. Not richer, I've been richer, but wealthier. And there's a real difference. And anybody who's been through the fire and didn't burn to death, or has been through has been through the water and haven't drowned, will tell you that there is hope. Live in faith, live in hope, live in love, and move forward. Move your body, work out, pray, meditate, breathe, and you'll be okay. And God bless you. DM me if you ever need to talk, okay? I'm always
Thank you, brother.
available to you or any of the rest of you that are going through this.
And Pax is literally what he's saying right now. I mean, he runs spaces. I mean, he prays the rosary. Pax was in the seminar. He's a very strong leader in Christ, in his faith, and he leads by example. And I want to just say thank you, Pax. You've been an inspiration to me. I mean, waking up one day and actually praying to Jesus, really saying Jesus's name. I think I said Jesus's name in your space, maybe I think 50 times. And it just brought me to tears, bro. Like going into a trade and just
Yes.
celebrating Jesus as often as you did in your space, bro. Again, high five, man. Just high five.
Thank you.
This is
Thank you.
awesome.
I'm working out in a shirt now. And at the back of our shirt says, it's got a gigantic cross on it and USA on the back of it. So I wear nothing but I'm work out in an expensive club, but I wear nothing but Christian shirts, Catholic shirts, and shirts that kind of illustrate what the values that are important to me. Because it's not again, part of Kit, what makes me wealthy is the love that I have in my life. Here's another thing too. A couple years ago, I almost died. I have AFib. And the first time that I had AFib, it caused heart failure and it caused my heart rate to crash. This was a year and a half ago. My heart 15 beats a minute for about an hour. And I'm laying there thinking I was going to die. And not one time did I think about my money. Not one time did I think about, my cars or my houses. Not one time during that period did I think, did I have enough? I thought about the love I gave and the love I received. And I thought about the love that created me, and that's it. That's all that's important. That's all that's important.
everything else takes care of itself.
Pax, you don't realize this, but again, like just as a host in the community here, there's like, and you don't know Michael, but you two have so much more in common than I think you realize. And again, you don't know him the way that the community does or the way that I do, but just as a friend, it's funny. You guys are similar age, and there's so many similar parallels just in how you both lead and how you live your life off the charts and how you talk to, folks that you're around and how encouraging you are. And I just want to tell you, whether you realize it or not, I don't think I'm the only one. I'm speaking, I think, the elephant in the room, that people that listen to or know you, Pax, and that also listen to or know Michael are going to draw a lot of parallels, my friend. You guys have very similar stories, whether you realize it or not. And it's kind of cool being, again, an observer of your story and, where you and how you've been through. I mean, I found you through social media and your trade style and how you trade and your reputation preceded itself, Pax, within the community. And I say that, with love. And I think Michael also has a very similar kind of thing where his reputation will precede him. So people will have their opinions before they might get to know the person. And as someone who's got to know the person, or at least listen to them in detail, there's just a lot more common denominator than you guys might realize. So I just like bringing that point to the table.
Thank you for saying that, Kip. Thank you. I appreciate that.
I agree. I agree with that.
You came forward and you gave a stage for God, because in this industry it's all about me, ego, what I can show the world that I can do with my own hands, and not give the Creator the opportunity to at least get the credit for giving us our breath, our inspiration, our faith, because he's the author and finisher of our faith. And I love hearing other people. And I've had the privilege to train other traders that came from the pits when everything went from open outcry to electronic trading. I was inundated with guys that literally were like, I don't know what I'm going to do now. I'm used to being down in the pit. I'm used to that chaos. I mean, that was my grind. That was my edge. That was my whole thing. And if you took the initiative to come out and say what you did here, I would love to hear you give a few minutes of what you had to overcome coming from the pits perspective to on-screen trading.
Well, it's I don't know. I had to overcome myself. On the floor, I was the market. I was the market maker. Yeah, I traded in the Nasdaq. I helped create the Nasdaq. Yeah, I mean, period. And I traded anywhere between 10% to 15% of the daily volume for my own money and my own accounts. Nobody else's. I never managed money for anybody. And so, when, like right now, the algorithms are what move the market. The HFTs, the algos, they push the market wherever the hell they want to for millions of different reasons. In those days, if I put my hands up half bid, small traders were 2 bid, 3 bid, 5 bid. And then, paper would come in 60 bid, I'd go 70 bid, and the market moved that way, and I'd buy them and sell them, and that kind of stuff. That was incredibly difficult to replicate on the screen. I'm not a market maker on the screens. I'm a market taker. When I was blown up after MF Global failed, I left the hog pit and I was trading S&P and I was trading NASDAQ. And I'm trading like I was on the floor. I'm buying 50 lots and 100 lots and trying to press the market higher. Those don't give a shit who I am. They're just banging them away. Another thing too is I could see the volume. I can see, I knew who was long, who was short, what traders were long and short, who was, likely to get squeezed. I knew what side the funds were positioned, and I can see the volume. I can see they're adding. I can see they're taking them. Richard Dennis was a huge fund trader. Tudor Jones, huge. Tudor's broker would come in and start buying 1,000 lots. Well, I'm not going to sell those. I'm going to start buying them with them. If I'm already long, I'll sell them a few and I'll help encourage the market higher. There was a lot of ways that the market moved, and it was all through human hands. And because I can see the volume, I could size up. If there were 100 lots coming through the pit, well, I knew I could trade 100 lots. And the Nasdaq was $100 a tick at the time, so it's $100,000 every 10 points. If there were 50 lots coming through, I knew I could trade 50 lots because I can get out. Can't replicate that on the screens, no matter how much you want to. Well, it's very difficult to. No matter how much I tried with market profile, buying profile, or order flow things, you can read the volume, but it's very difficult to make those decisions, size up and to size down.
So, the technicals are the technicals. You're going to draw lines on a chart. You're going to see the trend lines, and that doesn't change. Support and resistance, you're going to see those, and those don't change. The moving averages, you see those, and those don't change. But the fact that I'm a market maker, that I was a market maker and now I'm not, the fact that the market will run me over, care, about me, and I mean, it did on the floor. But nobody was there to say, Pax, you suck. Pax, you short. I'll help you out. That didn't happen. And and I don't know, who's positioned. I don't know who the counterparties to the trades are. Hey, I'm 100 at even. I'll buy. Are you? I'm Goldman. All right. Well, I'm not going to buy those evens because Goldman just sold 10,000 and got another 10,000 to sell. You see what I mean? I can't buy one I can't buy one. If there's 500 or if there's 100 offered at even, I can't buy one and say, who are you? I have no idea who they are, and I cannot see the volume. I cannot, to learn how to size up and size down was very, very difficult. To learn when to press my trades and when not to was very, very difficult. Ultimately, the more things change, the more things stay the same now. I still, on the floor when I was making the most money, I was trading the breakouts from the opening range to targets. And I did the math the same way that I do now. So that was really the answer, Michael, is I don't know if that made sense to you or not, but it was really the short of it is that human beings control the market, and I can see who the counterparty was to the other trade. And I know which side they're positioned, and it was easier to trade that way than it is now. Now it's just numbers on a screen, and what are you going to do? Hard. But
No, I
life
appreciate
is
it.
easier.
I know what you're saying. I follow you. I'm quite certain that there's a number of the listeners that are not as experienced or whatnot, or even knew how the pits actually work. Probably went whatever their
Yeah.
head. But I love listening to guys like you. 'Cause you were like a hero to me because you were down there, like you were down there in the war of it all. Like you could see it. You could see the emotions. You could see the roar. You can see when it was dry.
There was a guy. That's kind of a stupid story. There was a guy who put. There was another trader who was a big guy who stood on the other side of the pit from me. He put a guy in a seat. He put a guy in a membership just to stand next to my and on a headset to stand next to my clerk to report back what my positions were to him. So if I was short 50 or short 60 and the market was rallying, he would try to bid the market up and try to get me to puke my positions out, right? So my clerk figured it out. He's like, Matt, Nico is trying to, his clerk is telling he's telling Nico what your positions are. I'm going to kill him. Don't kill him. If I'm short 50, tell me I'm long 50. So I'm short 50 and my clerk, my clerk would say, hey, Pax, you're long 50. So this guy would start pressing the market, trying to squeeze me out, and he's doing the work for me. Meanwhile, I'm giving brokers orders, pay 40 on 10, pay 30 on 10, 20 on 10, and pay even on 30. So now he's offering the market down, trying to get me to puke my longs. And he's selling me 10 lots all the way down. And now I turn around and go, all right, that's it. I'll sell 20 at 10. And a broker turns around and goes, even on 30, sold. Thank you, Nico, you dumb motherfucker. Excuse my language. That went on for about a year.
Can I just add, this is pretty cool. It's actually fun because Michael's not as familiar with the way Pax trades, and Pax is utilizing a DOM, but from a candle or from a chart perspective, he's trading an open range breakout. So, and the way he's laddering an open range breakout is where and how he's cutting his losers short, and he's letting his winners win. Right. So I'm just trying to add context, Pax, in telling the story a
Oh,
little bit.
yeah, all good.
I'm not trying to like steamroll your trade approach here, but it's interesting because again, Michael has a lot of concepts that are around in open range as well. So as someone who utilizes a 30-second open range that you utilize as an algorithmic pivot, and then also utilizing some of the components that Michael teaches his community, again, there's a lot more similarities in what you guys are doing, even though you're doing it in completely different ways. Again, I realize that you're coming off of a DOM. You're not looking at the TA. You're not really looking at even candles or candle science in any regard, where Michael, on the other hand, is looking specifically at the candle and that creation and formation. But again, as
Well,
someone,
let me explain this real
yes,
quick.
please
So,
do.
like Michael, I listened to a podcast that Michael did with I don't remember his name. I did a couple with him too. And I remember, Michael, you started trading in the 90s on an AOL dial-up. I remember that. So, on the floor in the pit, I had direct access to price. In order for me to look at a chart, I had to walk out of the pit and I had to stand in line at a computer. We call them CQG machines. I had to go stand in line at a G machine, print off a couple of different time frames, and then go back into the pit. And I would have to keep those charts by hand. Off the floor traders did not have direct access to price, but they had direct access to technology and to technical analysis. So now, on the floor, because I had direct access to price and I helped move it, create it, I didn't have to try to predict where price would be in 5 minutes or 10 minutes. I could just trade it. So if I was wrong, I got out. If Goldman again was 100 at even, I turned around and bought them. If Goldman came back in and said 100 at even, I sold them at 90. I got out as good. I didn't turn around and buy more. On off the floor, you had direct access to technology, and you had to try to figure out where the market was going to be in 30 minutes, an hour, and how it was going to trade, because it might even take you, if you're a small trader, it might take you 20 minutes to get the order into the pit and get it filled. So there was a lot of different mechanics off the floor and on the floor that gave us different weighting at the market that continue now. Now, ultimately, as you're saying, I think to your point, Kit, is the market's only doing one of three things at all times. No matter what time frame you're looking at the daily like I do, or you guys are looking at different, shorter time periods. We're going higher, lower, or nowhere. And the tools to be able to help determine that are the same basically in 2025 as they were in 2005 as they were in 1995. It's just how we approach it, how we trade it, how we manage it. And that's what is a bit different. So Michael comes from a different tradition than I do, but ultimately we arrive at the same basic, purpose. I'm here to make money. I'm not trading to be right. I'm trading to make money. I'm not an analyst. I'm not, I'm not paid to think. I'm paid to react. See what I mean?
Love that.
Yeah, I love it, man. I appreciate you coming forward.
Well, thank you for inviting me. Okay, thank you for engaging with me, Michael.
Can I just tell you, my DMs are blown up, and they're like, "You need these two, like whatever you do, don't let Pax and Michael stop talking." There's so much gems between the accumulation of information here.
Gee,
So,
the reason
just so you know, the DMs are on fire.
the reason that I you know that I saw when I saw Pax and I saw Michael, these two gentlemen are like people that I really like. One is my mentor, the one that I learned the concepts, and the one that I've been able to make all these effort and climbing this hole. But Pax, I started following him like about 6-7 months ago, and it just like the blend of these two gentlemen, it just what keeps me going. So I'm super grateful that that the two of them were able to exchange some words here, and even though they have two different styles.
Yeah, I'm not sure that either gentleman are going to really realize how, I think, profound this resonates with a lot of the listeners, right? I just get to hopefully draw that line there. There's just so much more similarity. There's so much more commonality. And when you deal with stark differences, and sometimes people, find reasons to overemphasize their differences versus really coming together with what's common. And you know all of the things off of the chart, I think, scream so much more where and how you guys are similar, right?
Well,
Faith is
hey,
so
listen,
important, helping other people so important. I love it. I love seeing it.
I'll be the first to admit that I do that. Um, but I think that let me see if I can put this into words correctly. We as traders need to be. Oh, there's a big difference between ego and self-confidence, but we need to be self-confident, self-aware, self-possessed. But we also need beyond that most people will ever reach. But beyond that, we also need to have a strategy that we believe in, that we have confidence in, and that can border on arrogance. And I know that I can appear that way. Pippi will tell you that. I know that I know that I can appear that way, but that's because I know, that I know what I'm doing. I know it works for me. I know how to maximize it. I know how to help other traders learn how to do that. And again, Pippi will tell you that, and I know Michael knows how to do that too, guys. There wouldn't be out there experiencing experiencing the I don't even know how to put this. Experiencing the this is the greatest business that God has ever invented, and experiencing that joy, experience, in spite of our struggles and in spite of our pain, Maurizio, in spite of the difficulties that you're in, this is the greatest business ever. And when you get on the other side of this, you're going to see this whole experience that you're going through as the greatest gift that you've ever been given. It might not seem like it now. You've got 5 million reasons to think otherwise. But once you're on the other side of it, you're going to be so much better, so much wealthier, so much happier, so much more loving and kind and thoughtful, so much more giving to other people. You know, giving of your time like Michael does, like I do, giving of your spirit because you've been there, you've done that. And I don't know. I know that I have. Look, I have 2 younger brothers. And I look 10 years younger than both of them, and I'm older than both of them. One is a Chicago cop, the other one is like a retired salesman. But and that's because I'm moving forward every day. I'm trying to do better and be better. I'm trying to be for lack of a better cliche, trying to be the best possible version of myself every single day. Not just because my wife deserves it or because my kids deserve it, but it took me a long. I had to go broke before I realized, my brother, that I deserved it too. I had to go broke before I realized that God wanted good things for me too, not just for my wife and my kids, but for me. And God wants the same for you. And when you're able to accept it, you're going to learn how to stay out of your own way a lot better. And then, Michael's concepts and, are going to flourish in your life or, whatever, or my stuff or whatever, you're going to believe in it. You're going to believe in yourself and you're going to be able to move forward of the obstacles that this business are going to throw at you. Not every day, you don't make money. Nobody makes money every day, but YouTube streamers, no, but at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, you're going to look back and you're going to say, that was the greatest thing that ever happened to me.
Amen.
That's truth.
This is a fucking great space, bro. This is really good right here. This is really good. I love it.
You should make it. I don't know personally how to find you on social media or what you actually do with the community yourself, Pack. But if you could, could you let everybody know what you do and when you make yourself available? I'd love to sit in and listen.
Oh, he's on. I mean, Pax is on Ninja Trader Live. Yeah, Pax, go ahead, talk a little bit about where you're at. I know you're on YouTube and you live stream. You talk the markets.
Oh yeah, it's exhausting. But Sunday nights I do like a market prep show on Ninja Trader Live with a couple other people, and then I stream Wednesdays and Fridays. Fridays, today Friday streams are not my favorite because I'm trading. One of the things that I've come up with is trading the minis and micros as a spread. So the CME group has me trying to explain that through trading it, so other people see it on Fridays. But on Wednesdays, I stream trades. I don't trade. I'm not going to trade my normal size on a live stream, but I'll trade 8 lots and shit. And I did that on Wednesday. I'm on Twitter, Pax Trader 777. Pax is my trading badge at the Merc. You guys can all see from my profile picture. Pax means peace in Latin. I studied to be a Catholic priest. I went to work at the Chicago Mercantile Exchange as a runner, make a minimum wage in 1988. I didn't know anybody when I walked onto that trading floor. And by 1993, I was making 75,000 a year, which in those days was big money. And I realized there had to be something greater than just making money. So I went to the seminary for 3 and 8, studied to be a priest, and then came back and became a trader. And when my badge, I wanted something that meant, I wanted to choose something that meant something. And I thought that Pax would kind of sum up what I was after in life. So that's where I am, Michael. I do spaces with these guys every so often. I'll do them on my own, and I don't make myself scarce.
No,
That's
they're
awesome.
very supportive.
Thank you.
So hands are up. Vision Turtles with his hand up. We've got Dom trades coming, and we are. It's 7:42. We are going to be wrapping up here. We've been here since 3:00. So I know no one wants to hear that, right? But Persian Turtles has got his hand up. What's up?
Hi everyone, I'm Mentor. Sorry for my English. It's been a
No
while.
problem.
I haven't spoken any language in English, so I'm living in Iran. So it's obvious I can't speak very good. So I just listened to the conversation. It was so very good, and thank you for experience that you're sharing with us. And I just want to talk my model and situation that I have. My model is time-based model, and I'm not inventing something, just ICT, nothing more. It's time power of trade for me, and I trade in time that between and every hour between 770, 37, 27, 47, and 57, 47, and 57. It's in macros. So I like to, first of all, my model. The most important thing in my model is drawn liquidity. I should find, first of all, where is the drawn liquidity. So after I found the drawn liquidity, I tried to find a good PD array and trade in this time, because model, its manipulation of every candle is in 7 minutes. Like today in Nasdaq, I trade in first present FVG when it's reversed and 10-7 to sell side liquidity. I think, yeah. And in PM session, I trade in 315 to 2R. I just go to 2 or 2.R,
Okay.
and it
So
was
real quick, did you have a question, brother? We're following. I'm following.
no. My question about the situation when we have confidence, but I have confidence, but when I open a trade, I just feel I just want to see the candles going straight to the TP. So is there any mental issue or something I should situation something to figure out how to solve this problem? So I'm good. Sometimes because of this, I traded. My trade is going to against me. Sometimes I close it early. This is my question, and this is my mind. Thank you for everything.
Well, I'll take a stab at it. It sounds as
Thank you.
if your uncertainty may stem from a lack of experience reading the tape, watching the market with your model in focus. Two, if it's not that, it may be a combination of over leveraging. I've seen a plethora of individuals come to me with that same question on a day by day basis, and it's usually linked to them wanting to trade larger size than they're better equipped to do at the time with their present skill set. Let's say it that way. And if they haven't been utilizing the model that they're if you come before someone, okay, if you had a winning trade and you came out and said, okay, this is the last trade I took and it was a winner, and you'll be confident in explaining what the model was. And I've listened to this space and I've had people email me and I've watched other students and other traders doing other things. And they're very confident about what they did when it was a profitable trade or when it worked in their favor. And you're going to have to grow to trusting that it's not going to always do that for you. You're going to have a willingness to accept the fact that you as the operator, you as the, well, executor, it isn't going to always pan out for you. And with the increased volatility and all the things that's going on around the world, all it takes is a knee-jerk reaction to something going on geopolitically, and then boom, we have 100 handles instantly. And it's not unheard of to see several hundred handles in 1 minute for NQ. You know, that's volatility that can tear your face off, and you have to have a great deal of respect for that. But it shouldn't also paralyze you. And by having an expectation, what is rooted in a baseline experience, meaning what are you trying to trade? What's the catalyst? What are you trying to enter on? Why should the market go to where you think it's going to go? So where's terminus? Where's the draw on liquidity? Where's that target you think it's gravitating towards? And why should it do that in the first place? And if you're not confident that these things that you're leaning on to ascertain that information, if it's not uniform and consistent each time you do it, then it's normal for you to feel uncertainty. It would be not normal, okay, for anyone else to feel that. If you don't have the model well framed, written, and then you review it on a day by day basis, not tweaking it, not trying to add new things and parameters and settings and whatnot. Simple things. Why are you going to get in the market going up? Pax made it perfect. I say the same thing. You only have 3 functions as a trader: do nothing, buy, or short. It's as simple as that. Now, if you know what you're looking for, if there's so many things that's indicating to you as someone that's been studying price action, everything seems like it wants to go up. They're so richly illustrated in price action that it wants to run old highs. It wants to go to these old highs. Well, chances probably are going to look for a long in that. So then you have to know what it is you're going to use as a catalyst to get into the trade. So what's your function for entry? And as I teach us, there's several PD arrays depending upon where you're at in that price leg. Once it starts, then you're going to have to, resign yourself to what is at the market right now. And you're going to just forego the opportunities that were afforded to people that were more astute at the time, the deeper discount entries on a long position. But that doesn't mean just throw it away because you couldn't get that low entry. But expecting the price to run away, this is what I get. If not more than anything, then tell me what the bias is, Michael. Tell me how to know when it's going to go up or down. The second highest requested information, and I've said it many times in lectures, I've said it many times here with Kit's audience and the things I've done in my own Twitter spaces and whatnot, is how can I learn to trust the move that I'm in? Because I want the run to get right to my target and be done with it. And I'm telling you, there's no shortcuts to this. It has to be endured. It has to be done over time, over weeks, months, and years. And traders, I can tell you still to this day, there's some trades when I'm getting in there, I know I've put on more size than I probably should have. Once I get in the trade, then it becomes real clear. I probably put a little bit too much size on this one. And I want it to run. I feel that same impulse that any one of you, that if you're brand new to trading, you want it to just quickly get to your target because that uncertainty. So what I do is I practice what I preach. If I feel like I'm emotionally attached to that trade, I got to scale out of it. And the first thing I do is cut half of it off. Now, some of you might think, well, that's too much of a haircut. I'm not going to take that much off the trade. Because what happens if it runs and I could have got that big run? See, I've been doing it long enough to know that I don't need that next big win, the next trade to be a big windfall victory. I don't need that. I just want it to follow the model. And I need to make sure that I'm executing under the premises that I've outlined for that model and stay stringent to it, adhering to just that only. So over time, watching your price action with that model, that means no execution is in the beginning. This is how you condition yourself. You have to trust what you're doing is a viable model. Just looking at it in static price action in the past, that's noteworthy and that's good for back testing purpose, but that's what a neophyte starts with. And they don't stay there very long. They have to graduate to then watching price action live. That's tape reading. But you can't press the button yet. You can't do that because what you're going to do is you're going to train yourself to be impulsive to reactionary. So what'll happen is, and this is how it happened for me, and a lot of my students will confess if they're being honest, they'll tell you the same thing. And anybody else using some other method would probably tell you too if they're being honest. You know what your model is, you know what you're trying to trade, but then you can't stand the impatience of not waiting for the actual setup. You sit there and you anticipate the setup. You anticipate the entry and you get in before you should. What do you think that's going to do for your subconscious? You're inflating the necessity for that outcome to be favorable for you, much more than it would be if you simply would have used the model entry. What was the mechanism that gets you in? Buying a fair value gap, buying a breaker, some kind of support idea, whatever that function is that you use to get into the trade. Now, the importance of being right or wrong is such an inflation that your mind now is consumed with it. And the only mechanism that our brain can do to compensate for that is we start perceiving time through the lens that it needs to speed up for us, or we're uncomfortable. Time can't be sped up. It can't be sped up. But when you're in a dramatic situation, for instance, you've ever been in a car accident? I've been in several. I sped a lot as a young man, had fast cars, and did stupid stuff. And I can tell you, as fast as my cars would go, they seemed like they were moving in slow motion every single time I was in those accidents. Why? Because your brain is calculating all these things. This is about to hurt. I am about to have some serious shit happen to me. And it's calculating all this constantly, real quick. Our brains are amazing creations. Fastest computers in the world. They'll never make a computer faster than our brain. But you now place yourself in that same situation. You just made an accident happen. You caused this accident. You over leveraged, you anticipated, and then you jumped ahead of the actual setup and you entered before you should have. Over leveraged, and now you have two things going against you. You need this end quickly. You want it to end quickly, but now because you're in an emergency, how's your brain going to react? It slows everything down. And that's very, very uncomfortable for people that are not used to that. There's a lot of wonderful things you can do as additional studies and case studies for how the brain works, how it perceives stress and anxiety. All these things are actually beneficial for someone like we as traders because we use our brain. We use our brain to determine whether there's a viable risk to be assumed. Is it worth to take that risk? But we as traders, when we first start, the impulsive nature in what we do through our flesh is we want to have that instant gratification. We want to go out and show the world that look what I did. Look what I just made. And you won't tell them this is how much it hurt. This is how scared I was. My balls were drawn up to my ass. Okay, I was scared shitless that this thing was going to turn on me in a minute, and I couldn't get out of it fast enough. You won't tell them that because you need to convince yourself that what you did was the right thing because you know deep down inside it wasn't the right thing. You jumped the gun, you were impulsive, and you over leveraged. So right away, you're doing every cardinal rule that a trader should not do. You just did it. And now you're arguing with, I better get out of the trade, or what do I stay in the trade? If it wins, wow, it's going to be a big payoff. But if I lose, I already know I did the wrong thing. This is going to suck. So you're caught in this loop while your brain is completely compressing time. It's still the same time everybody around you, but for you, it's dragging. Every 1 minute candle feels like 60 minutes, and they're just stretching out real slow, real painful. So to alleviate any need for going through that, you have to do things properly. That means back test until you understand the model. Once you understand the model, then you have to place yourself in front of price action. But you can't place yourself in front of price action while risking money when you don't know what the hell you're doing. The only thing you're doing when you do that is you're feeding bad habits of concern about the outcome being favorable versus is price continuously giving me feedback? Is every single one of these candles printing supporting price? Every down close candle supporting price action to the upside? Yes. Okay, that's all I'm focused on. I don't give a shit whether my stock gets hit or if I get my first partial exit or if it goes to target. I'm watching every single candlestick as it's printing. I'm getting immediate feedback. I want to know, is everything that I'm expecting to see in price action, is this price swing still holding true to what my initial expectations were on it? And if you are focused on that, you're not over leveraged, you waited for your signal, you waited for that setup to be there. And when it was there, your order was executed because true professionalism is going to be in the form of a limit order because you know what you're looking for. You're getting your price. Marketing in, sure, you can do it. But I want you to go in with your limit orders because that way you're getting the price that you want. You're letting the price in the market come to you. That means you're exercising more discipline, patience. You're not chasing price action. We're not buying it when it's going up. We want it to come down into that fair value gap. When it hits it, then we have immediate feedback. Does it stay in the upper half of it? That's what we want to see. If it stays in the upper half of it, what does that do? It gives you confidence. You can't worry about your stop loss getting hit or the elation of you getting to your target if you're focused on every single candlestick and what that criteria is matching for the model. If you haven't spent the time watching price action, building up to that level of experience, seeing it without monetary risk, without the reward, without the punishment of being wrong, that's the missing piece that everybody skips over. They all just want to get out there and start making money. I want to be the next guy that makes $1 million. I want to be able to go and say, this is what I just got to pay out. I just hashed out this much millions. And it only took me this much time. I'm not trying to, reduce what these people are doing because it's commendable. It's wonderful. I know what it feels like to make that first $1 million, but wait till they have what it feels like when you lose $1 million. You want to puke your guts up. You don't want to get out of bed. You don't want to face your wife and kids. You don't want to do that because you caused it. So to avoid those types of things prematurely, you have to do the right things. That means there's a step and a place for everything. And wanting to see the candles run to your target, everybody wants that, man. Everybody wants that. But not over leveraging, not rushing the setup, not predicting or anticipating the setup before it's there, just because you can't stand the impatience of waiting for it to come up. It's indicating, here's what it's showing you. You haven't done enough work watching real price action and trusting that the model that you're looking for delivers. You just know that there's something to it. So the lottery's $950 million. Everybody's probably buying a ticket. And if I don't buy one, shit, I can't win it. So let me just get there and just blow $50 on it. It's impulsive. And you can't be impulsive about your trading. Because if you remove all the things I've talked about here, it won't fix everything because you're still going to bring baggage to it, your own, quirky things, their personality problems. We all have them, character flaws. But it'll do the most in terms of staving off these things and help it a little bit more streamlined, get to your outcome that you want.
Thank you so much.
Dom, you've got your hand up. I don't know how you follow that.
No, that's great. That's what we're here for. Appreciate you spending time here with us this evening. Pax too, it's good to see you here. I got a quick question, easy one, comparatively speaking. I think hopefully, when it comes to the raw data and statistics trading, like spreadsheet traders, quote unquote, like or quants, right? You've often referenced the importance of data too, like whether it's data in our own trading or the 70% probability of a higher low for the week being in by Tuesday's London session, or the RTH gap filling half the way 70% of the time. Like, what are your thoughts on purely statistical trading and how like it can be most effectively paired with your concepts?
I don't know exactly what you mean by statistical data and how that would fit with what I do. But I think that if any student that spends time with what I'm sharing, you can seriously spend an amazing amount of time collecting data that support or negate what it is I teach. If you're a number cruncher, you can see how many times does the opening range in the first 30 minutes from 9:30 Eastern opening bell to 10 o'clock in the morning. How many times does that gap trade to half of it? And I've been doing it for a long time. And 70% of the time, you're going to get half that gap fill. In and of itself, that's an advantage right there. So for these high frequency trading guys that want to just get in there and look for something right away, and they don't have a whole lot of time to spend in front of the charts, the 10 o'clock people, Stephen King wrote a book or a novella or something to that effect and called it 10 o'clock people. And it was based around people that went outside and they smoked around 10 o'clock. They would take their smoke break. And that was kind of like the funny thing I thought about the 9:30 to 10 o'clock is that's the 10 o'clock people's trade. They're looking for that half gap fill. They don't have the patience to stay for that full gap closure. And they know that sometimes the full gap doesn't always happen. They're not astute enough to know when it's going to occur. So by taking that data and keeping track of it, and this is something I've advised all you guys to do, is when there's an opening range, how large is the opening range? Where did we settle previous day to where we opened at regular trading hours? We see in deference to those two price points and how often it goes to half gap fill, 3/4 gap fill, 1/4 gap fill, full gap closure. And then what happens when it fills the gap? Does it go further? And then if it does go higher above the gap, once it fills, it wants to go 1.5 times the gap, then 2 times the gap. So it'll give you all these things that you can number crunch and collect data. And what that does is it gives you a baseline for experience and know, okay, I'm trading in the first hour trade. So that first hour's window of opportunity between 9:30 and 10:30 Eastern time, there's a plethora of setups. There's a huge number of setups. Every single high frequency trading algorithm is doing a lot of work in that first 60 minutes. Most of it's being shoved in that first 30 minutes. So when you're going to get that first imbalance, that first presented fair value gap, that's why it's so important. Because that first imbalance, that first fair value gap, that forms between 9:30, well, technically 9:31 to 10 o'clock in the morning, you carry that gap, push it through the entire day. You'll see it being used several times. Why is that happening? Because the same algorithms are going to notice that that was in existence in the first 30 minutes. They're going to play off that again. It's useful information. So how many times and how many setups do you get? How many setups to the long side when your bias was initially bullish for the day? How many times did that first presented fair value gap offer setups? What time did it form? Is it happening inside that macro time, the last 10 minutes, top of the hour, to 10 minutes after the top of the hour? That 20-minute window, that little sweet spot. These algorithms are referring to that time and then price. So knowing these things and keeping data on it, that's I encourage anything outside the things I talk about. I'm not interested in anybody else's data. I could care less what anybody else's data. I have a lot of affinity for Larry Williams, kinds of statistics. He had all kinds of data. Man, this guy had spiral notebooks of stuff that just was like, man, what the hell are you talking to me about? You know, when the day goes down here, closes below the day over here in 3 days. I don't need all that. Just tell me, am I bullish for the day? Am I bearish for the day? Or is it too high of a risk for me to worry about it? And I'll just trade tomorrow. And then become a day trader. I could evaluate the morning session. Is it likely to be a shit show? Because if it is, I'll just sleep in that morning or go have breakfast with my wife, and then I'll come back and trade the lunch, or I'll trade the afternoon session. And there it is. So I don't know what you mean by the data, but I am a data guy. Like I'm a numbers guy, but the numbers have to make sense of why else we look at it.
Dom, do
Gotcha.
you want to expound upon your data collection?
Well,
Uh,
well, you know,
Give me three things
yeah,
that you
I'm
concern
talking.
yourself with. Give me three things that you think are salient, that are impactful to you, that are beneficial to you, and what do you do with the information when you get it?
Okay, well, so let's see. Right now, we're talking about the middle of London session, let's say, or the London OU, as it's referred to, or the Asian OU. So the center of a session, or more so here, I got a better one. This will be the first one. So in a time-based range, um, this style of trading that I'm talking about, we have a confirmation when you break out of one side or the other of that side of the range. Like, for instance, 3 to 4 a.m. would be the ODR in one system. And if we break out the top side of it, there's roughly 80% chance that we won't break the bottom side of that time-based range within that session, to simplify. And then it goes further into 2 sessions later, like we're in New York. Are we going to pass the 50% mark of the previous session, and what time and how often? And so there's a lot of work that's been done collecting statistics on this. I'm
When you
in
say previous session, what are you referring to? Are you talking about London session or day session, full day session? What are you referring to
talking
when you
about
say previous session?
Asian session, London session, New York 1 and New York 2. New York
Okay.
1 being 9 to noon, and then New York 2 being noon to 3.
Okay. So how are you using that information? What are you doing with it? Are you
Right.
asking me if there's any usefulness to it? Is that what you're saying? Or
I'm
are
just
you trying
wondering.
to?
Yeah, I'm actually learning about it right now. I'm a few months into a
Mhm.
boot camp with some guys that put a lot of time and energy into it. I've been studying your stuff since early 2023. It's been very beneficial to me. Appreciate you for all that. But there's like this friendly rivalry, sometimes not so friendly, on Twitter between the spreadsheet traders and the ICT guys. And like I was curious because I hear you talk about data so much. I don't understand what the disconnect is, or why there is any sort of rivalry, really. And so I just thought I'd ask you about it.
It's a locker room. That's why it's a locker room. Everybody wants to see how big each other's dick is, and we all want to measure it against each other. And we want to show how thick each other's wallets are. That's what this whole business is about. It's always been that way. We're like cavemen. That's how we interact with people, especially with traders. You got more than me. I don't. Or let me prove that you do or don't. It's always been that way. It's always been that way. But what data you're collecting and how is it useful, it gets down to just where's the rubber meet the road. And the things I talk about, I can't answer for everybody else's or what they're discovering in price action and what they're inspired by, by me, Pax, or anybody else out there that's talking about trading and price action. I mean, it's easy to get when you're brand new. It's very easy to get inspired and captivated. I was captivated by everything and everyone that came out, and like I'm times. When I came up when electronic trading began. I came up when the internet became a thing. And we had to do dial up and we had to wait for all this crap, the handshaking, the noisy sound and stuff. And sometimes you'd fall off as soon as you get on there. These ideas that people are trying to chase right now, I think it's a matter of trying to coin something, trying to be the originator of something. And that's like the big thing right now. And is it useful? I mean, are you making money with it? Because if you're not making money with it, there's no value in my opinion, and nobody else is going to see the value in it either. If they can't use it in their own hands, be able to go out there and say, okay, I want to put coin in my pocket today. If it doesn't put coin in my pocket, I don't have any time for it. And if you can't see other people doing that, it begs the question, why bother? And I'm not saying that it shouldn't be done at all. I'm just saying that what's the purpose behind it? How are you going to utilize it? And does it provide any benefit to you making money? And if it makes trading easier for you, then it's advantageous. But if it convolutes it and causes more confusion or one more step that's not necessary, because you want to have very small number of steps. Because the more things and more things and more things you add, in the beginning, it seems like, wow, I used to have a checklist that was so fucking long that by the time I got 3/4 of the way through it, the fucking market's gone. Like it's gone. It's already left. Elvis has left the building. You've done shit to bed. It's gone. You can't do it. Once you have to know what you're looking for. 1, 2, 3, get me in there. How do I know I'm going to place my stop, where I'm going to place it? What am I risking? You have to know all these things before your trade is in the chart. Like, what are you going to risk? So collecting data for the sake of data, again, why are you doing it? What's the purpose? Is it helping you highlight a inefficiency in your trading when you use a certain measure of leverage? You can do things like that. You calculate the data that every time I size up or scale up in my trades to this degree based on this many number of trades. Like for instance, when I first come up, I wanted to see 5 winning trades. And then after 5 winning trades, then I would scale back to my lowest percentage risk of fixed asset allowance for what I can put on each trade. Why would I do that? Because after 5 winning trades, what's coming eventually? It's a losing trade coming. So I don't want to, what I wanted to do when I first started was I want to make money, risk more, make money, risk more, make money, risk more, and then do what? No stop loss. I'm right. That's what every trader thinks it's like when you first get in here. But what I learned was with real money, you're fighting yourself. You're second guessing every fluctuation, every little fucking tick fluctuation is money coming in and out of your hands. And when you don't come from money, it is heavy. So by having information that's going to be reduced to small steps of application, what is this information going to do for me? Is it going to cause another thing I got to worry about before I put a trade on or manage risk? Or is it going to aid in things like highlighting weaknesses, inefficiencies, and my own opportunities of following the model? Where's my hiccups? Where's my traps? What am I creating for myself as a hindrance in development? Collecting data for that's wonderful. But I don't know what these people are with you. And I'm sure if you went through 20, 30 minutes of explaining what it is, I'm sure I probably would still hold the same perspective as what value does it bring to you? Because it wouldn't bring any value to me. I've streamlined what it is I'm looking for to very small things. If you remember, and I'll say this and shut up, you want to have your model that you can literally write it out on the back of a business card. If you can't do that, your shit's too complicated. It's too convoluted. You have too many spinning parts. Okay, and too many spinning parts, guess what? One small component breaks or breaks down, your model falls apart. Everything falls apart. So you want to have so few moving parts in your model that it allows you to be able to be free thinking, independent, right on time, Johnny on the spot. When the market's offering the opportunity, you recognize it, you're there. You're not thinking about it. You're not worrying about it. You're not wondering about how many times did it do this in the past. Last time my elbow hurt. Last time I had gout. Last time I had jock itch. My market blew up in my face. None of that shit matters. What is going on right now? Is it going higher? Is it going higher right now? If it's going up right now, where did it lead? So where I place my stop? How many contracts can I afford to put on and still be within my risk parameter? And that's it. That's all trading is. You're not trying to make it harder than that. And if anybody tries to do anything more than that, they're actually making it harder for themselves to execute under. So I hope it didn't sound like I was beating the shit out of you about what you're doing, because I encourage you to look at other stuff. But what data is it useful or not? It kind of like boils down to that.
No, that's a great response. I appreciate it. And just like, so you know, like I started studying in 23. I got my first payout like 4 months after I started looking into your stuff. I've been trading for like 2 year and a half before that with crypto and everything. You're the one that actually got me to start trading NASDAQ and looking at indices. And then I had a dry spell and I got, some payouts from Top Step late 23, and then another dry spell. And I just recently had another good run. So it's getting better as it goes. But I appreciate your time responding to the question. There is a gentleman here, just two people over from you on my phone, who's one of the guys that runs the boot camp that I've been learning all this stuff I'm talking about, and it is helping my trading in some ways. So I don't know, Kit, if he's got a speaker tag, or if we got time to he can explain much better than me what it is specifically that they're looking at.
I mean, bro, spreadsheet trading, collecting information. I think I can speak pretty confidently on that. I don't think I think the question is still your question is salient, and I
Yeah.
mean the information that you're collecting is going to be salient to your model. One thing Michael has done a phenomenal job at is simplify things so that you are focusing on less moving parts. So, as a quote unquote spreadsheet trader, things I look for, the things that we are measuring are an open close box, the highest open, the lowest close, the highest high, and the lowest low. So within spreadsheet trading, we're quantifying measurements from OHLC, which is again congruent with all the things taught by ICT. So it's a great question,
Yeah,
and Michael's asking, yes, sir.
I think that it would be beneficial from a community perspective that if the gentleman's he brought something up and he was asking my feedback on it. I shared my opinion. Now, my opinion is isolated from what it is that these individuals are doing, what they're number crunching. I don't know, but
No, it's a great point.
I think that it would be prudent for a person wants to come forward and talk about what, because they may bring a better, they may better explain what it is they're doing, and if it's
I can
something that
speak on that.
is advantageous.
I don't know who's here, but I can talk about what.
I think he's referencing Austin. Austin's utility of an MAE, MFE version of an ATR, which again we're looking at average true ranges and where and how they form, and then where and how we would utilize the statistical probability of it mean reverting or breaking out of the said range. So in regards to specific data and data collection, you're looking at a start, you're looking at a stop, and you're looking at an average range in which the start and the stop occurs. I wouldn't say an open and a close. I do want to bring Austin up. He
I
does
was gonna
not
say,
utilize.
bring up Austin. Bring up Austin.
The thing is, I have to. There's folks. I have to.
Yeah,
Again,
but
there's limited space. Hold on. I'm trying to bring him up. We'll get
He's
Austin's.
up. He's in.
Thanks.
Yep,
He's
there
in.
you go. Austin,
Yo
jump on in.
yo!
Well, no, there he goes. He was here.
Can you hear me?
I can hear him. Can
I
y'all?
can.
Yeah, jump in here, buddy.
Dude, I just want to say I've been hanging out listening to you guys. The moment I heard statistics and then ICT's up here, dude, I raised my hand immediately. No, um, so I'll give you a little bit of a rundown. So basically, we call it using spreadsheets too. It's literally the same thing, Nick, but exactly what Kit was saying. Just to give you like a huge overview, I just like quantifying what the market and how it moves. Just like how if you were to, invest in a piece of real estate. I come from real estate. That's what I did while I was in the military, and then I got out. And so if I were to be like, hey, I want to do a real estate deal, let's go 50-50 and let's invest in this property. if we didn't know the numbers of that investment, right? If I was just like, hey man, give me 50 grand and you'd be like, show me the numbers, right? Show me the objective proof that in that area, blah, 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 blah. And so I take trading kind of the same way. So some of the statistics I use is like the statistics of where we're going to make the high low a day, 4 major times, 1800, 3 a.m., market open, market close. I use statistical retracements. So if I know that between 8 a.m. to, noon or anything like that, what is the statistical probability that if we're above, let's say midnight open, because I know midnight open is really important to you guys. If we're above midnight open between 8 to noon, what's the generic probability of just hitting that level? And then when live price agrees with directions that those statistics are still left open for, what they do for me, because I'm an analytical person, is it just gives me confidence to take that trade, right? We were talking a little bit earlier about, you need experience with your model. And one of the reasons why people go crazy when as soon as they take the trade, they're wanting to go straight to their TP, right? Or the stop loss. Well, for me, I use statistics to make that, to bridge that gap, right? To fix that thing for me, because I like to have a measurable environment, right? I like to know that, okay, if we get below market open, right? If we get below the opening range of market open, okay, cool. Objectively bearish. If we're objectively bearish, what statistics are still left open in that direction of being objectively bearish that are still open for the day? Midnight open, cool. Opening prices 1 through 7 a.m. The midpoint of we call it the P12. It's the first 12 hours of the daily candle, like that type of stuff, right? So
Hey,
what's up?
Austin, it's Pax.
What's up,
Can I
Pax?
ask you a question real quick?
Yeah.
Can you give me? Yeah, I mean, we follow each other, and I like your content. But can you give me like while you're giving these examples, can you like add price context to it?
Yeah,
Like
absolutely.
if opening range is 69 even, or midnight
60
high,
60% reversion back to midnight, right? Let's get back to the midnight retrace, kind of what Austin is known for, right? I mean, Matt Mickey's known for the high low. You're known for the midnight retrace. What are the statistical probabilities for midnight retrace, Austin?
Yeah, for midnight open, that's just a generic starting at 8 a.m. to noon. That's when I anchor my statistic. And that's another really important point is if the statistic that you're using, or if you're using a basket of statistics, that's what I do, it's important to understand obviously the objective metric during the time you're going to operate in, right? So if I'm operating between 8 to noon, I don't care what we do with midnight at 2 in the morning, right? So between 8 to noon, we objectively retrace that area 65 to 68% of the time. And then when it comes to market open, I think Pax, what were you saying? I'm sorry.
I'm just trying to put like a price context to
Yeah.
it, like the midnight open would be 68 even, and 68% of the time the market will do X. And then how do you define your risk?
Exactly. Yeah.
So how wide are your stops, and then how big is your profit?
And you
target?
can't say DCA to oblivion, Austin. You can't say that.
Well, I don't do that. Okay. But
Oh no,
anyways,
please don't.
so
Thanks, kid.
can you hear me?
Yeah, I got you.
Oh no. So I use market open. So market open, as you use market open too, right? So I'll think about market open just like a normal objective pivot point in the day that tells me anything below that's objectively bearish, right? We're accepting when the regular trading hours is open in the day and we close below it, we're objectively accepting bearish price. Now, can we chop around it? Absolutely. But when price is objective closing below, boom, that's my catalyst. That's my catalyst in saying, okay, now if we're accepting below market open and we're locking in a good high of day, right? Because statistically, market open is a good time that we set a high or low of day, the wick of the daily candle. And that's what we do as day traders. So then my risk is anywhere on the opposing side of that market open range. So obviously, if the market open range is really large, then I have to either, number one, reduce my size. So I also let market open tell me, how much should I position size based on the trade and the quality of the trade that I have at hand. So if I have a lot of distance between, let's say, where midnight open is and market open, then I like to call those my extended cash flow trades, because there's a lot of movement. There's a lot of meat on the bones of if price is acceptable at market open. Well, now the checkpoint, one of the high probable checkpoints can be midnight open, right? So I take a portion of that move. So my invalidation is anywhere in the midpoint to the other side of market open. And then my target is dynamic to the statistics. So I pay myself. So I'm always paying myself. So I always take a cash flow portion of the move. I think, Pax, you call it your pay line. I kind of do something pretty similar. So it's like I'm paying myself to be in this trade. I'm not just going to let it go 200 points in my favor and turn around, right? And
Using the
then
statistics, using the statistics that you're referring to, and you talk about
yeah,
paying yourself. How do you use the statistics to determine where you're paying yourself? Like what?
I love that question. Yeah. So they were talking about MFE and MAE, right? So if we are accepting, this is actual statistic you can go and measure on the 1 minute time frame, because that's what I trade on the 1 minute candle was below or above market open, just the high and low of the range. And when I say high and low, just literally the highest and lowest point market open formed on the first candle. We have an objective 0.1. So if you take a price range tool, 0.1 to 0.3%. So now this is a floating metric because it also depends on your sample size, but it's anywhere between a 70 to 75% hit rate that we're going to hit at a minimum. We could reverse, we could wick, we could do anything, but objectively 0.1 to 0.3% is like a very common price that we expand from. So if I can define my risk, now I don't just obviously trade like a robot. If the trade makes sense, I can define my risk and there's plenty of distance to take that position. Boom, that 0.1 to 0.2%, Michael, that's where I'm scaling out a good portion of my trade to pay myself. Then the excess of that trade, once it's paid for, is those statistics. So like midnight open, opening prices, 1 through 7 a.m., the other side, if we're due for an in statistic low of day, right? Like if we have like, let's say a 2 a.m. low of day and we're due for now a new low of day. We locked in an in statistic high of day at 9:30 and now we're crashing down. Well, now I know that there's a lot of meat on the bone, so I can let that position maybe go for another 0.2 to 0.3%. But nonetheless, 0.1 to 0.3, when we get that candle closure or above, that acceptance above or below market open, that's my area to pay myself, no matter what.
Now you're
Is there one question too? Is there an opportunity for you to add to your position along the way?
There is. I don't personally trade that way. I'm not opposed to it. It's just I don't personally trade that way. But here's what I do. If the 10 o'clock hour, so this is another statistic I use, if you take an hourly candle and you divide it into 4. So this is a statistical phenomenon. I can't explain it. I'm not that much of a math nerd. It's a statistical phenomenon that, and Michael's probably laughing because he's probably knowing what I'm talking about. In the first quarter, and I want to say this too, Michael. I really enjoy this conversation because, like what Dom was
I can
saying,
tell by
I
the
don't know
way you're
why
breathing.
there's,
I can hear your excitement.
dude. I love this stuff. I
I
love this
know.
stuff. I love this stuff, dude. And so it fires me up talking about it. But the first quarter of any time horizon that can be evenly divided by 4, we lock in statistical highs and lows for the rest of that time horizon. So if we're talking about an hour and the Q1 of an hourly candle is what? The first 15 minutes. So if we take the high or the low in the next 15 minutes, so Q2, Q3, whatever, statistically, the opposing high or low in that Q1 is going to be the high. So look at today. Look at the 10 a.m. hourly candle today. I was short when we closed below market open, and I held. So Pax, when you were asking me, well, do I hold on to runners? Well, I don't hold on to runners, but I use the statistical favorable price movement that if we're confirming a bearish hourly candle, I'm shifting that excess target to the downside. So I'm basically trailing that target as if I were to add to it. So I keep my good position that I have. And so if we're showing signs of a statistical bearish hourly candle, boom, there we go. We lock in a high at Q1, we take the low in Q2. So now we're due in Q3 to Q4 for the wick of the other side of that hourly candle, aka the low.
What's your sample set range? Like how much data are you using to get to your statistics?
So these are 10, everything I talk about, it's all historical, 10, 20 years of statistics, but then I use current. So here's the difference between how a lot of people talk about statistics and what I do. I use historical statistics to tell me if there's relevance, right? So I'm just saying, okay, is there relevance in the of this market? Is it giving me relevance to have this hypothesis? I'm a lab tech. I was a lab tech in the Army. I come from a science background. That's how I think. So I use that to tell me, okay, maybe I'm onto something. We're retracing to midnight a ton. What's that number? Now in the current market, every day when I open up my trades or my trading computer, I'm looking and seeing what is the current market condition of this statistic. So in the past 50 to 70 days, what is the current price movement doing? What's the current distribution of the current daily candle? What is the current statistic of this level? Is it due for, because there's another really cool, fascinating thing, is just like how we mean revert the markets, we range, all this stuff. Mean reversion is a very good thing that we see all the time. Mean revert in statistics. So if
Hey,
you
Austin, let
what's
me
up?
let me let me
Oh,
interrupt you guys.
yeah. Sorry.
I'm gonna go have dinner with my wife. Listen, um, my head hurts from all of this fucking. We're going higher, lower, or nowhere. If we're going higher, I want to be long. If it extends, I'm going to add. You guys are. I don't know. It's fun to listen to, and it's always good. I always
Pax,
get.
can I explain that, Pax? Just to so that way it doesn't sound overly complicated. In very simple terms, guys,
Oh,
what I use statistics for is the checkpoint of live price. If live price is going up, statistics tell me where to have reasonable expectations of where price is going to go. If price is going to go down, statistics tell me the reasonable expectation of where price is going to checkpoint to. That's it.
all right. Can I also just say one thing? I'm sorry. My name is Charlie. You've clearly,
No.
in my own mind. Oh, sorry. Go ahead.
No, hold on. I got to get off real quick. So
Yeah.
everybody,
Sorry,
listen.
Pax.
Thank you for having me. And Maurizio, it was. I don't know if you're still here, my brother. Man, it was great to listen to you. Michael, it was nice to meet you.
You as well.
All of you, listen. This is the greatest. This is absolutely the greatest business in the world. Don't it's the greatest business in the world. Just do the work, simplify, like Michael was saying earlier. Simplify your trading, make it actionable, find a process that's consistent, repeatable, and scalable that makes sense to you. Live within it. I've been doing this a long time. I know what works, what doesn't, at least for me. And I know what I need to do in order to be able to continue to do the things that I do and simplify my life. I want to be free financially. I want to be free spiritually, emotionally, and physically. In spite of the health things I deal with, or the spiritual or emotional difficulties we all deal with, I want to be free. And in order for me to do that, I need to continue to strive to be the best possible version of myself. And I need to keep my trading simple, and I need to keep it actionable, consistent, repeatable, and scalable. Consistent, repeatable, and scalable will keep me free, will make me free, and will make sure that I'll continue to be free. I love you guys all. God loves you all. Nobody fights alone, as this space clearly shows. And I'll see you all on the trail. If you have any questions for me, or any things that you want to ask me, just DM me. And hey, trade them up, man. The greatest business in.
Enjoy your dinner.
Thank you.
Enjoy PAX. So Charlie was coming in, and I think Austin was wrapping up his point. Dom had his hand up. We are wrapping up. It is 8:30.
I get 10
Just
minutes. I'm
yeah.
out.
All right. Beautiful. I love it. We got a hard stop. I definitely wanted to have Austin wrap up his thought. Charlie was coming in for something. It sounded. Actually, I'm not sure where Charlie went. So anyway, back to it, Austin. Anything else you wanted to add, brother? Just in the vein of data and statistics and what you're looking for.
Yeah. I'd say just to wrap it up, because I know like how we talk about stats and stuff, it sounds like a lot. All I really do, I don't trade with an actual spreadsheet beside the chart every day. The running statistics, right? That's like a one-time thing. That's like doing your research on the environment you want to operate in. But once you have like that general understanding, dude, I don't touch a spreadsheet. If are we above statistics? Are we above all these areas that we could retrace to?
Austin, you use a streamlined data third-party aggregator. You use a
What's up?
spreadsheet. Don't embrace. Don't you utilize data. Embrace that, brother. I mean, embrace that. But Austin, where'd you go? Austin, where'd you go? Come back up here. We were talking. Anyway, I'll just say this as someone that utilizes data, the relevance of data within OHLC and within ranges and within time-based ranges are wholeheartedly salient to directional probability. And, the where is the close of the previous range in relationship to where you're opening? What was the size of, so your close price is a thing, the position of your close price within the relationship of the previous range that formed. Where is the open and close within the previous range that formed? Right there are very specific highs, lows, mids that offer conviction. Right, when we talk about data, that's often things that we're looking for, directional probability. Right, and I know Michael has zero issues with that. These are components in which he's taught. So us tracking and measuring these things are, again, I think part and parcel as traders. It is awesome within a community to have someone like Austin come up who trades different than ICT, who collects information and is utilizing it within creating his own edge. So it is fascinating within the community of getting different people's takes. So thank you, Austin, for giving us a little bit of a glimpse towards the way that you trade. I think there's a lot of curiosity by Michael Pax, and I'm sure many others, of where and how to actually use data. And I'll just wrap up on this point. And I think it's been made very clear. Keeping your life simple is very, very, very important. So the idea of a spreadsheet or a third party data collection or aggregator, you can filter and cross filter that the same way that you're utilizing technical analysis. But that is different methodology. That's different than what Michael's taught. And I mean, it is
Well,
what it is. But
allow me to say
go
something.
ahead, please.
When my stance was, I'm at a stage in my life and in my trading and where I view price action. I went through the process of streamlining and getting it down because same stuff. I had spreadsheets. I did all those things. And I wanted to talk to my uncle all the time because he's book smart. He's a finance degree, specializing in business management. So I figured, all this data, look how many times it does this, Uncle Stan. Look how many times you want someone else to see the same eureka or confidence that you get from it. And all the things I'm teaching, I did those same things. I calculated how many times I saw these things. I kept journals for years and years and years. In the corner, this is how many times the things I was looking at. It happened. These things I'm looking for didn't work this day. This is how many times it's failed. And I did all those things. So I don't want to come across or have someone misconstrue what it is I've said tonight, that I'm not shitting on the whole idea, because if I didn't take statistics from the things I'm talking, when I throw percentages out, I have real data behind it. I'm not just pulling numbers out of my ass. So I'm to say what Austin and the other gentleman that was saying he's learning from him or working with the data or whatever they're doing. I'm not saying or disparaging that it's bad, because I understand what it's like. You could hear the guy, you could hear, he's basically panting because he's like, man, I get a chance to share what I've been working so hard, and I see there's something behind it. Dude, I know. You feel like fucking Dr. Frankenstein and your shit's alive. I know exactly what that feels like. I know what that feels like. But you have to appreciate the same way, and I know because I was there before. Now, where I'm at, I understand that you want others to see the same things with the same excitement and same energy and the respect for the data that you curated. You want to be able to show that to someone else and see that same response that you feel, like you're buzzing. Like the guy sounded like he was hopped up on goofballs. It was awesome. I loved it. I was smiling the whole time.
Yeah, he's
It
very
was
passionate. Great to
yeah,
see.
man, I love it. I love it. But I just don't want it to be misconstrued as that this guy was talking at his ass. I could care less what he thought. That's not what my point was. My point is I view everything that's presented to me as, what do you think about this ICT, and would you consider doing it? I can say whatever you want me to say and be dishonest and disingenuous, or I can tell you this is my stance on it. I wouldn't do anything to change what it is I do. I don't want to add anything to it. I don't want to take anything away from it. I'm comfortable with what I do. And I try to promote that in everything. So if this gentleman feels confident that it's helping him, he should never let me, Pax, you, anybody else listening on social media tell him otherwise. Because it's so hard to get to a position of knowing what we're going to do, why we're going to do it. And if he has something that he's backed up with data and his sample set's ample and it's a viable model that he's applying with the information, who are we? Who are we to say anything about what it is he's trying to do? Because if he makes money, if he's consistent with it, we can't spend his money. We can't tell him he's not doing it right because if he's making money, how's that wrong? So it's important that everybody that listens to me, I'm a bit of a showman. I do these types of things on social media because I know how to use media. I don't have to pay for advertising. I start a fire and I got gasoline in a can to me, ready to add to it when I need it. Because I know how to start a fire. I know how to get a crowd worked up. I know how to get people talking. That is not me.
Profile. I'm sorry.
Yeah,
Don't mind me.
exactly. I got everybody fucking pissed off at me. But they're
You were
talking.
trending on fucking X, bro.
I
That's
know.
hilarious.
But you have to, as a showman, as if someone that's trying to build a crowd and build conversation, you have to be polarizing. Because if you're boring, if you have nothing to bring to the conversation, then nobody gives a shit about you. But I don't want people to take that and say, "Well, this guy's a total asshole." Because I'm not. I'm not trying to. I'm not being that person in real life. I just know how to get people engaged to have a conversation. And that's why I think what you're doing here is it's wonderful because it allows people, number one, to feel. I think honestly, when you were coming up on moments ago before I started talking, I got uncomfortable too because I thought you were getting ready to run over top of him. Like I even felt it in me. Like,
No,
oh
dude,
shit.
I come across that way a little bit, but not on purpose. I mean, not I actually really I love the conversation. I know I can come across wrong. I know that about
We
me,
all
and
can.
I
We all can.
apologize. So,
But if he dropped off, I just want him to know that I wasn't trying to come at him or anything like that, or try to say what he
No,
was doing was
I'm
stupid.
still here. I
Okay.
appreciate the conversation, bro. And honestly, Michael, like, as much as the social media and stuff goes, like I just genuinely appreciate the conversation because I think what we all try to chase for, and the reason why I am so passionate about statistics, it's not because I think it's the holy grail. I don't think it's something a lot of people even probably do. I think the most important part, whether it's ICT, whether it's support and resistance, so I don't care what it is, does it give you peace on the charts to consistently engage? That's what I
Yes.
tell everybody. Like, I just want peace on the charts. I don't want to take my trade because we all think about being profitable. But Michael, I don't know about you, but I don't want to sit every single day and love something, but feel like my cortisol levels are about to leak out my ears and even survive 5 years because I'm going to go have a heart attack because I'm stressed so much. So when I was really struggling as a trader, I had to lean back on what was good to me. And what was good to me, I'm a lab nerd. I run
Hmm.
reference ranges, I run patient samples and I have to make sure they're in a range. I was like, why can't I just do that with the markets? And then there we go. And the
Yeah.
same thing with what you preach. I'm sure a lot of people that use your stuff, they feel the same exact way that I feel right now. And sometimes we get so lost in the tribalistic mindset, we forget that, dude, we're all just here to find peace on the charts. That's
Yep.
it.
And we're all doing the same thing. We're trying to manage risk, make money, and survive to do it again the next day.
I love that. And just one last note on statistics. Mean reversion and breakout. Like, we're really looking at what are the chances or probability that we might mean revert, or what are the chances or probability that we might break out. And I say that because I'm super intimate with how Austin trades. I'm very familiar with utilizing statistical concepts with your concepts, Michael. So I feel like it's very intimate, this conversation, and I appreciate the level of passion and the conversation that Austin's brought today. So we're wrapping up. Pippi, Dom, we're wrapping up. Last few minutes. Michael's already made it very clear. Someone's going to be disappointed they didn't get a chance to talk, but wrapping it up. Thank you again, everybody. Pippi, and then Pippi will end it.
All
Pipster.
right, I just want to end it with, right, everybody that's on here listening, right? The main thing is, no matter what you're doing, no matter what style of trading you have, As we see, there's been numerous people that have came up and it's different style of trading, right? But we're all trying to do the thing. We're all trying to make money. So whatever resonates with you, that's all that matters, right? We come to these spaces every week and we are a community, right? So all of this back and forth, who's better, who's this, who's that, that does not matter, right? Because I've learned a lot from a lot of people that come on here, right? ICT, PAX, right? Kit. I've learned things from Austin, Matt Mickey, right? And as I've learned, I made it my own. Okay? Nobody trades the way I trade because I'm an individual. Okay? I took things from multiple people and I made it my own. And I studied that and I studied my craft with how I put things together. Right? And I'm not saying that, oh, nobody trades like me. I'm the best trader in the world. Right? What I'm saying is nobody can take away what you put together. Right? And when you hear these people come up here, really listen to what they're saying and see how it resonates with you, because not everything is going to resonate with everybody. It's not. Right? It's not. But as we see, all we're trying to do is make money. At the end of the day, it's in my bio. Did you make money though? That's all that matters at the end of the day. So I'll leave it at that. Shout out everybody on here. And this was a great space. This was a great space, like for real. I loved it.
As
An
a
ICT, can I
reminder,
quick?
go ahead. Go ahead.
Oh, sorry. To an ICT, I just have a quick technical question. I know this entire space wasn't technically related, but I just have a question about your high probability fair value gaps that you introduced roughly 2 weeks ago, the ones forming on the quadrant wicks of the daily candle. And my question around that is, it, you mentioned if there's multiple wicks, we use the largest wick. But what if we have larger wicks, let's say 25 days ago or 50 days ago? Like in today's trading, I was pulling wicks from September 17th, if I have that correct, and I was framing trades against that. What's the filter I can use there to correctly select the right wick to find those fair value gaps that land on those right quadrants on those daily wicks?
As soon as you leave the 20-day look back, your probabilities fall off precipitously down to the 60-day look back. The purest, the most cleanest ones are going to be in the last 20 days, 20 trading sessions. So right away, there's the short answer you're looking for.
Okay.
The further you look back, you're going to have more things that are supporting it, more factual support behind the idea. It can't be just, well, that was a good displacement there. It happened to form on a macro time. It happened to be on a quadrant level of the new week opening gap. All those things may not be enough. Whereas if you just have an opening range or new week opening gap or new day opening gap quadrant, and it's during a macro and a fair value gap forms and it's meeting your daily bias, that's an easy entry. You know what it's going to do. You know how it's going to function. It's going to give you something that's tradable. You don't have that, or at least you'll find if you start spending a lot of time doing it, you won't have that level of sensitivity and I guess conviction behind the moves. As soon as you pass and breach that 20-day look back, 40 days is still good, but 60-day, you're gonna have to demand a whole lot behind it.
All right, okay. And I can still use those quadrants on RTH gaps, correct? It opens up, I drop the quadrants, and if a gap forms on that quadrant, would you consider that as a high probability fair value gap as well, or just on the daily wicks?
So, a little bit slower and say it again, please.
Sure. Let's say today we opened up with 200 RTH gap, and usually you drop quadrants on it. Fair value gaps that get created on those quadrants from the regular trading hours gap, would those be considered high probability as well, or just using the daily as high probability fair value gaps to trade off of?
Well, obviously, the first presented fair value gap is the highest probability. The one that forms in the first 30 minutes, midnight to 12:30, high probability. 1:30 to 2 o'clock in the morning Eastern time, that opening range for 2 o'clock's European session, that's high probability. 2:30 to 3 o'clock Eastern time for London Open, the first presented fair value gap in that run, that's high probability to 5 o'clock in the morning. It carries over into the New York Open, 7 o'clock to 10 o'clock in the morning. It's useful there. This is also Forex related to, it's not just limited to the index futures. Yeah, so I mean, yeah,
Okay.
first presentation. Kid, I was trying to find a way to get in here with you because I listened to you and you're like you're dabbling in with the first presented fair value gap. I was going to try to talk to you a little bit about what took place
Oh,
today, but if you look at what we presented today and through this, you can see how wonderful it was. It was using its quadrants. It was using its consequent encroachment. It was using its low. Then it used its high in the afternoon. Like it is like that for folks that talk about statistics and things like that, like when you take just today's first percent of fair value gap, it was a suspension block on top of it. So taking that information and then utilizing it and seeing how it used the 8 o'clock hour, okay, and the 10 o'clock hour, and then the afternoon going into the PM session, and then how it drew back down into another first visit to fair value gap that I'll teach you when I come back in February. But these components, they're always there in price action. They don't hide from you. And if you're looking for the purest, easiest, run out there and find something to do, it's going to be found in the first 30 minutes of trading because that's the real opening range. And when you see this first imbalance that's showing you displacement, not just some little Mickey Mouse little gap, okay, they're useful, but I treat them like a volume imbalance by comparison. So what I want to see a nice directional move away from the previous candle, and then that imbalance stays there. And once it's printed, then I know that's the first time it happened for today's session. All the algorithms going to see that same thing. They're all going to chime in on it. High frequency entries are going to come in there, pepper it all up. So I know I'm going to have liquidity. I know I'm going to have engagement there. Not because of the buying, selling pressure, moving price, liquidity. They're going to tag that level. I don't have confidence that every high frequency trading algorithm is directionally sound. They're in there for volatility. They're trying to get this static fluctuation that's always in the marketplace. Because I'm directionally rooted as a trader, I know where it wants to reach for. I'm looking at why the market should go higher, why it should go lower. And if I don't know that, and if I don't have strong conviction behind it, then I'm sitting in my hands waiting for more information or waiting for another session. Having the first presentation afford the luxury of saying, okay, I know what I'm looking for. I know when it's going to be in the next 30 minutes. And I know that these levels carry out the day and up to 5 days with high degrees of probability. So you opened up your question with, looking for high probability fair value gaps. If you look at the ones that form, as I'm talking about here and in other lectures where I've talked about the whole concept of persistent fair value gaps, if you project them in the future, you're going to see all of these setups that form are using them. They're using the consequent encroachment, the upper and lower quadrant, the highs and lows of them, and then incorporating the ideas of when we're bullish, we want to see them support the idea of staying in the upper half and not having any interest going in the lower half. So what is that promoting? It's promoting discount sensitivity. It's not allowing price to print the body down in the lower half. So those are all hallmark characteristics of a high probability fair value gap. And it's anchored and rooted to the first presentation based on the time aspect first.
That makes sense. Ever since that you dropped that in 2024, first presentation, that's where I found consistency in the markets. Using the first one after every hour, after 1:30, the true afternoon open, after lunch for the afternoon session. The moment I started cherry picking just those fair value gaps, that's where I found consistency and where my stop losses just don't get hit. Having it sit right above the wick of the second candle. Again, trying to keep it tight. And I do get wicked out sometimes, but again, trying to find the perfect balance there between having that stop loss above the second, above the wick of the second, or completely above the body of the third to try to keep it as small as possible to maximize my risk. But appreciate that, ICT. And And yeah, you've done an excellent job of answering my question. So that's where
Awesome.
my
Thank you.
data statistics lie, within that one little fair value gap.
I'll say this to the folks that are listening. I've taught a lot of people over the years. I sat one-on-one with people, and I've created a lot of doing it that way. And I made a lot of wealthy individuals in the last, I guess, 24 months. The majority of the millionaires that are now out there in the world, talking the lingo that we're talking, a Fight Club, they are incorporating my inversion fair value gap. It really caught fire with a lot of people. It kind of like resonates with a lot of people, and it just gets back to where's the market going to go, and you just need to find a foothold. And if you see where these gaps are, and you can anchor them to opening ranges, key opening times, and the 8:30, 8 o'clock to 8:30, that's an opening range as well because you're going into the news embargo. So all the news is going to start pumping into the marketplace. What's that going to do? It's going to flood the market with liquidity. We're not looking for buying and selling pressure. We're just looking for scalps to take. And I want my scalps. So I want to take an opportunity to get in the marketplace when there's a lot of interest. Orders are going to flood in there. That means I'm going to get the best fills. I'm going to get filled easily. I'm going to get my price. My limit order will fill. It won't run down there and touch the price and not fill. So we can talk about statistics, and statistics are, I've created more millionaires in my educational, foray in the world as a teacher with the idea of the inversion theorem with runs on liquidity. So it's very strong. It's a breadwinner. It's like once you learn it, you don't need to do anything else. You don't need to worry about all those videos I got on my YouTube channel. That was me creating an encyclopedia for my kids. So that way they know everything. If something happens to dad, this is what I have to say about it. And because I love them, I want to tell them every facet, every detail, what led up to me thinking this way, what created, because they would have questions like, if there's something happened to me and I'm not here, wonder why dad came up with this, or where did he get this idea, and what makes him think about that? These are all questions I thought about when I made these videos. I want to be able to, like Michael Keaton's movie, My Life, watch it and what I did, because that's exactly what I did with everything. Like my whole compendium is basically my rendition of that with trading, talking to my kids. But I said a lot about a lot of things, and I guess because this was like a grand slam home run with a lot of people around the world that had a basic understanding of what it is I teach. When it got in their hands and they started using it, it works. It really works strong. And there's other things that you can learn that's already on my YouTube channel, but it's easier to see the fair value gap. It's a visual, obvious little standout in the charts. It's not hiding from anybody. And because I give you a very specific time window, and the first time it prints, it kind of makes it easy. This is the only one you got to worry about. And if you use that idea, carry it forward and look for the next pool of liquidity for whatever session you're trading in, you don't need the full daily range. You don't need to have the full weekly range. You don't need to have half of it. All you need is 20 handles, 15 handles, and you can carve out a huge, huge net worth doing that. I have a woman, she's not my best trader, but I have a woman trader. All she aims for is 15 handles in NQ. She wants it 2 or 3 times a week, and she's done. She's made $6.5 million this year, just this year. Now, I don't know about you, but $6.5 million is a good living. Like, I'm sure most of you would not have a hard time living with that. You could afford a lot of things and pretty much nail down a solid outcome to the rest of your life with that. It doesn't mean you're going to live high on the hog the rest of your life, because $1 million doesn't spend well anymore. It's easy to spend that. But $6.5 million, and you're only doing 2 or 3 trades a week, and you're looking for just 15 handles. That's it. It's running a lot more when she's out, but she doesn't care. She knows what she wants. She knows that this is what makes her nervous. If she stays in there longer, she has all these questions about, should I stay? Should I stay? Should I go? So she compensated with by saying, this is what I did. You told me you want to look for 15 as a minimum. So I use that. If that's the minimum for you, ICT, that's what I'm aiming for, and that's all I'm going to look for. And she has no aspirations ever increasing. She has no interest. And why would I tell her to do it? Who would be or justified in telling her that she needs to tinker with it, that she needs to add more? Who else in this audience has made $6.5 million just this year, trading one market, 2 or 3 times a week and knowing when she wants to stop. There's about 800 of you in here right now. I guarantee you there ain't no one in here making $6.5 million just trading 2 or 3 times just in the NASDAQ and knowing that's all they want is 15 handles. But that's how little you can do, but look how much it grows. She allows her fixed percentage of equity being applied using simply the cause and effect of money management. As she makes more money, she's not increasing the percentage of risk that's fixed. So she's allowing the principle of fixed percentage allocation per trade as her equity goes up. She's risking more dollars, but not percentage based on her equity. So her equity risk exposure remains constant. But $6.5 million is $6.5 million, right? You'd want it. I would miss it if I didn't have it. And if someone says, "Here, here's an extra $6.5 million," I'm not going to look at it and say, "Go fuck yourself. I don't want $6.5 million." So she didn't come out this year to aim for $6.5 million, but she, as her up, she was catching big runs. What happens? She's got more to swing behind each run. And she lets herself go 4 trades, and then she cuts back to her lowest percentage allocation. Whereas I go 5, and I cut back to my lowest and build myself back up. She uses 4 trades. If she's got 4 wins, she cuts back to her lower percentage again. Why? Because she knows she's going to have a losing trade. So she's allowed time and experience to build behind her, and it's like the wind in her sails. And she wants to do the very least and let the power of compound interest do the heavy lifting. Now, I'm not saying that you're all going to do the same thing she's doing, or that any of you. I can't say that. I can't make that claim. But I can just tell you that these things have worked in so many different people's lives where it connected them with a lifestyle that probably would never happen for them. And they didn't have to pay anything for it. And they hear the same stories that you hear and read all the same things and the complaints and the people making up all kinds of stuff. And she and like the other ones that made money today, they moved it to the side and said, "Yeah, it's none of my business. I'm here about me. It's about me." And it's not selfish. It means you're dedicated, you're focused, and you're filtering out the bullshit. So everybody can have a different style and approach to trading. So many we can have profitability. It doesn't have to be an ICT anchored, concept. There are lots of people out there making lots of money, and you need to find out what works for you. You may come to the conclusion that my shit just doesn't work for you. I've had paid students come to me and they said, "I just can't make it work," and they went and did other things, and they were profitable. It doesn't discount anything that I've ever done or taught. It doesn't discount or remove the profitability of the millionaire students I've had. And you don't see all the millionaires I've created. But I'm thankful that the ones that are doing it publicly are making themselves known. But I've been laughing at everyone that's doubted everything because they assume they know everything when you don't know anything. You have no idea. 2 million people follow me. And it's crazy when you think about how many people are plugging into what you're learning and the shit still works. And I get the same question all the time. Don't you think it's going to become the new retail? No, because it cannibalizes retail concepts. Retail concepts are always going to be there. Always going to be there because everybody wants something simple. Give me a ceiling to sell short from. Give me a floor to go long on. That's where I'm going to put my stop. That's where I'm going to put my entry. That's easy. That's easy to fleece, and it's always going to be there. That's always going to be the mentality. Everybody wants easy. And easy, well, it's not easy when they try it, is it? They lose. But it's easy for us to cannibalize them. And I make no qualms about it. I have no problem. I have no conflict of interest with it because everybody signs the same risk disclosures when they join. When they put their money in the marketplace, they sign the same shit I did. You're probably going to lose money if you don't know what you're doing. Okay. So if they offer their heads on the block, I'm going to chop it off. I'm going to take my pound of flesh. That's the way this works. And you don't have to have any issues with it. If you do, then you can't be a trader. Because if you're making money, someone's losing that. I'm not worrying about the guy that can't feed his kid at nighttime because I took all of his money on his losing trade and I won. I don't look at it that way. I don't internalize it that way. I look at it as I beat the shit out of the marketplace. The marketplace. I don't personify it with someone that's raising children. They're on, fixed income and they just put the last bit of money. I don't do that. I'm not evil. I'm not a monster. So I frame it in a way where I can live with myself. So I look at it as I'm beating the shit out of the marketplace. I'm beating it. It's a game where I have to use intelligence to beat the most intelligent people that are trying to take from me. And if I could have made it easier, if I could have made it more streamlined, so here's all you got to do, I would have done it. But there's a lot of things you have to learn. There's a lot of things that you have to take in account for yourself and own the responsibilities. Come forward with, these are my character flaws, and I'm going to do what I can to discover what they are. I'm not going to hide them. I'm not going to pretend they don't exist. If you remember, we refer to it as Fight Club around here. And watch the movie, didn't watch it recently. What is this? It's a bunch of guys that come together and they're just trying to get through this world. They got their own fucking problems. They all have problems. We have the same problems. All of us. We're all human. And we come together, we hash it out, we talk about what we did wrong, what we did right, wish we could have did this, I wish we would have learned that sooner. I'm thankful that this happened. We knuckle up, throw a couple haymakers at each other. Look, I don't believe your bullshit would work for me. Well, I don't like them fucking fair ICT. You know what I like? I like breakers. I like fucking Fibonacci works up my ass. Whatever the fuck it is that you guys want to use, if it makes you money, great. I love hearing it. I love hearing about it. I love seeing it, the camaraderie that says, you know what, we don't have to agree about everything because we're all doing the same fucking thing. We're in Fight Club. We're trying to make fucking money. When we leave, nobody hates each other. Nobody's lifted up on a pedestal. I don't want anybody looking at me like a fucking celebrity. I'm glad that guy Pax came in here. Let me tell you something. The guys that were doing that job, they were my fucking heroes. I wanted to work in the pits with them. I wanted to do that. I wanted to be so good that I kind of with them because I was convinced that they had the greatest edge, like he was saying. I have students that were on the floor and all this open outcry pits. Guys had to come out of the pits. They struggled because all that advanced knowledge, they could see all these big conglomerates coming in, pushing orders in. If these whales are coming in and they're buying and buying and buying and buying, that's like getting the fucking inside loop, like Nancy Pelosi and the rest of these assholes in the Senate, where they listen to these hearings about getting things passed so that a company can bring forward an IPO or some kind of bullshit they're going to do. They have inside information. The guys in the pit, they had inside information. They had all the real order flow. Fuck your level 2 bullshit. Fuck all that. They saw the rhythm. They saw how that tape was being played out. They could see who was coming in. And like you said, you can see who's getting squeezed, who's getting pressured right now. I love hearing about that. The students that came to me, I spent many nights talking to them in conversation like we're doing right now. And I wanted to listen to them because I loved it because they had their finger on the pulse of the real market. They were seeing the real thrust of big, huge whales coming in. And all you gotta do is ride their coattails. You didn't have to be the first runner in that rally higher or lower. You start seeing these big fucking orders coming in. These got big money in there because they have something invested in. They have an outcome invested. Well, shit, on the floor, small fluctuations all day long. It's your meal ticket. But if you catch a big run and you got whales piling in, what do you think you're going to do? Fade them? They're not going to fade him. They know what the fuck he's going to do. He's going to go in there and start build it up. Like he said, he's not going to try to go against that. That's advantageous. That's not the same thing that level 2 does today, but that's how they market it. They try to tell you, you don't know what real order flow is, ICT. You ICT traders don't know shit. Dude, before all these things start printers around here, I already know where I want to be in, and I know where it's likely to go. That's what you need to understand. When you learn from me, that's what we're focusing on. A bias, we're bullish or bearish, or we're sitting still. And these fucking assholes, they literally run around here saying, oh, it's a no trade for them. It's a no trade for them. They gambled. They have no idea. They're just trying to be in there every time something moves. I don't want to do that. I want to have all of the edge behind me. I want to know that there's going to be somebody falling victim to that price run. And I need to know why it should take place based on a higher time frame premise. And by having a first presented fair value gap to anchor my idea on, it means I'm eliminating a lot of bullshit. I don't have to worry about, all these moving parts. I don't have to worry about all these different time frames. 1 minute chart. First positive fair value gap, I'm on bullish or bearish. If I'm bullish, if we move down from that first positive fair value gap's formation, guess what I'm going to do? I'm going to look for that fucker to become an inversion fair value gap. I'm going to add every single fucking time it gives me an opportunity inside it. I'm going to build and build and build and build and build. And when that son of a bitch takes off and rips out of there like a SpaceX rocket, I'm smiling. And it reaches to an old high, a relative equal high, closes the opening range gap, goes into the new week opening gap, something that is an easy draw on liquidity. I'm done. I've made more money than most people make in a year in one trade. And I have to move to the sideline and I have to think to myself, now everybody else is going to fight and claw and tear at each other, try to make something. And I'm already done. I'm already done. And I'm thankful that I think that way now. Because when I was younger, as soon as I would get a win, I want to go back in again because I was like, man, this feels so good. I want to have another one. I want to do it again. It feels so good. And that's not winning. That's gambling. That's you chasing the thrill, not you trading a model. And I had wonderful price runs that built up huge runs in equity as a 20-year-old and then shit the bed because I wasn't satisfied with what I just did. I had to do it again. I had to do it again. I got addicted. I got addicted to that moment of astonishment that I could do this in my own hands. And that's what I was asking the gentleman tonight. And I ask every single time I have a millionaire student, I ask them, how do you feel about it and how are you going to manage yourself? Because making $1 million, wonderful, absolutely wonderful. Proud moment. It feels great. But a lot of people don't know how to handle that. $1 million isn't that much money anymore. You can't live the rest of your life on $1 million. In the 80s, it could have helped a lot, but still, the likelihood of you hit the penny pinch, but $1 million could carry for a while. $1 million now, shit. The way they're pushing real estate prices, $1 million doesn't buy you much anymore. So you can't really live on $1 million. How you make this money, and once you acquire it, how it's going to change you, is it going to make you feel like you got to do more because $1 million isn't enough for a year? I promise you, if you can get to the point where you're making $250,000, that's a good living. And if anybody tells you otherwise, they're full of shit. I promise you, you will struggle when you start making big money because you're not going to know how to behave. And you need to build a plan before you get there. This is what I'm going to do. I'm going to stick to this much risk only. I'm only going to trade this many times because you will get drunk. You won't be satisfied when you're making a killing. You're going to feel like, well, I felt so easy. Let me just go out there and do it again. No, it's not like a good price run where you can feel confident adding to the position. That's what happens when you get punch drunk, when you start making big, big payouts. When you get big profits and you're taking money out of your brokerage firm and you're seeing it go into your bank account, that's a wonderful feeling. It's an intoxicating feeling. And you're never going to be able to convey that message the same way you receive it with other people. Other traders are not going to see it like you. Many times, especially on social media, they're going to think that you didn't really do it. You're lying. You're fake. You didn't do it live in front of them on a live stream. You didn't sign in your brokerage firm and enter the order so they can copy you beforehand. And all this bullshit. People that are really doing it, if I can get your attention long enough to convince you not to feel obligated to prove everything, then you won't feel these to do more than necessary when you start making big money. $1 million a year, certainly possible. $500,000 a year, certainly possible. $250,000, easy. $100,000 a year, easy. $50,000 a year, cakewalk. But right now, you just got to be able to be consistent with one micro lot. That's how you got to worry about it right now. And the things that you're going to do with that one micro lot, the same thing you're going to do with one mini contract. And the same thing you're going to do when you build up to 10 minis. And the same thing you're going to do when you build up to 50 contracts and 100 contracts. Same thing. It's the same thing. Nothing changes. The outcome's not necessary. It's not gonna undo you. And all of this can be framed on a simple little 3 candlestick formation during a 30-minute window that can't hide from you. I honestly wish I could have every one of my millionaire students that have came forward and joined the ones that are never going to talk to you. They're never going to, they don't care. They don't want to hear the people say, you didn't really do that, you're lying. They don't want to hear it. They don't care. They're not worried about all that stuff. They're living their life. They're doing what they want to do. But I wish that I could have them all together, kind of like an Oprah Winfrey, TV special where we all are together and they can stand up for about a minute or two and say, this is what I was fearful of in the beginning. And this is what I wanted to do. And now doing this, and it was nowhere near what I thought it was going to be like. And it's nothing like I thought it was going to be. I feared things that I didn't have to worry about in the end. And the things I thought were going to be hard weren't that hard. That's the things I want, other students to hear. And when Kit does these types of things, that's what I'm listening for. I'm listening for the moments where people come forward and they say, these are the things I struggled with, and this is how I dealt with it, and this is what I've been able to do right now. That's victory. To me, I see those things as inspirational, and I'm already set. I don't need to do anything the rest of my life. But when I hear that, and I hear the emotion, I hear the healing that some of you went through, and the valleys that some of you guys are in. I know what that's like. And that's just like that movie Fight Club. Everybody came together some way, shape, or form with a fucking problem. They knew that the people that we come around, we get it. We may not be going through it. We maybe didn't go through that yet or suffered as much as they have. But we know that that person's working their ass off, and that's commendable. That person gives a shit about their family, and they're working for it. They're out here trying to carve out their own niche in this, and they're going to find their way, and they're not going to stop. They're not going to give up. And they get encouragement from all of you. And it's respectful. It's admirable. I wish I had coming up. I needed it, man. I fucking was a wreck. Crying all the time, beating shit up, throwing shit around, hurting fucking people. I had to take it out on whatever event I would do it. And if I was a drinker or a drug user, I probably would have done something. But these are very helpful things, and more people should be involved. But the problem is more people involved means a lot more get their feelings hurt because they didn't get a chance to talk. And I think Kit's learning how to better manage the audience and the participation. And it's certainly better than the first few times I listened to years ago. And it's a work in progress. And none of you should have your feelings hurt because you're all able to talk to me. And Pax gave his stuff. You could reach out to him too. Tweet to me. If you talk shit, I'm going to talk shit back. You ask me a question. If I don't answer it then, I'll bring it into some video I'm going to do next. Or it's probably already answered and someone's going to come forward and say, he mentioned this here. And if it didn't come from me, don't be offended. I don't respond to everything, not because I think I'm high, snooty and egotistical. It's just if I spoon feed someone, they're going to want it every single time. And all the answers are available to you if you do the work and study. And the ones that are good questions, I'll field them. I'll mention something to kind of like bring light to it. But you don't need to know everything right now. You don't need to do real quick, fill me in with everything right now. No, because that doesn't work. Because as soon as you think you learned something, 50 new questions pop up as soon as you try to look for it in the charts. And then what happens is your inexperience leads to what? Doubt about whether you're going to do it. Oh, this is harder than I thought. This is complicated. No, you're trying to find all the answers real fast. Same thing you did when you were a student in school. You didn't study for the test. You know you got to take the fucking test or you're going to fail. You don't want to fail. You don't want to go home to your parents with a bad grade on your interim report or your report card. So what do? You fuck up and rush and you try to cheat and look over here. What'd you get for question number 4? You chose C? Fuck, I had B. Well, you look like you've been reading and studying. I'll just go with your answer. What the fuck's that? What is that? But that's what you're trying to do. You're trying to jump ahead without putting any work in. And if you care enough to want to make a lot of money doing this, you want the finer things in life, then you're going to put the work in. And nobody gets here that didn't deserve it. And I'll say it again and I'll close. Nobody gets here, finds success, makes that didn't deserve it. Nobody falls into it by accident. They work their ass off. So you're not going to be the exception. No one owes you a fucking handout. Nobody owes you a free, whatever the hell those redemption codes are to get a funded account. Get a fucking job. Pay for them. Save up money, put it in a real account. You'll care more about it. You're not. If I bought everybody account because they asked for it, nobody asking me would be with it. Because you know damn well, if you believed that you were able to do it well enough, you would find the money because they ain't that much money. It's inexpensive. It's a fucking pizza night at Papa John's. That's what they cost now. But the people that are asking for it, they would find a way. They would sell something, find a way to get it. And then you would care about nurturing and managing that thing to get a payout. Because that's what all of the profitable students do. I haven't made one millionaire that has anything out of my pocket that I paid for them. I didn't give them money to trade, and I didn't pay for any other prop accounts. They did it all by themselves. And some of them failed beforehand. Not once, not twice. Some of them failed dozens of times, but they didn't stop. They didn't quit. They knew this is what they wanted to do. They didn't give a shit what anybody else said about it because they kept their nose down in the charts and didn't talk about what they were failing on right now. They kept it in Fight Club. They kept it private. Here, when you guys talk amongst each other, everybody here respects the next guy. You may not agree with what the hell they're talking about. It's fine. But you understand that they're here because they care and they're working for it. And I love that. I love this, man. I love seeing it. I love seeing the participation in it. And I love each one of you guys give to one another and the respect that you show one another. In this world right now, it's shitty. Everybody's talking shit about everybody. They want to take from somebody. Nobody's taking anything from anybody here except for encouragement. Nobody's shitting on anybody here. Nobody's talking down to anybody here. It's therapy. It's group therapy. It's group self-talk. It's a recalibration. And for me, I think it's fucking beautiful. Enjoy your weekend, guys.
Trader Roundup, it's Friday. Thank you, ICT. See you guys around.
You were the algo, code the algo. Just keep going.